एवरीवन गुड इवनिंग टू ऑल ऑफ यू। आज है गुड आफ्टरनून टू ऑल ऑफ यू। आज है 5th ऑफ फरवरी 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल देखोगे क्रूड ऑयल और नेचुरल गैस को। क्रूड ऑयल अपने एक एफईजी एरिया पर है। कल वहीं पर रुका था, आज भी फ्लैट ही ओपनिंग हुई थी तो उसी एफईजी पर रुका हुआ है। नीचे एक सपोर्ट मिल जाएगा आपको, ये पूरा सपोर्ट जोन है नीचे डाउन साइड पे, इसलिए ऊपर भी लेवल लगाया हुआ है। बाकी कल लोअर लो बनाया नहीं मार्केट ने, एक मोमेंटम के बाद तो फिलहाल उसी लेवल से आ रहा है। ऊपर देखोगे तो 6450 वाला जो मैं बता रहा था लेवल 470, वो अभी भी रेजिस्टेंस बना हुआ है। एक बार इस लेवल से यहाँ पर देखोगे ऑलरेडी यहाँ ना सेलिंग एक बार आ चुकी है। फिर कल थोड़ा सा हायर लो बनाया था मार्केट ने, तो कुछ ये इस तरह का फॉर्मेशन बना रहा है। थोड़ा सा अगर बेरिस होना है तो लोअर लो बनाना जरूरी, नहीं तो फिर ऊपर निकल सकता है प्राइस। बाकी नेचुरल गैस को देखोगे, मुंबई सेशन अभी ओपन है, लंदन सेशन ओपन हो जाएगा अभी 1:30 आधे घंटे बाद। न्यूयॉर्क सेशन 6:30 पे और यूएस मार्केट 8 पीएम पे। डेटा 6:45 पर है, 8:15, 8:30 और 9 पीएम क्रूड ऑयल की इन्वेंट्री। नेचुरल गैस कल रेजिस्टेंस पे था, याद होगा कल एक सेलिंग का ट्रेड बनाया था मार्केट, उसी रेजिस्टेंस एरिया पे ओपन हुआ था, वहां से भी थोड़ा सा सेलिंग आई है। ये कल का जो टारगेट था, ये एक रीटेस्ट जोन है जहाँ कल पहले ही मुड़ गया था मार्केट, कल कर चुका है रीटेस्ट, अभी फिर से रुक रहा है उस लेवल पे। मेरे अकॉर्डिंग अभी नीचे आता है तो बेटर रहेगा। फिर नीचे सपोर्ट है 268 के अप्रॉक्सीमेटली, वहां देखेंगे बाइंग का। ये फिलहाल रीटेस्ट जोन पर है, कल कर चुका है बाय द वे एक बार रीटेस्ट प्राइस, ध्यान रखना इन नेचुरल गैस। बाकी गोल्ड सिल्वर सुपर बुलिस है फिलहाल के लिए, बोथ आर सुपर बुलिस मोड इन। गोल्ड को भी देखोगे और सिल्वर को भी देखोगे, स्पेशली गोल्ड को ऑल टाइम हाई टच कर चुका है एमसीएक्स में भी और फॉरेक्स में भी।
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. Do a real job. Do something different. Just can't go back. If you go back, it's going to end up the same way it has for 100 years. I'm hopeful that this ceasefire could be the beginning of a larger and more enduring peace that will end the bloodshed and killing once and for all. With the same goal in mind, my administration has been moving quickly to restore trust in the alliance and rebuild American strength throughout the region. And we've really done that. We're a respected nation again. A lot's happened in the last couple of weeks. We are actually a very respected nation again.
Wanted with Bloomberg News Now. I'm Stephen Carroll.
And I'm Caroline Hepker.
Donald Trump says the United States should take control of the devastated Gaza Strip, sparking rebukes and ridicule from allies and adversaries. Speaking during a White House news conference alongside Israeli Prime Minister Benjamin Netanyahu, Trump suggests deploying US troops to secure the area and assuming responsibility for reconstruction.
We have an opportunity to do something that could be phenomenal. And I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad. This could be so magnificent.
While not directly endorsing Trump's proposal, Netanyahu didn't offer any opposition during the press conference. Last week, Trump suggested he'd like to see the Gaza Strip cleared out as part of a post-war operation. Much of the territory is in ruins after Israel's 15-month war with Hamas, following the group's October 7th attack on the country.
President Trump's intervention comes as Israel and Hamas continue to exchange prisoners and hostages as part of a 6-week ceasefire. Reacting to the US president's Gaza proposal, the former NATO Supreme Allied Commander in Europe, Wesley Clark, warned that it would be exceptionally challenging to deliver.
There are huge problems at the bottom, not to mention strategic consent at the top. So, look, he's the president of the United States. Better listen to him. But I've done these things. I can tell you how difficult this is. This is unimaginably difficult.
Wesley Clark spoke as Saudi Arabia reiterated its support for a Palestinian state with East Jerusalem as its capital and rejected, quote, any infringement on the legitimate rights of the Palestinian people. US Senator Chris Van Hollen, a Democrat on the Foreign Relations Committee, was more blunt, calling Trump's proposal, quote, ethnic cleansing by another name.
The US Postal Service has temporarily suspended the acceptance of inbound international parcels from China and Hong Kong. According to its website, the flow of letters from China and Hong Kong will not be impacted. The move comes after President Trump imposed a 10% tariff increase on Chinese goods. The suspension of inbound parcels from Hong Kong and mainland China by US Postal Service has led to a drop in Chinese e-commerce stocks.
A former Google software engineer is facing new US charges related to stealing technology to boost China's AI industry. Chinese national Lin Wei-ding, who was first indicted in March, now faces 7 counts of economic espionage, along with counts of theft of trade secrets. US prosecutors allege that he stole chip technology used by Google to train its AI models, such as Gemini. Lin Wei-ding pleaded not guilty to the original charges in March.
Swedish police say at least 11 people have been killed in what has been described as the country's worst mass shooting. The incident happened at an adult education centre in a city 200 kilometres west of Stockholm yesterday. Prime Minister Ulf Kristersson has responded to the attack.
Darkness is being cast over Sweden tonight. It is with bottomless sadness that we have received the news from the police that about 10 people have been killed and several have been injured in a school shooting in Örebro.
Swedish Prime Minister Ulf Kristersson speaking there through a translator. Authorities say they do not know the perpetrator's motive, but do not believe it is terrorism.
Now, let's talk about some earnings reports out this morning. The Spanish lender Santander is committing to spending 10 billion euros in buybacks over the course of 2025 and 2026. The lender reported net income for the fourth quarter that beat the average analyst estimate. The bank says that it is targeting about 62 billion euros in revenue for this year.
Alphabet's earnings missed expectations during the last 3 months of 2024 after sales from its cloud business slowed. The Google parent reported revenue of $81.6 billion over the period, which was lower than the analysts' forecast. The firm also announced higher than expected capital expenditure. CEO Sundar Pichai says their AI offerings can rival industry competition.
There's been a lot of observations on DeepSeek. First of all, I think tremendous team. I think they've done very, very good work. I would say both are 2.0 flash models or 2.0 flash thinking models. They are some of the most efficient models out there, including comparing to DeepSeek's.
Alphabet CEO Sundar Pichai speaking there. The company's shares fell by more than 9% in after-hours trading and have gained 9% so far this year.
Now, France's Prime Minister is expected to survive 2 no-confidence votes today, allowing him to implement a delayed 2025 budget. François Bayrou used a special constitutional provision to push the bill through Parliament without a vote, triggering ballots that could force his resignation. But motions are likely doomed to fail due to the Socialists' decision to abstain from the vote. Bayrou remains vulnerable, though, to future no-confidence votes as he lacks an overall majority, with the Socialists already planning to file another vote after the budget is adopted.
And the Nikkei in Japan is reporting that Nissan is leading towards abandoning plans to combine with Honda. The pair had been negotiating the terms of a deal in which Honda would offer Nissan a lifeline by absorbing its struggling rival and bringing the two brands together under a single holding company. But media reports said that friction has emerged between the two this week. A termination of talks would bring what could have been a historic deal for Japan's auto industry to a swift end. Nissan's shares suspended from trading in Tokyo after slumping by almost 5%. Honda shares up about 9.4% on that reporting from the Nikkei.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
Donald Trump has already changed the way we think about the US economy. Now he's back in the White House, and Bloomberg's Trumponomics podcast.
क्रूड ऑयल की एक कैंडल एक बार क्लोज होती है ना, तो एक ट्रेड यहाँ पर प्लान करेंगे। देखो यहाँ पर ना फिलहाल के लिए एफई जरूर है, बट वो लोअर लो बना नहीं रहा है। लोअर लो हायर लो कंटिन्यूसली क्रिएट किया हुआ है, तो ये एक रेंज बना दिया मार्केट ने फिलहाल के लिए। तो मेरे अकॉर्डिंग अगर ये ऊपर निकल जाए या फिर नीचे किसी एक साइड के अगर एसएल चले जाएं यहाँ पर इस एफईजी के, या फिर जो नीचे स्विंग बना हुआ है, तो एक मोमेंटम अच्छा कर सकता है। दोनों साइड ऊपर ये रेजिस्टेंस बना रखा है, नीचे यहाँ पर ये स्विंग सपोर्ट है, तो ये एक रेंज बनी हुई है। तो या तो ये नीचे, इसके नीचे आ जाए क्लोजिंग बेसिस पे कहीं 6320 के नीचे, या फिर ऊपर अगर निकलता है तो 6400 के ऊपर कहीं क्लोज कर दे। इन दोनों ही केसेस में यहाँ पर एक अच्छा मूव हो सकता है प्राइस के लिए। राइट नाउ ये ट्रैप्ड एफईजी और नीचे स्विंग के नीचे आज वाला, क्योंकि नीचे भी एक एफईजी बना हुआ है यहाँ पर, ध्यान से देखोगे तो फंस गया है इसी रेंज में फिलहाल के लिए। किसी एक साइड के एसएल जाने जरूरी है, तभी कुछ बड़ा मूव हो सकता है। बस फॉरेक्स का चार्ट देख लेते हैं, उसमें थोड़ी क्लैरिटी आ जाएगी। फॉरेक्स चार्ट में देखोगे जो कैंडल बनी है 1230 वाली, एमसीएक्स में तो नहीं दिख रहा है उतना क्लियर। एमसीएक्स में देखोगे तो इसका ओपन 6343 है और हाई 6344 है, 1 पॉइंट का डिफरेंस है सिर्फ। फॉरेक्स में एग्जैक्टली ये ओपन इक्वल टू हाई बनाई है, ये कैंडल और इसकी प्रीवियस कैंडल दोनों ही ओपन इक्वल टू हाई हैं सपोर्ट पे, इस एफ नीचे वाले एफईजी पे। एंड ओपन इक्वल टू हाई कैंडल बनाई तब जाती है जब वो सपोर्ट या फिर रेजिस्टेंस को कहीं ब्रेक डाउन करना हो। नीचे भी एक एफयूजी बना हुआ है बिल्कुल। ऊपर रेजिस्टेंस, नीचे सपोर्ट, क्रूड रेंज। फॉरेक्स के चार्ट में या एफएक्स ओपन का चार्ट देखोगे, वहाँ थोड़ी ज़्यादा क्लैरिटी है। वहाँ पर मार्केट बिल्कुल साइडवेज चल रहा है अभी फिलहाल के लिए, एक चैनल के अंदर। थोड़ा सा डिप मार दे या फिर ऊपर चला जाए, दोनों ही केसेस में अच्छी बाइंग या सेलिंग एक्सपेक्टेड है। नीचे सपोर्ट रेजिस्टेंस दोनों ही अच्छे लग रहे हैं, अगर ये एफयूजी को रिमूव कर दें तो। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम।
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Front-end rates of late, they've been sending us a crucial message. What is that message? They're saying essentially, look, the Fed may not be able to cut rates as set out in its dot plot. If you look at the two-year rate, it is barely 10 basis points lower than the Fed's effective rate of 4.33. So that is highly unusual in a policy this deep, this late into a policy loosening cycle, because if traders truly believe that the Fed will be able to cut, the two-year rate will be a lot lower and the spread more deeply negative, since the markets are nothing if not a discounting mechanism of what is to come. When the spread approached zero or turned positive in previous loosening cycles, the Fed had to terminate its rate cuts within about 6 to 8 months. So the markets are essentially saying that, look, with core PCE still closer to 3% than 2%, and given the outlook for stickier inflation, especially in light of tariffs, traders are doubting whether the Fed will be able to shoehorn those rate cuts as intended, which is why I think it's not a good idea for the markets, the overnight index swap section of the markets, to be pricing in oodles of rate cuts from here.
And Ben, if I could take you to the impact of European politics on markets today, how big a risk is this confidence vote in Prime Minister Bayrou for French bonds when you see notes rallying into it?
Not a very big risk, Lizzie. There are signs that Bayrou's government may survive the no-confidence vote. If he does survive, French bonds will rally by only about another 5 to 6 basis points, since much of the optimism is already priced into the markets. If the government falls, then we will go back to the 80 basis point spread over Germany that prevailed through much of last year. Remember that Moody's already downgraded France in December, and they have factored in a materially weaker public finances over the next 3 years. So it's not the end of the road for bondholders, even if the government falls today. We have been in a political kind of limbo for the past 6 months, and that is very much factored into the equation of bond investors.
Vane, can I just take you back to the issue of tariffs and inflation and where we judge the market to be correct on its inflation outlook? Should I be looking at the bond market? Should I be looking at the shape of the curve to tell me what the bond market thinks is happening in terms of the tariffs and therefore by extension the impact on inflation? Or do break-evens give me a better steer? Where should I be looking? Where are you looking for the best read on how the market is perceiving that tariff/inflation risk?
I would look much more at the flattening of the curve, because the two-year yield is going to discount the Fed pricing out the rates. So I think that the two-year yield is going to go higher, and therefore we are going to get a flattening of the yield curve.
Fen, great to catch up. Thank you very much indeed. Bloomberg MLive cross-asset strategist Fen Ram. Remember, you can catch up with the whole team. Keep up with the analysis. You really need to do that right now. MLive you go is where you should find it on your Bloomberg terminal. Update on what we're seeing out of China. I think there's this kind of very calibrated response happening, I think, in Beijing at the moment to the Trump tariff story.
Absolutely. Some top lines coming up on the fentanyl issue. They're saying the fentanyl issue is a U.S. domestic problem, saying that they are one of the toughest nations on drug enforcement, but most notably saying that the U.S. has made irresponsible moves on the Panama issue and calling on the United States to stop oppressing Chinese firms. They declined to comment, however, on the USPS package haul. We're going to dive into that throughout the rest of the show. Stick with us. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate
Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
In case you missed it, on Bloomberg Crypto.
I wonder how all of this shifting regulations and at least outlook for regulation changes the sort of investment opportunity set for a firm like Pantera.
On the investment side, I definitely think working with our portfolio companies, the current and the prospective ones, if we can have those conversations with them where we say, look, the U.S. regulatory framework is something you can feel comfortable in going forward, that does open up more folks more in the U.S. than outside of the U.S. The other side of the business for us in particular is the investment base, the investor base. The institutional investor who maybe wasn't super comfortable investing in the blockchain asset managers. I think you're going to see with regulatory clarity and further adoption, the ETFs were the first step in that direction. We're hoping that the registered investment advisor space starts to see more of that inflow of the endowments, of the pensions, of those investors who maybe their investment committee wasn't super comfortable with the asset class given the ambiguity and the lack of clarity in the space.
Don't miss Bloomberg Crypto live Tuesdays.
Wednesday morning, good morning. Couple of minutes to go until the opening trade. If the market is a weighing mechanism, there is a lot being put on each side of the scales right now. We're trying to figure out how it all fits together, what kind of a narrative it delivers. There's a lot going on. As a result of which, I think it's worth kind of paying attention to kind of where we are and the kind of momentum and direction of travel. Yesterday, we did see a rally at the get-go of trade. We've seen this, obviously, as maybe we get a more benign tariff environment being priced. European markets kind of went out here. The European markets basically, US markets basically went sideways from there. After hours, though, we got a bit of a tech shock. That needs to be priced in this morning as well. We've still got ongoing geopolitical tension. That needs to be priced in. Plus, we've got an awful lot of corporate earnings we need to fold into the story this morning, Lizzie.
Yeah, a lot for markets to digest this morning, Guy. The tariff story still weighing on sentiment in the Asia session and into the European session, it seems, as well. Euro Stoxx 50 futures down 0.5%. We're also in the red for FTSE 100 futures and CAC 40 futures. We look to see if there's going to be a read across from USPS into the delivery companies here in Europe, and maybe a reaction from Honda Nissan being taken off the table as well. But Pretty, which stocks are you watching?
I mean, we're going to go back to Guy's Sensational 6 or Core 6 if we can look at those. Novo Nordisk, of course, firmly in focus. I thought the CFO made some interesting comments here on the earnings call, saying that the Novo and competitors only cover 2% of the potential market in the States. So you are potentially going to see Novo indicated to the upside. Banking stocks as well, Credit Agricole and Santander, both coming in with some pretty strong results. And, of course, Renault, off the back of reports that Honda and Nissan may not be merging after all. All that going to show up at the opening trade, Guy.
Say circa 30% stake that it has in Nissan, so that's going to be significant this morning. Right, here we go. Time for Wednesday's opening trade. We're expected to open a little bit lower, but single stocks are really going to matter this morning. Santander, Novo Nordisk, what's going to happen with Renault? There's an awful lot to price in and factor into these markets this morning at a kind of bottom-up level rather than a top-down macro story. So the FTSE 100... barely budging this morning. We're down by 0.1%. The Stoxx 600 barely budging, down by 0.1%. The IBEX is up a little bit more. Santander expected to open higher, 2 to 3%. Let's see if that turns out to be the case. So that's going to lift that market as well. Santander's up 4%, I'm being told. So that's probably explaining why we're seeing a little bit of outperformance coming through from the Spanish market. The CAC is down by 0.2%. We've got Agricole to fold into that story, plus plenty of French politics to fold into the narrative as well. We'll see how the DAX opens. We'll see how the SMI opens. We need to see what Novo Nordisk is doing as well this morning. What story do we take out of China as well? Plus also the auto sector. What's going to be happening with Renault? An awful lot to factor in, as I say, to these markets this this morning. Lizzie, what are you seeing when it comes to the sectors and the single stocks?
So we've got just over half of sectors in negative territory across Europe this morning. Tech at the bottom of the basket, down 0.8%. Autos and parts, as you mentioned, Guy, second bottom, down 0.6%. It's basic resources leading the gains, up nearly 0.5%. But if you look at some of those earnings stories, for example, Santander up 5.2%, Total up 0.5%, GSK 4.3% up, Crédit Agricole nearly 1% up, and Vestas up 2%. So green on the screen for a lot of those names reporting this morning, Critty.
Yeah, Nova, we are seeing an open auction extension at the moment. They're halted, they're not trading, so currently working through some heavy volume there. We'll see how that shows up. But broadly, when you look at the Stock 600, you mentioned some of the banking stocks. Healthcare is actually in the driver's seat when you look at the Stock 600 on the upside, for example. So you are seeing, as Liz, you mentioned, the Banco Santander story, but AstraZeneca, Novartis, GSK continues to move the healthcare story upwards, although it does feel like it's a story of weightings to the downside. So UBS really pulling down the Stock 600 and the Stock 50, I should say, down about 1% as well. Alongside, I'm seeing HSBC. I'm also seeing a lot of the tech names on the back foot, Guy. ASML, Schneider Electric, even LVMH not having a good day.
But it does feel as if it is a earnings narrative that is driving the broader narrative this morning. Santander's up nearly 7% this morning. We were talking to Anna Botín a little bit earlier on. That stock absolutely flying on what it is delivering and saying about what it's going to go, what it's going to look like going forward. GSK up by nearly 5%. That's a huge weighting on the London market. You are also seeing some of the other, as you say, healthcare names doing relatively well. In terms of where the points are being added this morning, it's Santander, it's GSK, it's Astra, it's Total out with numbers. You've got some of the Spanish banks doing really well. Even BBVA up by 1% this morning, adding quite significantly to the upside.
Yeah, perhaps adding from the, or I should say maybe returning, pairing some of the losses they made earlier in the week around the Mexico story as well, given that those stocks are so much more exposed. Let's bring in Henry Allen, macro strategist over at Deutsche Bank Research, to walk us through some of this. I mean, as Guy was saying, this is very much a sum of all parts trade that we're seeing this morning. But it's interesting, we're seeing almost a pullback in earnings, a little bit of a slowdown in earnings in the States. And then you look at the earnings here in Europe, and they're much, much stronger. How does that add up in your view?
Well, I still think the backdrop is fundamentally bullish. I mean, even though, clearly there's going to be a high bar for these tech earnings, the Mag 7, and we've seen a bit of disappointment, obviously, with Alphabet overnight. I think, these comparisons to the dot-com bubble we've seen, particularly since the DeepSeek fears last week, I think they're completely overdone. I mean, when we were thinking about the dot-com bubble, the Nasdaq was up 86% in a single year in 1999. We haven't seen anything like that sort of growth today. When the dot-com bubble started to burst, we were seeing a start of an economic slowdown in 2000. Again, the macro picture is actually much more positive today. Only this week, the ISM manufacturing hitting its highest level since late 2022. So in spite of that tariff story, actually, I think there's a lot of macro optimism in the picture. So, fundamentally, we're still bullish net overall.
You said despite the tariff story, isn't that the elephant in the room? Isn't that the kind of the make or break for stocks, especially here in Europe?
So it is, but then as we've seen with Canada and Mexico, there's this kind of will they, won't they? And then markets kind of pull back and then they're suddenly relieved again. So we're all kind of dealing with this chronic uncertainty as to whether they're actually going to be in place. And I think, yes, markets are trading off that, but then to some extent they've been trading off that since the election and Trump's victory back in November, because you had this wave of euphoria that, we're going to get tax cuts, we're going to deregulation. There was a lot of kind of happiness about that. But then in the backdrop, there was, well, what's going to do about tariffs? And then kind of we get this February 1st deadline. We've got these April 1st deadlines. There's, been the delays, and then we don't know what's going to happen next. So, I think this kind of uncertainty is already priced in.
But, Henry, is it not inevitable that Trump's going to have to follow through on more tariffs than just on China when he needs that revenue to offset some of his tax cut promises?
So I think he could, but equally I think what Trump has also shown from his first term is he's incredibly relaxed about deficits, that for all this rhetoric that we want to get debt down, by the end of Trump's first term, the US was running some of its, even before COVID, its largest peacetime non-recessionary deficits ever, and the national debt kept going up and up. And even, on baseline forecasts in this term, the US national debt is probably going to exceed its post-World War II record. So I think Trump is pretty relaxed about that. And as long as they can get the scorecard to look OK over a 10-year horizon, I don't think they mind too much.
OK, it's interesting that's how you're kind of modelling it. Does the volatility, therefore, necessarily have to be high because there's so much policy uncertainty?
I think so, and I think that's already subtracting from growth, because after all, if you're any corporation or business or indeed an individual, you're like looking where to invest, and you're thinking, okay, might there be tariffs there? And even European businesses already affected despite the tariffs, because something we've been looking at is like a lot of German automakers already do business in Mexico and then take those cars into the United States. So even if there aren't tariffs on the EU, that's still affecting EU businesses because they've got operations in Mexico. So businesses are always going to be dealing with this chronic uncertainty. But at the end of the day, the whole discussion we have in markets is always, there's that cliche, businesses hate uncertainty, but uncertainty is, at the end of the day, a fact of life.
Should US businesses get used to a 10-year at 4.5%, and should US businesses get used to a dollar as strong as it is?
I think they should, because fundamentally, if you look at long-end rates, all the fundamental pressures, not just from tariffs immediately and short-term inflation, are pushing higher. If you look at the pressures on governments to spend to fund aging populations, that points to higher yields. If you look at defence spending.
Is that a problem for growth? Is that ultimately going to be something that slows this equity market down? Can the equity market continue to deliver the kinds of returns it's delivered over the last few years with the dollar where it is and yields where they are?
I don't think we're going to see the kind of 20% returns that we've seen over the last couple of years, partly because in 2022 markets were coming off recession fears. So you kind of saw, even though there wasn't a recession, you kind of had your classic recession bounce back because the recession was priced in. So I think you're going to see that slow, but I think 10 to 15% returns are still possible because you've got a very fundamental backdrop where the Fed is still cutting rates and probably still going to cut rates. That's the direction of travel they've made clear, into a soft landing. And if you've got that backdrop, that's historically been very, very favourable for US equities.
A lot of strategists this time last year were calling for equity markets to do very little. 2024 was going to be a tough year. Everybody got it wrong. How much bias do you think there is at the beginning of this year not to make the same mistake again?
I think 100% there's been an overcorrection. And if you look similarly in 2023, most strategists are calling for a fall because of what happened in 2022. And then the market rose quite significantly. So you've always got that bias in place. You see in forecasters in all facets of life, they'll overcorrect for the last mistake. You see in political forecasts, people overcorrect for
How much are we overcorrecting, do you think? You say 10 to 15%.
Yeah. I think that's certainly possible because at the end of the day, there is no sign of a recession. There's no sign of fears of a recession. I don't think the Fed are going to hike rates this year, particularly with the Trump pressure. And, yes, the bar is higher because no one fears the hard landing anymore. But fundamentally, the norm is, if we have growth at 2 to 3%, potentially with some upside risk, some AI productivity, I think that's still an absolutely plausible bar that can be cleared.
In terms of the performance we're going to see this year, Eurostoxx 50 has done 7.8%. In January, the S&P has done 2.6. Does the rest of the world... Why doesn't the rest of the world continue with that outperformance for the rest of the year?
I think partly because, US growth fundamentally is running stronger than the rest of the developed markets. We think of US growth kind of in 2.5%, 3% as rapid. Now, historically, that's not rapid because the US used to grow at kind of 4 or 5% if you go back decades. But compared to Europe and Japan would dream of those kind of numbers. So I think fundamentally there is always going to be that sense that the US is outperforming. And the US also very much now has a growth-oriented administration. Trump very much has said he wants to lead America to the new golden age. He's got deregulation, the tax cuts. They've kind of got an agenda to achieve that growth in a way that Europe, there's still a lot of outstanding question marks. Yes, they recognise the competitiveness issues, but are they actually able to deal with the policy implementation? Much more question marks there.
Does deregulation outweigh the tariff risk? Is that kind of the way the market is thinking about this?
I think to some extent, and I think they're also hopeful that the corporate tax cuts as well, if they come in, are also going to help equities in the US. But I think part of the reason markets are, I think, sanguine on the tariff risk is because in his first term, and I think what we've seen is different to that, but in the first term, they didn't actually have much of an economic impact. I mean, it's worth remembering that whenever a country imposes tariffs, as we've seen with the US, that causes your exchange rate to appreciate, so dollars become more stronger, that makes it cheaper to import, and that's actually offsetting some of the risk. Also, if your central bank is keeping rates higher because inflation's going to be higher, again, that's going to strengthen your exchange rate and, again, offset some of that tariff risk. So I don't see it causing a big change in the economic fundamentals. I don't see, the US trade deficit suddenly going back into balance.
Well, I asked the deregulation question in the context of the fact that we're talking about banking consolidation here in the States, or here in Europe, excuse me. And yet, it does feel like people are trading the banking consolidation story, but so much of the banking consolidation story is based on competing with the United States and the deregulatory agenda there and the capital rules requirements there as well. So is the way to trade deregulation in the States, in Europe, to really just trade the banking consolidation story in Europe?
I think that would be a good trade, and certainly if you see already the delays to the Basel III rules, you can see how the EU are reacting to the fact that the US is going to have a more deregulatory agenda, and as you can see right here in the UK actually as well, and in the EU, they don't want to find themselves outcompeted by the US. So I think almost you've got kind of this deregulation race where each side wants to stay competitive in the same way you saw in the past with corporate tax rates, that generally there was this push lower in corporate tax rates over recent decades because no country wanted to find themselves outcompeted. I think actually a story, particularly as memories fade of 2008, is going to be that actually deregulation is much more in vogue. People don't want as much red tape. There's a sense that this is being an obstacle to growth, and I think actually that, a bit like we saw with corporate tax rates in the past, could be a big reason for rallies in both the US and Europe.
Henry, if I could bring you back to the central bank story. On Friday, we're going to get this R-star report from the ECB, the neutral rates report. On balance, when you're listening to the Governing Council, are you interpreting them as suggesting that neutral is terminal in Europe?
I think so, yes. I think the big risk for them is obviously with the tariff story. And I think also because they've pre-committed effectively to saying that rates are still going to come down, it's going to be hard for them to backtrack off that, even though, as we found out earlier this week, inflation in Europe was a bit stickier than expected, both headline and core coming in a little bit above expectations. But I think because you've got those lingering fears of tariffs, we've already kind of knocked half a point off our European growth forecast as a result of that. I think it's going to be hard for them not to keep lowering rates, and as a result of that you're going to see, I think, more euro weakening because markets aren't pricing in the fact that the Fed are likely to remain on hold given the tariffs are going to be inflationary for the US, but for Europe, if they do impose tariffs, that's probably going to be deflationary there because of the growth hit.
Well, what's the Fed hiking risk?
I think it's low in the sense that, I'd say maybe 20-30%. It's not my baseline at all, partly because having cut by 100 bips, to hike in the near term would basically be to admit kind of an institutional error. It would be to admit that those cuts were probably wrong. And I think where you've also got political pressure from President Trump now, who's made it quite clear, he doesn't want rates to go up, I think that's also kind of effectively going to add to the
How long can the Fed stay on hold for?
I think basically unless inflation starts crossing the 3 mark. I think if inflation, kind of PCE inflation, starts going above the 3 mark, then that's going to up the pressure on them. So,
but if in the current scenario, it's basically just sit tight and wait and watch.
At least a year, yeah.
So how long does that phase last for? So let's say the data stays as it is at the moment. Are we basically on hold for the rest of this year?
I think so, yeah. Because, the Fed have said themselves their bias is still towards easing. That's where the dot plot goes. That's what, the Vice Chair said yesterday.
Do the markets need cuts to go up? Do the equity markets need cuts to go up?
No, because they're already pricing it in. And actually, I think, as we saw last year, if the reason they don't get cuts is because growth is outperforming, then you can see yields go up and equities go up.
As long as you don't get inflation with that, that's OK.
As long as inflation doesn't go above the 3. I think if inflation lingers above target, we'll be OK.
Nice to see you.
You too.
Henry Allen, macro strategist, joining us from Deutsche Bank Research. Let's take a look at the core 6. This is what it looks like this morning. This is the picture we have. And there's a number of names on here that really stand out. Novo is definitely one of them. Look at that. The pharma sector is having a very, very good day. LVMH and Ferrari, maybe a little less so. Ferrari out with numbers yesterday. We're going to get an all-electric Ferrari. Is my response to that. ASML is down by 1.33. Schneider, you got a reaction there to the data center story, and Nestle, a little bit of weakness there too. But there's plenty of other stocks we need to be focusing on, particularly the banks, plus a number of other names. Joe Easton's got all the details.
So the standout stock for me today, guys, is Banco Santander, rising almost 8% now in Madrid. Now, I'm speaking to traders in my chats at the moment, and they've been saying that it is a blowout report from Santander. One trader said the market was only expecting a €7 billion buyback. They've done 10 billion. They've also beaten on the capital ratio and the net interest income. That stock rising the most in 2 years and actually hitting the highest level since 2018 for Santander, really the standout. Then in terms of pharma, as you've mentioned there, Guy, Novo Nordisk, one of the big gainers, the obesity numbers actually reassuring. Bear in mind, that stock did come off around 40% since the July high last year, but the obesity drugs do look pretty strong, actually, towards the high end of some of their previous guidance in terms of the sales growth for that one. Then the other one was GlaxoSmithKline. Now, this seems to be mostly linked to their oncology. So vaccines looking a little bit weak on Glaxo, but the oncology numbers, the cancer drugs, actually really strong. So, again, another big mover for Glaxo. We don't normally see a stock as big as that in London, rising as much as 6%, but a decent move for that one. Then finally, a bit of red in terms of the other initial movers. So Renault coming down. Now, this is, of course, tied to the Nissan story overnight, potentially that deal with Honda collapsing. Remember, Renault is the owner of around a third of the Nissan. I had to get that right in terms of the relationship there. But that is the reason that its stock is down, because they are a big shareholder of Nissan. So weakness in Nissan overnight feeding through into Renault this morning. That stock getting hit in Paris. Then in terms of rating changes, I love a bit of a mea culpa, and we've got one from Morgan Stanley saying that they should have upgraded Richemont earlier in January. They missed the big rally in that stock when it jumped after the earnings. They're saying they're upgrading it today. They've kind of apologised for not upgrading it earlier, but they say the valuation still is justified in terms of being overweight, so they upgraded that one today. And then another one to bring in briefly was ST Micro. This one is downgraded at Bernstein, which says there's no bottom in sight for the Franco-Italian chip maker. After we saw the upgrading guidance from Infineon yesterday, they're waiting for ST Micro to do the same. They haven't done that, and that stock is declining as Bernstein cuts the stock this morning.
Joe Easton from our equities team walking us through some of those early movers. We thank you so much. Coming up on the program, we're going to look at some of those sectors very much in focus, including energy in Europe. Wind turbine maker Vestas boosting its energy outlook, while Equinor scales back its renewable energy ambitions. More on that and some of the other sectors in focus next. Stick with us. This is Bloomberg.
That's all being driven by the media content increasing and these becoming entertainment businesses and not local event businesses. And I don't really, I mean, I would expect that to continue when you see, if the rumors about the NBA are true and it's going to double over the next, 8, 9, 10 years. Obviously you can do the math. That's 10 to 15% growth rate TV. There's a little bit of leverage there. So you kind of you can pencil out. I mean, when we put together this group and the commanders, we had to make our case, and you kind of pencil out low to mid-teens, right? And it's not a private equity return, but I really like it as part of my own portfolio because it's correlated. It doesn't really go up and down with the economy. A lot of it's driven by, the growth in the streaming content and technology. It's a growth equity business almost. And then it goes, it's generally trending up. There's a scarcity value. Sports teams are obviously operating businesses and they generate cash flow. Some of them don't. A lot of them do. But then it's also kind of a piece of art, right? There's only 30 or 20, depending on the league, or 32 of these franchises. And, people want them, right? So at the end of the day, it's like, it's worth whatever someone will pay for it, right? So there's an element of a little bit of a Basquiat there or beachfront real estate. So you got to kind of think about all that, but all of it really says to me that it's going to go up.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
With some of these tariffs that is coming, we may see that will be some rerouting of ships. Some ships that were supposed to go to Europe went now to Asia, will now go to Europe, etc. So we will see a change in the market, but we are very robust in that respect.
So that was the Equinor CEO Anders Opedal speaking to us after their earnings earlier this morning. Let's get some analysis now. We're joined by Rachel Morrison, who leads Bloomberg's coverage of gas, power and renewables here in Europe. Good to have you with us. We were talking to the CEO, earnings higher than last year, beating estimates, and yet the shares are down 0.8%. What's so offensive to traders?
I guess a big part of it is them cutting back on their renewables spending and what their ambitions are there, which is kind of in line with what we've seen with other oil and gas majors, but comes at a time where there's quite a lot of headwinds in the US for green tech. And yeah, it's kind of part of that growth story. You know, where is growth going to come from if they're not going into green energy, if they're just focusing more on oil and gas?
I'm trying to figure out why Vestas is going down this morning, because it felt like a positive read. We're going to get the CEO on tomorrow morning. Is there anything that stands out that the market could be latching onto? The stock gapped higher this morning. I feel like I'm having a UBS moment I did yesterday, and is now starting to roll over. These numbers look fairly solid. Is it just that expectations were slightly different in terms of where we were coming into this? Is this actually they deliver good numbers, now's the time to sell, they've delivered good numbers, so sometimes it's better to travel than arrive?
Yeah, it's a good question. I mean, it was a positive statement. We saw share buybacks and dividend reinstated, which is obviously, you know, giving money back to investors. But it could be around not believing the growth story. Yeah. We need to check in and see how people are feeling about that. But, yeah, the US, they do say that onshore wind in the US will be a growth market. It was one of their biggest markets in 2024, and they continue to see growth there. So they're positive on the US. So it's definitely not a Trump overhang as things stand.
Actually, I look at the longer-term share price. It's been fairly static, actually, from November, December, January, and the stock is now down by 3.5%. So the market's clearly latching onto something. We'll figure that one out.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
Donald Trump says the US should take control of the devastated Gaza Strip, sparking rebukes and ridicule from allies and adversaries. Speaking during a White House news conference alongside Israeli Prime Minister Benjamin Netanyahu, Trump suggested deploying US troops to secure the area and assuming responsibility for reconstruction.
We have an opportunity to do something that could be phenomenal. And I don't want to be cute, I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad, this could be so magnificent.
While not directly endorsing Trump's proposal, Netanyahu didn't offer any opposition during the press conference. Last week, Trump suggested he'd like to see the Gaza Strip cleared out as part of a post-war operation. Much of the territory is in ruins after Israel's 15-month war with Hamas, following the group's October the 7th attack on the country.
President Trump's intervention comes as Israel and Hamas continue to exchange prisoners and hostages as part of a 6-week ceasefire. Reacting to the US president's Gaza proposal, the former NATO Supreme Allied Commander in Europe, Wesley Clark, warned that it would be exceptionally challenging to deliver.
There are huge problems at the bottom, not to mention strategic consent at the top. So, look, he's the president of the United States. Better listen to him. But I've done these things. I can tell you how difficult this is. This is unimaginably difficult.
Wesley Clark spoke as Saudi Arabia reiterated its support for a Palestinian state with East Jerusalem as its capital and rejected any infringement on the legitimate rights of the Palestinian people. US Senator Chris Van Hollen, a Democrat on the Foreign Relations Committee, was more blunt, calling President Trump's proposal, quote, ethnic cleansing by another name.
The US Postal Service has temporarily suspended the acceptance of inbound parcels from China and Hong Kong. According to its website, letters and flat packages from the region will not be impacted. The move comes after President Trump imposed 10% tariffs on Chinese goods. The suspension of inbound parcels from Hong Kong and the mainland by US Postal Services led to a drop in Chinese e-commerce stocks.
In results, the Spanish lender Santander is committing to spend 10 billion euros on buybacks in the next 2 years. So that's after the bank reported record profits of almost 3.3 billion euros for the fourth quarter. Santander says that it expects profitability to rise further this year as costs fall and revenue remains largely stable.
Danish drug maker Novo Nordisk says sales growth will probably slow as it continues to build supply for its blockbuster Ozempic and Wegovy treatments. It sees sales rising by up to 24% at constant exchange rates this year. Novo says it won't be announcing a share buyback as it continues to boost capital expenditure. The company has struggled to keep up with global demand for both Wegovy and Ozempic.
Alphabet earnings missed expectations during the last 3 months of 2024 after sales from its cloud business slowed. The Google parent reported revenue of $81.6 billion over the period, lower than the analyst forecast of $82.8 billion. The firm also announced higher than expected capital expenditures. CEO Sundar Pichai says that AI offerings can rival industry competition.
There's been a lot of observations on DeepSeek. First of all, I think tremendous team. I think they've done very, very good work. I would say both are 2.0 flash models or 2.0 flash thinking models. They are some of the most efficient models out there, including comparing to DeepSeek's.
Alphabet CEO Sundar Pichai speaking there as the company's shares fell sharply in after-hours trading.
France's Prime Minister is expected to survive 2 no-confidence votes today, allowing him to implement a delayed 2025 budget. François Bayrou used a special constitutional provision to push the bill through Parliament without a vote, triggering ballots that could force his resignation. But motions are likely doomed to fail due to the Socialists' decision to abstain from voting. Bayrou remains vulnerable to future no-confidence votes, as he lacks a majority, with the Socialists already planning to file another vote after the budget is adopted.
Those are a few of our top stories for you this morning. Looking at the markets right now, stock futures then for the US sinking, for the Nasdaq down 0.8%. US Stoxx 50 futures also down 0.4%. This as the mainland markets in China are down. CSI 300 dropping 0.6%. E-commerce stocks in Hong Kong hit particularly hard, but actually some of the software and AI related names have seen some big gains underneath that headline decline. The Japanese yen gains against the dollar. The Bloomberg Dollar Spot Index is down 0.1%. You've got gold rising to a record high. Haven demand.
Mr. Saniji, hello. Good morning. London session already open हो चुका है, ध्यान रखना.
And is the driver there, so it's up by 0.5% this morning. The euro trades at 1.0384 this morning, and 10-year US Treasury yields at 4.49, down 1.5 basis points. A couple of Fed speakers talking about how policymakers should move cautiously on interest rates. Those are the markets.
That's news when you want it with Bloomberg News Now. I'm Tom.
past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Well, Australian Treasurer Jim Chalmers says Australia is prepared for a global tariff war but is not immune from escalating trade tensions. Canberra, of course, has deep political ties with Washington, and its direct exports to the US only accounted for 3% of total shipments in 2023. The US has a large trade surplus with Australia, while China remains Australia's biggest trading partner. And Sherry, this is sort of the question as to some of the collateral damage that we could see, right? Not just between the US and some of the countries that it's threatening tariffs and trade action on, but what it means for some of these other trade-reliant nations, the likes of Australia, New Zealand, even Singapore within Asia as well. Let's get some views now from Prudence Gordon, who's the Executive Director at the Australian Centre for International Trade and Investment. Prudence, really great to have you with us. And we sort of pondered this question because we know the downside of what could go wrong if the sort of diplomacy side of things isn't handled correctly. We saw that, you know, in years prior, around the time of the pandemic, and how that sort of came to impact Australia through its alliance with the US, but it's also its trade relationship with China. What do you see as the risks this time around?
Oh, thanks for having me on the show. Look, there are so many risks from this move by President Trump imposing those 25% tariffs on Canada and Mexico and the 10% tariff on China. It really has created, I think, chaos and a far greater level of uncertainty in markets than we've seen, which is surprising considering the amount of uncertainty that's been in markets for such a long time. But in terms of the key, I guess, dangers with this move, it's really undermined faith in the rules that underpin the system. So now businesses who trade, specifically at the moment, businesses in the US who are trading with Canada and Mexico have no certainty about how they should be dealing with the imports that are coming from those countries. It's just multifaceted problems for these companies, but also companies in Australia and around the world who now lack certainty as to how the US is going to treat imports going forward, and then the knock-on effects of those measures that the US has taken.
There's a lot of direct and indirect impact on economies like Australia, as you say. Broadly, we know that in times of more global trade, economies like Australia and New Zealand benefit, and when that pulls back, you see that sort of detriment as well. Is there a way that Australia can sort of position itself to take advantage, perhaps, of the trade uncertainty with the US by sort of leveraging the fact that, you know, we can put forward Australia as a very stable investment environment?
That's obviously an approach that the Australian government took during the last Trump administration, highlighting that Australia obviously has a trade deficit with the US, that we are a reliable ally, that we are a great place to invest. But at the same time, I'm not sure that they're going to be really persuasive arguments this time. President Bush has come in with a much clearer vision for how he wants to use tariffs to progress other policy initiatives. And I think Australia really needs to be preparing for that 20% universal tariff that President Trump has talked about. Because he said, when he says something, he's doing it. You know, however harmful that might be to US consumers and to the global economy, he's progressing those commitments that he made during the campaign.
Prudence, how difficult of a situation is this for Australia, given that we have seen a lot of other third countries that have had poor relations with the United States, for example, getting these tariff threats lean more towards China. But when it comes to Australia, Australia has had its own issues with Beijing and tariffs.
Absolutely. I think I would be surprised if these moves by the US administration push Australia closer towards Beijing. I think what you will see is what Australia with Japan did under the Comprehensive and Progressive Trans-Pacific Partnership Agreement, and that was where the US had pulled out of the Trans-Pacific Partnership, but Australia and other like-minded countries who see the value in trade rules and open markets came together to continue what they'd started with the TPP. And I think you will see more of that, not necessarily moving towards Beijing, but definitely looking to the European Union, for example, to Japan, to South Korea, to ASEAN countries, to really work together over the next 4 years to try and limit as much as possible the damage done by these really erratic implementation of these huge tariffs.
You mentioned the TPP, and of course that has evolved into a whole different framework already. Are these multilateral settings now a thing of the past, especially with the Trump administration?
I think with the Trump administration, yes, absolutely. And it started under President Obama with the US withholding consensus on the appointment of appellate body members, which really disrupted the World Trade Organization dispute settlement system. But obviously, under the Biden administration, the US really only progressed the Indo-Pacific framework agreement rather than any, I guess, usual kinds of trade agreements that we would see the US engaging in prior to President Trump's first administration. So I think for the US, it would be really surprising if they were to re-engage on the free trade agreement kind of negotiation. Obviously, President Trump in his first term renegotiated the US's agreements with South Korea and with Canada and Mexico, but even those renegotiated agreements weren't enough to stop President Trump imposing these new tariffs on Canada and in a month's time Mexico. That said, he did negotiate an agreement with China, which identified specific market access requirements that China was meant to comply with. And under the new trade policy, America First trade policy that the President Trump's second administration's just put out, they want to review China's compliance with that agreement. So whether he wants to progress those kinds of agreements, I think that's something that we're likely to see rather than your traditional multilateral or bilateral or regional free trade agreement.
Prudence Gordon, Executive Director at the Australian Centre for International Trade and Investment. We appreciate your time. And we do have more on Australia Ahead. That's every Tuesday at 11:40am if you're watching in Sydney, 8:40am if you're joining us from Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify or Bloomberg.com.
Over the past decade, we've seen a fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
The U.S. will take over the Gaza Strip.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
A tinge of optimism returns to the street. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. It's like what yesterday never happened?
Yeah, pretty much, but wait till tomorrow.
Wait till tomorrow. No, it's a fair point. Now, to that point, you take a look.
Doesn't look to me like Wall Street has priced in these tariffs going into effect on a sustained basis.
I feel like the risks are much higher than people appreciate.
The biggest theme is risk off.
You think we're at the beginning of a multi-year move out of the U.S. into non-U.S.
There's so many unknowns. Our approach is, you know what, we expect nothing, but we plan for everything.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, feeling like it's already Friday. Equity futures on the S&P 500, negative. We're down across the board, just slightly. We're off by 0.2% on the S&P. On a Russell, the small caps, we're down by 0.1%. What is the price to pay for all of this uncertainty? Diageo in the UK removing its sales growth target. The why? Tariffs. GM put out guidance only last week. An outlook that very few believed in. The Bank of Canada. This is hurting central banks too. basically provide no guidance whatsoever. And then Fed officials, they struggle to even discuss the tariff story. There's a sense that for some of these officials, these policymakers, there's a sense of paralysis.
Because they don't understand exactly what the ramifications will be and exactly what the policies will be. There might be a tone of, we're telling you exactly what they are, and yet the whipsaw action that we saw yesterday of the threat of them going into effect, those tariffs at 12:01 a.m., and then being removed, kicked down the road until March 4th with both Canada and Mexico because of certain provisions that already were going into effect. It just leaves people with a lack of understanding of what the benchmark is for success and how exactly we get there.
So the last couple of weeks, and it's been a busy few weeks, so threats on Colombia, they back off, they provide concessions. Threats on Panama, they back off, they provide concessions. Threats on Canada and Mexico, they back off, they provide concessions. Is it different when it comes to China and Europe? That's got to be part of the conversation that we have this morning. Academy's Peter Chibb put this out in the last 24 hours. We're only just beginning with China and Europe. Maybe Colombia and Mexico set the precedent. Inflict pain, get a deal, move on. He says, I'm increasingly dubious on that front.
It matters exactly how this president is going about trying to inflict tariffs and why Mexico and Canada were first. It was because fentanyl and border security was an easier way to try to go for emergency powers and go after these concessions. It also was to get some quick wins before the harder, more entrenched battles begin. The reason why people are having a hard time coming out with outlooks is how do you even game this out when people still don't understand whether this is over, whether March 4th is going to be yet another kind of paralysis moment where they're kicking down the road to another month. People don't have an understanding of what the framework is that Trump is even negotiating with.
So how much data and earnings and Fed speak will change anything for you? How much can they actually provide about the outlook? Today we get jolts. Get that at 10 a.m. Eastern time. We'll get some factory goods orders as well, so look out for that. You'll get some Fed speak too. You'll hear from the Vice Chair, Philip Jefferson, later on today, so look out for that as well. And then after the market, you'll get Alphabet earnings. Does any of this make a difference, given the bigger challenge that we face at the moment?
It's a good question. Fed speak, I don't think, makes a difference right now. Unless they're willing to raise rates in response to the tariffs, they're paralyzed as well. And a lot of people say that's fine, including the president. So you can put the political discussion on the back burner. Alphabet's earnings, I think, are going to be very interesting. They are coming under attack of China, although it's a little bit of a false pretense because they haven't been operational in China since 2010, but they're being investigated. When you listen to some of these earnings, how are they trying to immunize themselves from trade wars, moving production back here or not? Are they pulling back on some of their investments? Is this leading to a lack of business confidence? These are some of the questions I want to hear. And with jolts, the economy still matters. It matters whether the economy is sinking or whether it is growing, and that sets the backdrop for just how much this president can do.
If you're just joining us, welcome to the programme. Equity futures down slightly, just building on yesterday's losses. Only recovered so much in yesterday's session. Equity futures down by 0.1%. Coming up this hour, we'll catch up with Steve Cheverone of Federated as China hits back, kinda. Dan Ives of Wedbush saying automakers can weather the storm. And Francis Donald of RBC on the economic impacts of a trade war. We begin this hour with stocks steady following China's restrained response to US tariffs. Joining us from Washington, D.C. is Bloomberg's Anne-Marie. AMH, what a 24 hours to kick off this week.
Absolutely, a 24 hours. So when it comes to Canada, Mexico, that trade war is now really just trade tensions. You're seeing Donald Trump put on pause for 30 days. Those tariffs, he only just talked about over the weekend, and they were planned to go into place just after midnight. Well, they were clawed back after those phone calls with both those countries' leaders. You see both those countries saying they are going to do more to protect the borders and stem the flow of fentanyl. We should know some of that was already announced, especially when it came to Canada and having a more robust approach on the border in December. But clearly there was a conversation there that they are going to look more into this, and that was enough to appease the president to claw back these tariffs and wait 30 days. So now there's a new deadline in early March. When it comes to China, there's a little bit of a different story. We are seeing the start of a trade war. Yes, China's response was very calibrated, but it was going after specifics that I'm sure will get the president's attentions. Things like energy. He wants to be an energy mass producer and exporter. Also, I would note export controls on critical minerals that are used in the defense space, that are used in the manufacturing space when it comes to clean energy materials, things like tungsten. They were calibrated, but certainly to get his attention. Now, China did say those will not go into effect until February 10th. That's next week. And we did hear from the president yesterday, and he said he was planning to talk to China in the next 24 hours. And his press secretary says, yes, he plans to speak to Xi Jinping. So that's the next phone call to watch.
Anne-Marie, the question yesterday, how long would all of this last? For Mexico and Canada, not very long. The question this morning, who's next? And is it Europe? And what do they need to confront in the weeks and months ahead?
Well, with Europe, it's going to be incredibly challenging, especially seeing what the United States is doing when it comes to this tit for tat so far we've seen in the past 24 hours with China. Just look at something like crude oil or LNG. If China's putting a tariff on that, potentially some of those cargoes will not go to China, but Europe can take them. But then China might have to dump some of those more materials of things that they're facing tariffs on Europe. So Europe really is going to be potentially the dumping ground in the middle of this trade war. And they're going to get caught in the crosshairs. And yet, Donald Trump is still saying Europe will be next. We don't have a timeline yet, but it is certainly on the horizon. He complained yet again, a long list of grievances when it comes to Europe, especially when it comes to things like auto manufacturing. It really bothers the president. Angela Merkel talked about this in her biography, that, you know, you look around Germany, there's a lot of Mercedes, a lot of BMWs. Same in New York City, not a lot of Fords.
Anne-Marie, appreciate it. AMH down in Washington, D.C. Can we say
एफईजी ब्रेक हुआ क्या नेचुरल गैस में? ब्रेक तो हुआ है, बिल्कुल हुआ है. लास्ट कैंडल लेवल के ऊपर तो क्लोज हो गई है एफईजी के ऊपर. देखते हैं यहाँ तक का एक टारगेट रखा हुआ है 285.5. वहाँ तक जाता है या फिर नहीं जाता, या फिर ये एफईजी से ही लौट जाता है. कल ये रीटेस्ट वैसे कर चुका है एक बार, दोबारा आया है. अगर यहाँ तक भी चला जाए, अगर हायर हाई नहीं बनाता है तो फिर सेलिंग अच्छी आ जाएगी. यहीं से गिरा तो फिर होल्ड नहीं कर पाएगा. कल ऑलरेडी एक बार रीटेस्ट कर चुका है. देखते हैं फाइनल टारगेट मिलता है नहीं मिलता है. क्रूड भी देखोगे तो साइडवेज चला गया है. दोनों जगह एफईजी ऊपर भी नीचे भी. इसको आप रेजिस्टेंस मान लो, इसको सपोर्ट मान लो. किसी एक साइड के एसएल जाने जरूरी है तभी रेंज ब्रेक होगी, नहीं तो ये फ्लैग कहो इसको या फिर रेंज कहो, रेंज बना के बैठा हुआ है. फॉरेक्स में देखोगे तो ऊपर ये रेजिस्टेंस नहीं दिखेगा आपको, सीधा ये रेजिस्टेंस है. बट एमसीएक्स में दोनों ही बने हुए हैं, यहाँ पर सपोर्ट और ये रेजिस्टेंस. बहुत ही स्मॉल सी रेंज है. ऊपर रेजिस्टेंस थोड़ा सा बड़ा है, बट यहाँ पर अगर ध्यान से देखोगे तो एक चीज़ हुई है कि लास्ट टाइम सेलिंग आई थी, लो बनाया था, फिर सेलिंग आई थी, हायर लो बनाया है. तो यहाँ पर कुछ इस तरह का पैटर्न बन रहा है. किसी एक साइड जाए तो देखते हैं. नीचे भी सपोर्ट ये देखना है, यहाँ से यहाँ तक कि पूरा ही सपोर्ट जोन है, पर्पल कलर की लाइन से लेकर ब्लू कलर की लाइन तक. ट्रेल कर लो नेचुरल गैस को, बाइंग में हो अगर ट्रेल किया सकता है नेचुरल गैस. अब वैसे देखो लॉजिकली तो यहाँ तक जाना चाहिए, यहाँ से रिजेक्शन ले तो बेटर है, यहाँ से सेल करेंगे. बायर्स का फिलहाल इतना ही टारगेट है तो ट्रेल कर सकते हैं. 8 पॉइंट का टारगेट थोड़ा सा बड़ा लग रहा है. क्रूड में मैं अभी कहूँगा अवॉइड ही करो, नहीं तो फिर किस्मत ही है, किसी एक साइड के एसएल जरूर जाएंगे, या तो बायर के या सेलर के, तभी शायद थोड़ा एक प्रॉपर मूव आएगा. क्योंकि ऊपर सपोर्ट नीचे रेजिस्टेंस, एग्जैक्टली नहीं कह सकते किस साइड के एसएल पहले जाएंगे. लंदन सेशन ओपन है, वॉल्यूम आना चाहिए थोड़ा बहुत.
if he pushes and uses tariffs to push Europe to spend a little bit more on defense, maybe kind of end the conflict in Ukraine, maybe be a little bit fairer on certain trade elements if you secure the border and or have less fentanyl coming into the country. I think on the other side of that, especially with deregulation and lower taxes, you're going to create a more favorable investment environment. And so I think we just need to get through, we talked, a couple of weeks ago about this sausage making process. There's going to be negotiations on policy. There's going to be negotiations on rejiggering these trade relationships. But I do think on the other side of it, you're going to get an environment that is attractive for investment. And as an investor in public markets, you need to look for those opportunities where you get prices that become discounted as you're going through that adjustment process.
So, Steve, let's end there. What do you like right now, with all of that in mind, all the dislocations we have seen? And to your point, we have been through a lot, but we haven't done a lot. The S&P 500 is still around 6K. Have those dislocations, those opportunities opened up, or do you still wait?
I think you still wait. It's a 3% pullback at this point. And so, we would look for maybe a little bit more weakness in the markets, but I think we would likely be buyers of that. What we have seen from a stock market perspective each of the last 2 Mondays is a quality trade, right? And it's again, like it has been in the last couple of instances, it's a barbell trade. It's good quality growth companies that are generating their own earnings growth, their own story. You saw Palantir last night and the reaction that it's had. But it's also some of the traditional defensives. Look at the tape the last couple of Mondays, things like consumer staples, things like healthcare, things that are less impacted by some of the trade noise, but are good quality, stable earners. And let's not forget that behind all this, earnings are growing 11% on a year-over-year basis. It's really one of the best quarters we've had in the last 3 years, and guidance has been pretty good. So I think it's a stock-by-stock game, but it's the traditional defensives, and it's also some of these growthier defensives.
Hey, Steve, appreciate it. It's good to see you. We'll see you on Monday 10th. OK, Steve Chevron of Federated on the latest. Quite a few Mondays that we've seen. Credit to Bank of America at Goldman Sachs for the two economist teams out there who basically said this would be short-lived. And I think call ahead so far have prevailed. We talked about this yesterday. If you really thought we were going to get 25% tariffs on Mexico and Canada, the S&P's not down 2%. GM's not down 13% in 5 days. It's down more like 30, isn't it?
It seems as though the people with the hotter heads are in the currency market and they are trading quick. And the people in particularly the stock market are looking at the fundamentals and saying it's not going to move the needle that much. You mentioned Diageo, though, and it was a right call to mention that. Withdrawing guidance, how many more of those do you hear? Does that begin to actually show a toll if we don't get some more certainty in the next few weeks and months?
How can they offer any outlook on sales into the US when half of those sales are coming from some of the countries that we were talking about, Mexico and Canada, facing the prospect of 25% tariffs? To your point on FX, the range that we saw in foreign exchange just yesterday, dollar mex, 3% to the upside and down 2% plus to the downside. 5 percentage point plus swings on dollar mex is kind of unreal.
Same kind of moves in the Canadian loonie as well. And just want to point this out. The swings in sentiment are also going further than the currency market. Did you see Canadians booed the United States at the hockey game?
I know.
I mean, there's a definite visceral reaction. Does that go away, or do these kind of entrenched hurt feelings really, become pervasive between our neighbor and us?
I hope that goes away. Let's get you an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Hacker. So, Yahara.
Hi, John. China is retaliating against President Donald Trump's tariffs. Beijing imposed a 15% tariff on less than $5 billion of U.S. energy imports and a 10% fee on American oil and agricultural equipment. The Chinese tariffs are set to kick in February 10th, possibly leaving room for negotiation. Meanwhile, President Trump signed an executive order to create a sovereign wealth fund for the U.S. The president says Treasury Secretary Scott Bessent and Howard Lutnick, his nominee for Commerce Secretary, will spearhead the effort. The action calls for them to submit a plan within 90 days with details on funding, investment strategies, and governance. And let's take a look at Palantir shares. Those are up nearly 20% in the pre-market. The company reporting a 36% jump in fourth quarter revenue and forecasting full-year growth that beat analyst estimates. The company's CEO attributing the results to untamed organic growth in demand for its AI software. That's your Bloomberg Brief. John?
Yahara, thank you. If there's a phrase that I'd ever want to use as a CEO, it's that one right there. we're seeing untamed organic growth. This stock was up more than 340% in 24.
The superlatives that AI lends itself to, and we heard the same type of superlatives that Elon Musk used for some of the robo-taxis, speaks to the moment.
That stock is up big in early trading. Up next on the program, China hits back.
We'll be speaking to China probably over the next 24 hours. China's involved with the Panama Canal. They won't be for long. And that's the way it has to be. If we can't make a deal with China, then the tariffs will be very, very substantial.
That conversation is up next, live from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
So here's the setup this Tuesday morning, and good morning to you. We're negative by 0.2% on the S&P 500. Over in the bond market, yields are higher by a few basis points. We're up 2 on a 10-year to 457.33. Under surveillance this morning, China hitting back.
We'll be speaking to China probably over the next 24 hours. China's involved with the Panama Canal. They won't be for long. And that's the way it has to be. If we can't make a deal with China, then the tariffs will be very, very substantial. Nobody can compete with us because we're the pot of gold. But if we don't keep winning and keep doing well, we won't be the pot of gold, and then tariffs won't be so good for us.
So here's the latest this morning. China retaliating against President Donald Trump's tariffs with levies on some U.S. goods. Beijing imposing a 15% tariff on less than $5 billion of U.S. energy imports and a 10% fee on American crude and agriculture equipment. Team coverage starts right now. Bloomberg's Ollie Crook joins us in Hamburg, Derek Decluit of Toronto, and Creighton Harrison joined us in Mexico. To the three of you, thank you, gents, for being with us. Ollie, I want to come to you first. We are told Europe is next. What is Europe doing to prepare for that?
Yeah, listen, the sort of the tactic that Europe has had for the last couple of months is to say very, very little, to say nothing negative about Donald Trump, to take a very sort of optimistic approach towards things and really sort of hope for the best and really hope that the sort of tariffs would be sort of worked out ahead of time and potentially would never come into effect. Again, what we've seen in the last sort of 24, 48 hours may to some degree reassure the Europeans, though on the other hand, it is also saying that Trump does mean business. And when he talks about 10% tariffs on European goods towards the EU, that is a very substantial part of the economy here. I mean, the estimates sort of range. It could be 1 percentage point of growth off of GDP. But again, what's also interesting is that the EU does not work like a country, like Mexico, like Canada. What are the things that he's going to want to extract out of the European nations? It's probably going to be more spending, as he has said in the past, on LNG, fossil fuels, that sort of thing. That's a fairly easy box to tick for the Europeans because they already are in need of that. And potentially these tariffs from the Chinese side could help get them at a better price. And also is the question of NATO spending, right? We have heard it many times from Donald Trump. 5% is what he wants to see at NATO. Again, all of the Europeans say they want to spend more. If they're willing to hit 5%, it's potentially a different story. What I think is interesting, John, and I think it's highlighted also by what we saw in the retaliatory action from China, is that for Trump and for this world, this may not be distinct trade and sort of, for example, antitrust issues. All of this stuff could be bundled up, and that will really concern the Europeans.
Meanwhile, Derek, over in Canada, they have responded with some measures that include a fentanyl czar and a new U.S.-Canada joint strike force. Do we have a sense of whether that will be enough to push the can down the March 4th deadline to beyond that and really get some sort of trade agreement in place?
I don't think there's a tremendous amount of optimism yet in Ottawa that this is anything like a permanent solution. I mean, as you said, there are border security measures, some of which the Canadian government had already announced, and then they added a few yesterday, like the fentanyl czar, like agreeing to name cartels as terrorists. But Trump was clear in his Truth Social post that it's 30 days to then work out an economic deal with Canada, and nobody's quite sure yet what that means. The U.S. does have a trade deficit with Canada. Trump has mentioned that many, many times. And so obviously there will be a further negotiation. And in 30 days, who knows? But nobody thinks this is much more than a temporary reprieve up here.
In Mexico, Creighton, the temporary reprieve is 10,000 soldiers being sent to the U.S. border. That is among the different provisions that Mexico has put on the table. What more is necessary? Do we have a sense of that?
Well, if you take at face value that what President Trump wants is border security and reduction of fentanyl across the border, then the other important thing that came out of the call between Sheinbaum and President Trump yesterday was this idea of creating these working groups of cabinet-level officials, so, Secretary of State in the U.S., the foreign minister in Mexico, et cetera, et cetera. They're supposed to be meeting regularly to sort of work through these issues and try to find solutions. Will they solve migration and fentanyl in 30 days? Probably not. But if they can get enough momentum going through those connections, then the president in Mexico, President Sheinbaum, is hoping that will be enough to convince President Trump to move on from this.
We've got another deadline. To Derek, to Creighton, to Ollie, to the three of you, thank you. Appreciate it. Just to stay on Mexico, dollar mex is basically back to where it was on Friday at the close. Some big swings. That has been the area of action, and it could go the other way. But right now, people are saying at least the temperature has been lowered. Up next, we'll raise the temperature. We'll talk about big tech with Dan Ives of Wedbush on the impact of tariffs on the automakers. That conversation up next. Just a little sense of calm, at least for now. Equity futures down by 0.1%, just about unchanged on the Nasdaq. Had a lot of Fed speak in the last 24 hours. The Boston Fed President Susan Collins saying there's no urgency for making additional adjustments. We heard from the Fed President over at Atlanta, Raphael Bostic, also saying depending on what the data is, it might mean that we are waiting a while. This Fed's not in a rush. So check out the bond market, 2-year, 10-year, 30-year. Interesting moves yesterday, not so much at the front end of the curve, yields were higher, but at the longer end of the curve, where yields were lower. And I think if you asked a lot of people in fixed income, off the back of the tariff threat, they might have been focused on the inflationary component of it, an inflationary outcome and the prospect of higher yields. This is what BMO's Ian Lingan had to say on yesterday's move. For what appears to be the first time since Trump's election win, the market is looking beyond the near-term inflationary impulse of tariffs and is beginning to contemplate the impact on global growth. That's a change. At a time when you have every former Fed official and current Fed official saying it has in the past been disinflationary and actually a growth shock. We heard that from Jim Bullard, the former St. Louis Fed president. I will say, though, 10-year yields didn't go down as much as people expected, given that equities were selling off. So hard to interpret what this move really means at a time where there was a lot of volatility yesterday. And a lot of volatility right here, too, in foreign exchange. So let's turn the page and get to the FX story. A snapshot of things currently, and I just want to focus on euro-dollar. The euro's negative by 0.2%, 103.23. Europe has escaped nothing so far. The prospect of tariffs still lingers and still looms large. This is what Nomura have to say. We see a move towards parity as likely over the next few months. Weak macro and ECB policy easing risks remain in place. It's not just about the tariffs, it's about the outlook for the continent. At a time when you saw the inflation read yesterday come in hotter than expected, even though this is really inconvenient for the wish to really lower rates, Europe's in a tough spot. Everybody knows this. Yet that was the best performer last month. And the reason why was because people figured the bar was so low, any news would be good news, including the fact that we hadn't heard about tariffs. Well, do we see a reversal of that now? Euro Stoxx 50 up 8%. Almost 8%. in January. Unreal. Euro-dollar right now, 103.23. Under surveillance this morning, China hitting back against President Donald Trump's tariffs, imposing a 15% tariff on just under $5 billion of US energy imports and a 10% fee on oil and agricultural equipment. Analysts calling the retaliation restrained, with the measures set to kick in on February 10th. Keep saying China's hitting back. This is not a punch. This is like a little pinch, if that.
I love that they're investigating Google, even though Google hasn't operated in the country since 2010. Ooh, they're scared. They're also going after, the parent company of a couple retail companies. The big issue is actually the key mineral supply chain. Talking about potential export restrictions. All this is basically saying, look, we can do this. We can have a significant measure. This is a negotiation. They're supposed to talk in the next 24 hours. Let's see what they have.
Don't you sense it's a different negotiation, though? That China is somehow different to what we've just seen with Mexico and Canada in the last 24 hours?
There is bipartisan support for increasing some of the distance between China and the U.S. There are multifaceted aspects of this. When it comes to fentanyl, when it comes to national security, there are a lot of other questions with China, and we're going to see those untangled. It is a very different discussion than Mexico and Canada. It is getting the ball rolling in a multi-stage process where it might be different with Mexico and Canada.
Which bucket do you think Europe is in right now, one or the other? Trump's tariff threats driving a bit of a wedge between the EU and United Kingdom. European leaders preparing for possible tariffs after Trump reiterated a warning to the EU that they will definitely happen. This coming as Trump said the UK would probably be spared for now. Some rare good news for the United Kingdom.
Okay, maybe. I mean, there is this issue of do they have to choose between the U.S. and the European Union? They have an advantage, as you pointed out yesterday, of Brexit. They can say, look, we're independent. We're not part of the continent, so don't look at us. And by the way, the U.S. actually has a trade surplus with the United Kingdom. Very different scenario. That said, a lot of things could change. And the truth is, they're facing a lot of negative growth shocks, potentially, at a time where they have to put some sort of olive branch out to the European Union. So it becomes a very difficult moment for them.
I do think there's a lesson to come from my home country, though. How badly they managed the PR when they came into power. And I'm talking about the Labour Party and the Labour government coming out and really talking down the economy, talking down the public finances, talking down pretty much everything across that nation, and then saying, a few months later, we're pro-growth and we want to do all these good things. And I think if you're a business right now or a consumer, you're still scarred by the communication you got a number of months ago. And I think there's a lesson here for the United States as well. Confidence is sky high for this administration to deliver a pro-growth platform. And we've had the sort of like anti-negative growth stuff up front. It's hard to put the toothpaste back in a tube. Don't sacrifice this confidence. We want to see that confidence translate into investment decisions, translate into hiring decisions. And I think right now you're denting some of that confidence with the action of the past few weeks. Whether you think it's the right action or not, there are consequences.
That's the reason why earnings calls are going to be that much more interesting. How much do people withdraw guidance? How much do people postpone some of those investments? How much do people say, well, we can't make big hiring plans because we don't have a sense of what that framework looks like? That's what really is going to tell whether there is a real lack of confidence.
We get some earnings a little bit later. We get those earnings from Alphabet, set to report fourth quarter earnings after the closing bell. Analysts expecting the company to deliver solid growth with its cloud computing and search business very much in the spotlight. We learned a little bit over the last week. We heard from Microsoft, we heard from Meta. We should have a decent read on what we should get from Alphabet.
Capacity is going to be important, given that that was the sticking point for Microsoft. They didn't have enough capacity to meet the demand. Does Google? Are they actually growing share in the cloud computing services when they are number 3 based on AWS and Azure? So these are some of the questions. Also curious to see what they say about China. Hey, we don't work there anyway, so it doesn't really matter to us.
Don't know what they're talking about. Don't know what are they talking about? Let's turn to the auto industry. Dan Ives of Wedbush is not overly concerned about tariffs, writing the supply chain can adjust to a near-term shock and weather the storm. If these tariffs stay in place for 30 to 60 days, we see minimal impact to GM and to Ford. Dan joins us now for more. Dan, good morning.
Great to be here.
30 days. If we got that in 30 days and they lasted 30 days, are we only saying there's only going to be like minimal damage? Does this not hold these companies back from making big decisions?
I think it's minimum. I mean, I'll be in Detroit, tomorrow. I think ultimately right now in terms of GM, Ford, it's very contained in terms of the impact. Now, I think when you look at Tesla, that's probably the one that's least impacted, especially given their supply chain. But our view is here, bark worse than a bite, whether it's on the auto side, and I continue to view on the China side, even on chips, even though that's pressuring names like NVIDIA and others. Just as we've navigated in 2018, 2019, you don't sell these stocks because of it, because I continue to view, just like you talk about, where's the spending? I think it's going to be another robust number from Google tonight. Saw Palantir and others. AI revolution alive and well. Tariffs are not impacting that in our view.
One of the reasons why your analysis is particularly special is not just because you've been right about a lot of it, but also you travel a lot. You talk to people. You see the sentiment. Has there been, even in the past couple days, any sort of shift in the optimism because of the uncertainty?
Yeah, I think less about, like, in terms of Mexico and what we're seeing in Canada. It's from a China tariff perspective combined with DeepSeek. I think there was just general, maybe a little more agita in terms of what that means in terms of U.S.-China cold tech war, tariffs, what the next step is. Because part of the issue is, if you go back to this last week, Nadella doubles down 80 billion, Zuckerberg 65 billion. You see just massive capex tonight from Google, Palantir, and massive AI, just another phenomenal quarter. I think the worry is, could anything spoil the party? And the only thing that spoils the party is a ratcheting up in terms of U.S.-China tension. So I think in terms of the nervousness, that's why you're seeing pressure on NVIDIA, on overall tech here, as this plays out.
GM was supposed to be immune from this because they actually moved their operations and their business out of China largely to Mexico. Now they're in the crosshairs. I just wonder if other tech companies in particular are moving operations out of China more aggressively to immunize themselves from this type of shock.
Yeah, I mean, like, to that, look, in GM, it's been sort of one punch after another from the EV perspective in terms of from one administration to the other, the Mexico situation. But I do believe, Mary and the team navigated that extremely well. And I think GM continues to be a stock that we're bullish on here. In terms on the China side, look, my view, we talk about if Apple decided today, if Tim Cook's like, we're going to move 10% of our supply chain out of China, that would basically take about 2 years and ultimately something that could cost, what I think 30, 40 billion if it ultimately, translated. The point is that it's always easier said than done. And I think that's the conundrum, because the reality is, like, when you look at Apple, you look at Tesla, that's why Cook, Musk, 10% politician, 90% CEOs.
Let's talk about Elon Musk and the closeness to the administration. We've talked about the benefits of that closeness and what it could mean, the halo effect, as you've talked about, over Tesla. Foreign nations are starting to see this as a potential pressure point. We saw that from a Canadian province in the last 24 hours, threatening to cancel a Starlink contract. Is it a benefit or not?
Yeah, look, there are definitely offsets, as we've talked about, but the gold at the end of the rainbow is autonomous. I mean, autonomous, we think that that's worth $1 trillion. In terms of that to the Tesla story, I think as you get a federal framework, and I think this is key in terms of the Trump administration, that's the path for growth in terms of what I view as generational growth for Tesla. So Musk, he's someone that's, look, he's not going to ultimately peel back, right? So he's going to continue going down this direction. There's negatives, no doubt, but I just think the positives, it was a bet for the ages on Trump. And it continues to be that. And I think it's going to be a historical bet.
The president clearly wants to celebrate the national champions of American and corporate America. And so he should. So he should. Let's be clear about that. The question I'm asking is whether other countries begin to punish those national champions. We've seen that from the Europeans on tech. We've seen the tech players not even be able to get into China. Tesla's a rare one.
It's a very rare one. I mean, Tesla and Apple, you put on just a different perch, because those, you talk about with Google, they haven't operated in China. Who cares? China's actually the only two tech companies. It's Tesla and it's Apple, and that's why that's the tightrope, right? Because for Musk, and that's also why even when it comes down to TikTok, and we continue to think Musk or Ellison is probably in the front runners in terms of what potentially is that asset sale, but for Elon right now, it's navigating this whole thing. But I continue to view him more entrenched in the Beltway, despite all the noise, is the best thing that ever happened to Tesla shareholders.
To your point, John, last month, Tesla sales fell 63% in France. That is because, in large part, people were taking a look at the political backdrop and saying, nuh-uh, this isn't our gig. I do wonder if there is some reputational damage being done in the longer term, where people are looking at what's going on, some of the tactics, and they're saying, let's look elsewhere. Are you seeing that in any capacity?
Look, I think it's contained in terms of the demand issues that maybe that Dave's seen from a negative perspective, because of it. But Lisa, I think the most important thing is when you think about autonomous, you think about robotics. I mean, that's really the Tesla story. I think 90% of the story today is about that. So there could definitely be some demand issues, we'll call it contained, but what the streets focus on. You saw it last week, right? Like the bears scratching their heads, like, why is this stock not going down given numbers got lower? Because the street is focused on autonomous robotics, and that ultimately, if you look where they are in the Trump administration, Musk is in a, he continues to play chess, others playing checkers relative to this situation.
One of the big arguments, especially as the China-U.S. trade war really heats up, or trade dance, whatever you want to call it, there is a question about whether it pushes China even more to develop a parallel tech sphere to the U.S. that becomes dominant in its own right, that might be more amenable to a number of countries around the world. How realistic is that to you? Does that become more of a possibility?
I think it's not realistic just because of NVIDIA. I mean, we just continue at high-scale GPUs in terms of true build-outs. You need NVIDIA. There's one red phone that goes to Jensen. Now, obviously, DeepSeek, that was kind of the white-knuckle moment. Everyone's like, does this change the whole narrative? And I think as more has come out about that, people realize, maybe the bark is a lot worse than the bite. Look, you'll have a decoupling in terms of what's happening in China and the U.S. But negotiations, it's so important because, again, U.S. needs China, China needs U.S. And I think that's why it's very, very important, especially when it comes to chips, that this could be a decoupling but not get in the way of what I view as a generational tech environment in terms of, what we see with AI.
NVIDIA, monster run-up over the last few years. Got to say that up front. But 22% drawdown in the past few months. Why hasn't that stock recovered? We had a week, we worked out that DeepSeek is maybe not what people thought it was. And here we are, we're still rolling over.
Yeah.
Why?
And I think that there's a few reasons. One, it's just like Microsoft has, Apple, they've sold even after, I think, better than feared numbers. I think there's worries just in general about, can they continue to sustain it? If any little thing happens, fly in the ointment, stock gets crushed. So you've seen a little bit of a risk off, but look, I just continue to view it 6-9 months from now. We look back at this as a golden buying opportunity, not the time where there's something structurally wrong and numbers don't.
Or we've just found better vehicles to play the theme, which is.
Chaudhary ji, good evening, good afternoon. गोल्ड का देखो मैंने परसों से बता रहा हूँ व्यू बुलिश ही है गोल्ड का तो व्यू आप मान के चलो बुलिश ही है 2-3 फैक्टर इन थे उनकी वजह से बुलिश हुआ है फिर चाइना की जो न्यूज़ वगैरह आ रखी हैं उनकी वजह से फिर से बुलिश हो चुका है तो गोल्ड का तो ओवरऑल भी बुलिश ही है आज डेटा आने वाले हैं काफ़ी ज़्यादा तो उस पर थोड़ा नज़र रहेगी बाकी अगर आप आज का अपडेट देखोगे प्रोडक्शन जो चाइना का डोमेस्टिक गोल्ड प्रोडक्शन होता है वो मैंने मॉर्निंग पे देखा था 350 मैट्रिक टन से क्रॉस कर गया है ह्यूज अमाउंट है विच इज ठीक है एंड ये एक न्यूज़ थी या फिर कैसे एक डेटा देखने के लिए आया था तो अब देखना पड़ेगा गोल्ड के प्राइस तो बढ़ रहे हैं बट अगर सेल्स बढ़ेगी नहीं बढ़ेगी क्योंकि देखो खेल अल्टीमेटली फिर लास्ट में आ जाता है डिमांड और सप्लाई का इफ डिमांड इज देयर देन ओनली सप्लाई इज देयर ठीक है अब आप सप्लाई इतनी ज़्यादा बढ़ा दोगे डिमांड कम हो जाएगी प्राइस अगर बहुत ज़्यादा हो गया तो फिर यू कैन से लाइक जो ज्वेलरी कंपनीज हैं या सेल्स हैं ज्वेलरी की गोल्ड से रिलेटेड वो कम हो जाती है क्योंकि इतना महंगा कौन लेगा फिर लोग क्या करते हैं फिर कम जो लाइक कैरेट वाले गोल्ड्स होते हैं उनके बने हुए जो ज्वेलरी होती है वो बाई करते हैं या फिर आर्टिफिशियल बाई करना पसंद करते हैं बिकॉज प्राइस जितना ऊपर जाएगा तो देखना पड़ेगा डिमांड क्या कंटिन्यू रहती है या फिर नहीं दैट विल बी अ वेरी मेजर पॉइंट लेवल दिखा देता हूँ मैं लेवल बना देता हूँ
International markets remain affected by geopolitical tensions. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, pricing, tariff risk.
I don't think this would necessarily be inflationary, given that the economy does have a lot of momentum, but I do think that the growth hit would be significant. We would notice it for sure.
Francis Donald of Manulife, up next. prepared to be criticised for this. The last 24 hours, a masterclass in expectations management. Threatened to put tariffs on Mexico and Canada, hasn't happened, ended up with 10% on China, people barely blinking. 10% additional tariffs on China is a story, but we're sitting here this morning saying good news, avoided tariffs on Mexico and Canada for a month.
Perfectly said. You can broaden this out to say what actually is going to stick, what is the signal, and what is the noise when we have a fire hose of announcements coming out from Washington, D.C.
Under surveillance this morning, pricing tariff risk.
I don't think this would necessarily be inflationary, given that the economy does have a lot of momentum, but I do think that the growth hit would be significant. We would notice it for sure. The point of this isn't to slap tariffs and slow the economy down. It's to get what he wants from Canada, Mexico, China, and others.
And he's slowly getting it, that's for sure. Here's the latest this morning. The US dollar and Canadian dollar under pressure after leaders from both nations reached a deal to delay tariffs for 1 month. Francis Donald of RBC writing US tariffs in the size that they have been floated, or even a fraction of that size, could filter into the Canadian economy immediately, significantly, and then persistently for many years. Francis joins us now for more. And Francis, maybe we've avoided them. Maybe they happen in 1 month's time. I don't know. But what I'd love to hear from you is the price of the uncertainty. What is the price that we have to pay?
Well, even though this trade shock that we look to have avoided would have been the largest in 100 years for the North American economy, we do have some things that we know about tariffs and the threat of tariffs from the 2018-2019 experiences. And one of them is even just the existence that they may occur has historically stalled business investment, household decisions. It creates an uncertainty tax on the entirety of these economies as businesses lack clarity on what will happen next. So it wouldn't surprise me if we see a pause in business activity, a hit to business confidence.
लेकिन नेचुरल गैस को देखोगे एफईजी के अराउंड ही मूव कर रहा है. लंदन सेशन ऑलरेडी ओपन है. लेट्स सी कितना मूव करता है. गोल्ड इज सुपर बुलिश. यहाँ पर कोई रेजिस्टेंस ही नहीं है अभी. ऑल टाइम हाई पे तो कुछ रेजिस्टेंस बना भी नहीं सकते, इसलिए प्राइस कुछ खास सिग्निफिकेंट पुल बैक दे नहीं रहा है. ठीक है, 15 मिनट में भी कोई रेजिस्टेंस बना नहीं है. चाहो तो पिवट का यूज़ करो. देयर इज ओनली वन ऑप्शन, वी कैन यूज़ द पिवट पॉइंट. बाकी 15 मिनट में कोई रेजिस्टेंस नहीं है. 5 मिनट में भी कोई रेजिस्टेंस नहीं है. ऑल टाइम हाई ही चल रहा है प्राइस का. 3 मिनट में देख लेते हैं, कुछ तो रेजिस्टेंस बना होगा. नहीं, 3 मिनट में भी नहीं है. और बुलिश मोड में गोल्ड मोमेंटम रुक ही नहीं रहा. पता नहीं कहाँ जाके रुकेगा. 2875 या 70 राउंड नंबर. एक बार थोड़ा सा इससे देख लेते हैं. लेट्स सी, जस्ट गिव मी अ मोमेंट. बाकी नेचुरल गैस में ट्रेल कर लेना गाइस. यहाँ पर ना थोड़ा बहुत रुक रहा है, थोड़ा ऊपर तक जाता है तो ये एक टारगेट है यहाँ ब्लू कलर की लाइन का. यहाँ से थोड़ा सा सेलिंग का प्लान करेंगे. एफईजी पर रुका तो फिर गिर जाएगा नीचे, और ये ऑलरेडी रीटेस्ट कल एक बार कर चुका है. सेकंड टाइम है. अगर हायर हाई नहीं बनाया है तो वैसे भी बेरी से चाहे यहाँ से सेलिंग आ जाए या एफईजी से गिर जाए, तो ट्रेल करते हुए चलना है इसको. वॉल्यूम फिर शायद में भी कम हो जाए ऑन दिस पर्टिकुलर लेवल. बाकी थोड़ा सा ऊपर आता है, यहाँ से सेलिंग का प्लान रहेगा. ऊपर वाले से नहीं, नीचे ब्लू कलर की लाइन के आसपास. ठीक है. बाकी क्रूड ऑयल को देखोगे, एक नीचे वाला एफईजी शायद निकल रहा है. ऊपर से अगर सेल किया हुआ है तो वेल एंड गुड ही है. फिलहाल मैं तो इसमें रिस्क अभी लेने के लिए अवॉइड ही करूंगा, बट किसी ने अगर ट्रेड किया हुआ है, क्योंकि फिलहाल अभी भी एफईजी मूव कर रहा है. बट अगर ये निकलता है, क्लोजिंग देता है इसके नीचे कहीं 6325, तो ये एफईजी को रिमूव ही कर देंगे. क्योंकि किसी ना किसी साइड के देखो एसएल जाने जरूरी है, तभी मूव कर सकता है. या तो इस साइड के जाए या इस साइड के जाए. अब ये चले भी गए तो ऐसा नहीं है कि नीचे सपोर्ट रेजिस्टेंस दूर है. ऊपर रेजिस्टेंस यहाँ है, सपोर्ट ये यहाँ से स्टार्ट हो जाएगा ब्लू कलर की लाइन से. ध्यान रखना, तो तब थोड़ा सा मजा आएगा फिर ट्रेड करने में. ठीक है, गोल्ड का देख लेते हैं कुछ. देखो हायर टाइम फ्रेम पे तो कुछ खास है नहीं वहाँ पर करने लायक. अगर आपको रेजिस्टेंस में मार्क ही करना है तो स्मॉलर टाइम फ्रेम ही देखना पड़ेगा. देयर इज नो अदर ऑप्शन वी हैव राइट नाउ. तो लेट्स सी, एक बार मैं देख ही लेता हूँ हायर टाइम फ्रेम पर. ठीक है, क्योंकि 15 मिनट पे तो आपको सिर्फ या तो सपोर्ट या फिर रिटेस्ट मिलेंगे, रेजिस्टेंस मिल नहीं सकता। रेजिस्टेंस क्रिएट होगा भी तो सबसे पहले ऐसा नहीं कि सीधा 15 मिनट में ही क्रिएट होगा, ऑब्वियसली है। जो स्मॉलर टाइम फ्रेम होते हैं, सबसे छोटा स्मॉलर टाइम फ्रेम अगर देखा जाए नॉर्मली हम यूज़ करते हैं, वो आपका 1 मिनट ही रहेगा, तो सबसे पहले 1 मिनट में ही कोई रेजिस्टेंस क्रिएट होगा, राइट। तो 1 मिनट के चार्ट पे नज़र रखते हैं, क्योंकि रेजिस्टेंस क्रिएट होगा तो पता सबसे पहले वहीं से चलेगा। नहीं, ये भी नहीं है, सारे के सारे सपोर्ट ही बना रखे हैं, रेजिस्टेंस है ही नहीं। मिनट में भी कोई रेजिस्टेंस नहीं बना हुआ, मार्केट फिलहाल बुलिस ही है। देखो कुछ बनने दो, रेजिस्टेंस बन जाए तो वेल एंड गुड, फिर देखेंगे, अदरवाइज बुलिस है ओवरऑल व्यू कह सकते हैं। बाकी ये भी थोड़ा सा क्रूड नीचे आ जाए तो इसमें बाइंग का प्लान कर लेंगे, थोड़ा सा नीचे आ जाए। लाइक भी करो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल, हिट द बेल आइकन, शेयर विथ योर फ्रेंड्स एंड फैमिली मेंबर्स एज वेल। हाँ, इंडियन रुपीस भी काफ़ी गिर गया, 87 तो परसों ही क्रॉस कर गया था, आज 87.50 के अराउंड ट्रेल कर रहा है शायद। 90 दूर नहीं है, लग रहा है अभी इसी कुछ 2-3 महीनों में 90 भी पहुंच जाएगा। लुक एट दिस, 87.50 ऑलमोस्ट टच हुआ है लगभग। कहाँ एक टाइम था डॉलर 50 के अराउंड था, डबल हो गया बताओ। इतना अच्छा रिटर्न तो स्टॉक भी नहीं देते, इतना अच्छा रिटर्न इसने दे दिया है, 120% का रिटर्न पिछले 5 सालों में। वो भी कैंडल ओपन इक्वल टू लो बनाते हुए जा रहा है ऊपर की ओर। तो गोल्ड में थोड़ा सा कुछ रेजिस्टेंस बनेगा तो देखेंगे, फिलहाल कोई रेजिस्टेंस ही नहीं है उसमें। बाकी एक इंडिकेटर आता है, उसका यूज़ कर सकते हो, थोड़ा सा उससे हेल्प मिल जाएगी कि मुझे क्लाउड करके। उसके अकॉर्डिंग देखोगे तो 15 मिनट में तो ये थोड़ा सा रैली में ही चल रहा है। 3rd of February के बाद ऊपर आया था बुलिस मोमेंटम में, तब से नीचे गया ही नहीं है उसके बाद ये 4th of February। तो ओवरऑल बुलिस टेरिटरी में ही है, नीचे भी आता है तो पुल बैक ही मिलेंगे मैक्सिमम 2850 के आसपास। थोड़ा एक डिप तो मारना चाहिए लॉजिकली देखा जाए तो। बाकी अगर इसका कि मुझे क्लाउड देखोगे तो ऐसा भी नहीं है कि बहुत ज़्यादा विथ में हो, मतलब दूर दूर हो, बहुत ही नैरो एक की मुझे क्लाउड बना रखा है। इसका मतलब मार्केट ट्रेंडिंग ही होने वाला है। अब ट्रेंडिंग किसी भी साइड में हो सकता है, बुलिश साइड में हो सकता है, बेरिश साइड में हो सकता है। नॉर्मली जब जितना नैरो आपका एक की मुझे क्लाउड होता है, समझ लो मार्केट उतना ज़्यादा ट्रेंडिंग में चलता है। तो अभी के लिए देखोगे, क्योंकि ये एक की मुझे क्लाउड करंट कैंडल से, करंट टाइम से कह सकते हो, करंट कैंडल भी कहना गलत होगा, करंट टाइम से लगभग 5-6 घंटे आगे चलता है। मतलब ये 5-6 घंटे आगे का एक तरह से मोमेंटम बता देता है, तो उसके अकॉर्डिंग तो ये ट्रेंडिंग ही है। वॉलेटाइल साइडवेज कहना मुश्किल है। बाकी शाम को 9 बजे के बाद हो सकता है थोड़ा सा साइडवेज चला जाए, बट टिल 9 PM तक तो ये थोड़ा ट्रेंडिंग ही दिख रहा है। देखते हैं, थोड़ा सा पुल बैक आ जाए तो बेटर है, बट अभी फिलहाल 15 मिनट में कोई भी रेजिस्टेंस नहीं बना है 15 मिनट में भी नहीं, स्टिल बुलिश, सो वी हैव टू वेट कि कोई रेजिस्टेंस क्रिएट कर दे, फिर देखते हैं सेलिंग का। 1 मिनट का ही चार्ट ओपन किया हुआ है। आफ्टरनून पुनीत कुमार जी, गुड आफ्टरनून। लाइक द स्ट्रीम, लाइक करते रहो। इंडियन मार्केट भी क्लोज होने वाला है, बाकी यहाँ भी थोड़ा मोमेंटम कम हो जाएगा अब कमोडिटी मार्केट में, बिकॉज 3:30 के बाद लंदन सेशन का वॉल्यूम भी डाउन हो जाता है। मुंबई सेशन एंड होने वाला है। डेटा बहुत सारे हैं तो ध्यान रखना। 6:45 का डेटा भी इंपॉर्टेंट है, 8:15 8:30 भी इंपॉर्टेंट है, फिर 9 बजे क्रूड ऑयल की इन्वेंट्री ही आने वाली है। Yesterday tried crude oil when it reached high 6350 but had to exit in 1K loss. 6350 पे 6350 पे कल तो 6350 आया ही नहीं था। 6350, सॉरी 6350। हाँ, फिर उसके बाद साइडवेज चला गया वापस से। न्यूज़ थी उस समय एक्चुअली, एक बाद में पता चली ईरान पे और ज़्यादा सैंक्शन लगा सकता है यूएस, दैट इज़ अ न्यूज़। उसके वजह से सडनली वहाँ पर एक रीटेस्ट जोन भी था, बट सपोर्ट भी ले लिया मार्केट ने। काफ़ी बड़ी कैंडल, रेजिस्टेंस से थोड़ा सा सेलिंग एक्सपेक्टेड थी, बाद में आई ज़रूर। अभी भी देखोगे वहीं पर रुका हुआ है प्राइस। फिलहाल के लिए अगर नेचुरल गैस ऊपर आता है तो यहाँ कहीं सेलिंग का प्लान रखना। नीचे फिर एक सपोर्ट है और बीच में कोई नया रेजिस्टेंस बनेगा तो देखते हैं। क्रूड ऑयल में फिलहाल एफईजी टू एफईजी मार्केट मूव कर रहा है। अगर ऊपर से सेल किया है तो ट्रेल कर लो ऊपर वाले एफईजी से। अगर थोड़ा नीचे आता है तो फिर यहाँ बाइंग करेंगे। ये नीचे पर्पल कलर की लाइन से ब्लू कलर की लाइन तक पूरा ही सपोर्ट जोन है। अब उतना पूरा लगा दूंगा तो काफ़ी बड़ा सपोर्ट हो जाएगा, इसलिए थोड़ा सा नीचे लगा रखा है। हाई लेवल से मिनी वगैरह ले लेना, ठीक है। यहाँ से यहाँ तक ये पूरा ही सपोर्ट है। एफईजी रिमूव करता है। Mulls probe into Apple App Store, Bloomberg report, citing sources. मिल जाएगी अपॉर्चुनिटी, डोंट वरी। आज यूरोपियन गैस प्राइस राइज विथ फोकस ऑन एलएनजी सप्लाईज। Tesla stock is falling. California might be turning against Elon Musk.
Enough said. Sarah Hunt of Alpine Saxon Woods joins us now for more. If all of Wall Street's horses and all of Wall Street's men can't put the globalised economy back together again, how do we think about where best to allocate assets? What a question. Sarah joins us now for more. Sarah, good morning.
Good morning.
I'm going to talk about red wine from Napa. As much as I'd love to. Let's talk about this. The policy mix that we're going to see from this administration. Does it attract capital or push it away?
I think that's the million-dollar question right now. And it's certainly something that's been talked about for the first week in a way that it wasn't talked about in the first Trump 1.0, right? There wasn't an argument about capital then. And I think that what we're going to see is what we've seen so far, which is, going this way, going that way. There's going to be a zigzag back and forth, and I think it is hard to pin those things down. So I don't know what the answer is yet, but the big fear is that it does have a negative effect on capital.
The consensus view seems to be that this is still a pro-growth administration, that it will attract capital. The S&P 500 is still around 6,000, but there has been some damage done, particularly to the automakers. How investable do you think certain...
Natural gas में guys अपना SL trail कर लेना, ठीक है? जो लोग नीचे से बाइंग में हैं या तो हाफ प्रॉफिट बुक करके ट्रेल करो या फिर एसएल कॉस्ट पे रख के छोड़ दो। दोनों ही जगह से थोड़ा ऊपर आता है तो सेलिंग जरूर बन जाएगी। यहाँ से अगर यहीं से भी गिरा तब भी ये नीचे फिर ब्रेक होने के बहुत ज़्यादा हाई चांसेस है। कल एक बार रिटेस्ट ऑलरेडी कर चुका है, हायर हाई फॉर्म नहीं किया मार्केट ने। क्रूड में भी दो एंट्री बना सकते हैं अगर ये थोड़ा सा वापस पुल बैक दे दे। नीचे वाला एफएजी तो मुझे लगता नहीं अब काम का है। अगर ये हल्का सा इस तरह से पुल बैक दे दे तो यहाँ से एक वापस सेलिंग या फिर नीचे डायरेक्टली आ जाए तो बाइंग।
I was listening to some comments from the Chicago Fed President, Austin Goolsbee. It seemed out of sync with what I heard from him at the end of last year, that's for sure, before Trump got into power. We've got to be more careful with how fast to cut rates. What has changed for them?
Well, we may feel a huge sense of relief over the news from the past 24 hours, but remember this massive trade shock, and I got to be clear here, this trade shock, 25% tariffs on Mexico and China, would have brought the average import tariff for Americans up to almost 11%. It currently sits at 3%. It's a quadrupling of the trade pressure that would exist within the U.S. economy. It didn't disappear. It's been paused for 1 month. We still have the April 1st America First trade policy negotiations. We have USMCA being negotiated. We're hearing a lot of chatter about European tariffs. And then we have Chinese tariffs that came on. That, as you mentioned at the start of this segment, is still a massive economic shock. And it would have to have you reevaluate how you're looking at the economy in 2025, especially if you're a central banker. Because if you're a central banker in that situation, you're having to model growth down, inflation up. Some central banks only have an inflation target. This central bank has a dual mandate, and those mandates would go in the opposite direction.
A rock and a hard place, and somewhere in between. Francis, appreciate your time, as always. Francis Donald there of RBC. Up next on the programme, Sarah Hunn of Alpine Saxon Woods. Former Deputy US Trade Representative Sarah Bianchi will catch up with Sucharita Kadali of Forrester Research and George Saravelis of Deutsche Bank on the latest in Europe. From New York City this morning, good morning. The second hour of Bloomberg Surveillance. Up next.
It's a short-lived tariff war. Then we can expect to see more pressure on fiscal.
This does reduce the growth shock, the upside to earnings.
The lesson from before was that the growth effects are large or can be large, and that would tend to dominate any one-time increase in the price level.
I do think that the growth hit would be significant.
I see something like an extra half point on inflation. And if you go from 2.5 to 3% inflation, that's a big difference for the Fed.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now, and your day ahead looks like this. You'll get some earnings later after the closing bell. Those earnings drop from Alphabet. Look out for that. You'll get some economic data as well later on this morning. JOLTS, job openings, the big one to watch, and some Fed speak just throughout the trading day. Look out for all of that too. The tone you get from the Fed speak right now, and we'd heard from the likes of Collins, from Goolsby, from Bostic, I think the tone you get from all of them is wait and see. We're not going anywhere anytime soon.
So what are they trying to communicate? And this actually is a really important point. What is the scenario analysis for? We have no clue. You have no clue. We have no need to move. So what's the big deal? This, to me, is going to be one of the biggest tests. Do they lay out some sort of plan for how they will respond to specific incoming data one way or another?
I'm not sure what you do. And if a data point is a tariff, what do you do with that? How long is the tariff going to last? Does it even go on? We talked about Chairman Powell. He was waiting for the administration to articulate the policy changes. They did over the weekend. Then they didn't happen. They backed away.
Yeah.
If you meet, let's say these tariffs do happen, and they meet on March 19th, I believe, March 18th, 19th. And they last for like 2-3 weeks, and they've got to put out forecasts, and they've got to base those forecasts on tariffs that have only just got on and might not last that long. That's very, very difficult to set policy for.
Which is the reason why I'm looking more at JOLTS, job openings. I'm looking more at just how tight this labor market is, to Francis Donald's point about how much we're trying to bring jobs home, and we don't have people to fill those jobs. I'm also curious about what the outlooks from different companies and their earnings look like. Are they retrenching some of their investment? Is there any kind of hit to confidence, or are people saying, look, we have a president who wants to move fast. He might break some things, but it's a pro-growth agenda, and a lot of this is on the right direction.
We should all want them to succeed. I want them to succeed. I hope this goes well. I want to see that confidence translate into economic activity. And I'd be worried at this point about whether that confidence gets damaged and you don't see the hiring decisions, you don't see the investment decisions, which is why, like you, listen to the corporate earnings. Are they making those calls, or are they getting rid of guidance because they don't know what to do? Look at the economic data. Job openings going up because people want to attract that talent, or are they worried about putting positions open and closing them because they don't know what's going to happen in the year ahead? They're two unknowns. That's how uncertainty can weigh on activity. That's the price of all this uncertainty. And there is a price, even if you don't deliver the tariffs.
And we saw that from Diageo, although it is a United Kingdom company, and the uncertainty there is a lot greater. The potential risks are greater. In the United States, there's another risk also, which is the dollar strength and how much that starts to weigh on some of the corporate earnings at a time where there is not that offset of some of the tax incentives and some of the other pro-growth agendas.
We put it quite simply. Are we going to see a policy mix here? And I stress policy mix because tariff is only one part of the story. That's trade. We need to wait for tax cuts as well and other initiatives too. Are we going to see a policy mix that attracts capital or pushes capital away? And when you speak to investors in America at the moment, they will tell you still that not much has changed on that front. We're looking for a policy mix that will attract capital and not push it away. And I think we're still just about there. What I don't want to see happen is for us to go somewhere else.
There is a statute of limitations for how long the uncertainty and some of the tit for tat can go on before people start to look for alternatives. That's the big argument for gold and the reason why a lot of central banks have been investing in gold. The real tell is if the dollar weakens and yields rise in the U.S., that's game over, and that's what I think a lot of people want to avoid.
And right now, no stress.
No stress.
No real hysteria at all. Away from foreign exchange, to your point earlier, equities are still around 6K. On the S&P 500 this morning, we're still down by only 0.1%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Sachs & Woods as Wall Street tries to catch its breath. Former Deputy US Trade Representative Sarah Bianchi as China hits back, and George Saravelos of Deutsche Bank on a volatile FX market. We begin this hour with stocks lower as investors are whipsawed by trade headlines over the past few days. Joining us now from Washington, D.C., Bloomberg's Anne-Marie. Anne-Marie, the hardest question, what's next?
Well, I think what comes next is Europe, and President Trump made that very clear once again in the Oval Office yesterday, complaining yet again about things like autos, things about food. He's saying that the European Union doesn't accept them. Well, they do accept them, but it's a very high tariff. When you want to look at some of the grievances Trump has, just compare it to the numbers. On average, Jonathan, when you're looking at goods going from the United States to Europe, there's a 3.9% tariff. Vice versa, goods coming from the European Union to the United States, on average, 3.5%. Not a huge gap. Look at something like the auto sector. We are talking about a pretty massive gap when you look at European Union cars coming to the United States. I believe it's about 10% in that double digit, while it's a little more than 2% going in the opposite direction. On average, a little bit more than 3% on those tariffs when it comes to things like farm products. So when it comes to Europe, it looks like the president wants to level the score. We don't know yet what he plans on doing. We don't have a timeline. We don't have a scope. But look at his grievances and look at the numbers. And that, I think, can lead you to what's coming next. And he said when it comes to the European Union, he said it's been a, quote, atrocity. And I think that's where he plans to take aim.
Anne-Marie, this sounds like an esoteric question, but it matters a lot in terms of what deliverables Europe can really provide to alleviate some of the tensions. What provision will this president use to impose tariffs on Europe? Will it be the same provision of national security and fentanyl that he used for both China as well as Canada and Mexico?
Probably not when it comes to the European Union, although I mean, you can argue that a lot of things could be put under national security issues. We've seen that with this administration. We've seen that with the prior administration when it comes to Biden. But look, they use a number of provisions in Trump 1.0 to go after Europe. Remember, in the first iteration of Trump, for a brief period, there was 25% tariffs on luxury goods, on French wines, on Italian cheeses. You start to think now it sort of made sense why Bernard Arnault showed up to Donald Trump's inauguration. And that is an individual who said he welcomed the new U.S. administration. But when he said that, he also had a caveat and said, we're looking forward to a 15% corporate tax rate.
He's got some champagne to sell, Anne-Marie. You know that. Anne-Marie in Washington, D.C., thank you. Napa's got some great wine. You know,
wow.
I'm going to do that on behalf of...
Wow, I'm impressed.
Yeah, they've got some great wine.
Yeah, one that rhymes with Lopez.
Yes, precisely. Precisely.
Okay.
Yes. Enough said. Sarah Hunt of Alpine Sachs & Woods joins us now for more. If all of Wall Street's horses and all of Wall Street's men can't put the globalized economy back together again, how do we think about where best to allocate assets? What a question. Sarah joins us now for more. Sarah, good morning.
Good morning.
I'm going to talk about red wine from Napa. As much as I'd love to. Let's talk about this. The policy mix that we're going to see from this administration. Does it attract capital or push it away?
I think that that's the million-dollar question right now. And it's certainly something that's been talked about for the first week in a way that it wasn't talked about in the first Trump 1.0, right? There wasn't an argument about capital then. And I think that what we're going to see is what we've seen so far, which is, going this way, going that way. There's going to be a zigzag back and forth, and I think it is hard to pin those things down. So I don't know what the answer is yet, but the big fear is that it does have a negative effect on capital.
The consensus view seems to be that this is still a pro-growth administration, that it will attract capital. The S&P 500 is still around 6,000, but there has been some damage done, particularly to the automakers. How investable do you think certain industries are with this cloud hanging over them?
Well, the tough thing for the automakers is that that's a tough industry anyway because it's so capital intensive and things change so fast. So I think that there is, you obviously have seen on the semiconductor side, those stocks have not really recovered, even though the market seemed to recover some of the issues from the DeepSeek. So I think that there's a variety of different things going on at the moment, and people will start to have more enthusiasms or less either for different sectors or different areas. But I think that this adding into the tariff thing absolutely puts, a little bit more of a question mark on going too deep into anything without recognizing that there's possible issues that are coming.
We started the show with Steve Chivarone of Federated, and he came on and he does his typical Monday morning, although it is Tuesday morning. He did his typical, look, just hold your horses, look at the fundamentals. There are a lot of good things going on out there, and he's generally bullish, and he's looking to buy on the dips, whether it's semiconductors or some of these other spaces that have been disrupted by tariffs. At what point do you agree with that?
Well, I think that there have been already areas where you have reasonably good value. The discussion prior to a lot of this was that the S&P equal weight was going to start to catch up to the S&P because the S&P was so heavy in those top Mag 7 names. And so I think that there are areas where you can look at the valuations and go, this is completely reasonable. You look at things like some of the materials, some of the food stocks have gotten absolutely crushed. There are a couple of different things that we like in that area that have good dividend yields and reasonable valuations, 10, 13, 14 times earnings. That's not crazy given where the S&P is right now. So there are obviously areas that you can look at, but it is definitely more of a nimbleness, and you have to be watching things much more closely.
We've seen the NASDAQ underperform pretty considerably, and tech stocks in general, for the past more than a month, actually. As you mentioned, they really haven't recovered. At the same time that you have seen this broadening out, yesterday was instructive in terms of what stocks would get most beaten up as some of the trade tensions really picked up. It was the small caps. So how much does the tariff talk threaten the broadening out that a lot of people have been hoping for?
Well, I think that yes, you're going to get those reactions, and then you have to see where that data comes in. And your discussion earlier about the Fed, to the extent that they may not want to do anything, this sort of gives them cover not to do very much for some period of time as they sort out what's going on. It really is going to depend on where the economic data go, and that's going to matter for the small caps enormously, as well as interest rates. And I think that right now is one of those vulnerabilities that's an economically sensitive area. Not that the rest of the market isn't economically sensitive, but it's more so, and it's more attuned to what's going on in the U.S. economy. So I think for those companies, what really matters is how things are going on the earnings and the economic front.
At that point, there's a real important message coming from the bond market yesterday, where we didn't see a huge rally in the 10-year yield. We didn't see a huge sell-off either from some of the inflationary impacts of potential inflationary impacts of tariffs. What was the message to you? Was there one, or was it just people paralyzed because they had no idea how to game it out?
I think yesterday it's interesting because I think that yesterday the equity markets obviously had a big reaction in the morning, but I think that there was some of a wait and see attitude about where is this really going to go by the end of the day? Because we know that there is the possibility, I'm having phone calls, so that's telling you there's a possibility for this not to be as harsh as it sounds at the get-go. So I think that on the bond market, people were more waiting to go, we're not really sure which way this is going to go. And it's until, if it had gone through to today and nothing had changed yesterday, I think you would have seen a bigger reaction. But I think because that reaction was muted within the same day it changed, I think that gave people enough time to go, it's okay, we can wait before we make any major decisions.
I won't debate how much moved, but I think on this stress test, I think we could take something away directionally from what happened. The fact that yields dropped back at the long end and didn't rise. There's something to be said there. B. Moseley and Lincoln made that point. We discussed it earlier. That certain parts of this market, certain investors have begun to talk about the growth risk associated with tariffs and not exclusively the inflation risk.
And Francis Donald mentioned that it would take about 1% off growth in the U.S. if some of these tariffs had gone into effect. I think you're right. On the long end, the fact that you saw a yield curve flattening, it shows that people have a very clear sense of what kind of disinflationary hit it could have over the long term.
I don't know what these tariffs would do. We've talked about this repeatedly. By definition, the importer pays the tariff. How the cost gets distributed is going to depend on what the goods are. I know this, though. You can't replace Ferrari. Ferrari coming out with earnings moments ago.
Oh, boy.
Okay.
Oh, boy.
Sales rising 14%. 1 in 4 vehicles sold, guess where? In the United States. The stock is up this morning by a little more than 3%.
You can't replace Ferrari, but some of us can't afford it. So it would be really nice to, share it once in a while. Let me have the keys. It's like, obviously, you can enjoy it. I can't.
Not many people can afford Opus One either, Bravo.
I know. But, it's sort of the perception is, that it's a really wonderful car. And I just wonder if any of this will dent that perception.
Yes, agreed. Good to see you, Sarah. Thank you.
Good to be
As
here.
always, Sarah Hunt there of Alpine Saxon Woods. That stock is high. The broader equity market's just about unchanged on the S&P. With an update on stories elsewhere, here's your Bloomberg Brief with Yahara Hacker. Say, Yahara.
Hi, John. President Trump is holding talks later today with Israeli Prime Minister Benjamin Netanyahu. This will be the first visit by a foreign leader to Trump's White House. The talks are set to determine the next phase of Israel's war against Hamas. The two leaders are expected to hold a joint press conference around 5 p.m. Eastern. Meanwhile, shares of Diageo are falling in London trading. The maker of Johnny Walker, Kettle One, and Casamigos is scrapping its sales target as it deals with sluggish growth and a possible tariff battle with the U.S. About 45% of Diageo's U.S. sales are from products made in Canada and Mexico. And most city employees can continue to work from home at least 2 days a week. The Financial Times is reporting that CEO Jane Fraser is keeping the hybrid work schedule, saying the policy could be a competitive advantage. That's your Bloomberg Brief. John?
Yahara, thank you. That's one way of attracting talent, Bramo. You go hybrid when the rest of Wall Street's saying, get back to work.
That's one way to attract. People. The other way is to offer them rides in their Ferraris, which also is a hybrid way of doing that. So if you want to do that, go for it.
Or a stock that's going up a lot.
Yeah,
that helps too. Compensation ultimately.
Well, yeah, that's true.
It's not going to be hybrid that gets me.
It's going to be just that the stock is going up and you're getting paid well. Yeah, but it could be a perk.
Maybe. Okay. A debate for another day.
Do you want to work from home for a couple days?
Twice a week.
Twice a week?
Twice a week.
Yeah.
In the bedroom. Just wake up. Put one of those plasma TV screens behind me, just sort of sit up. Might be doing it right now. You don't know, do you? It's the future of technology.
I know.
Sure. Up next on the programme, I hated working from home for what it's worth. Tariffs for national security.
He is taking extraordinary steps to do something to tackle the number one priority, which is addressing the illicit flow of fentanyl and illegal immigration. And he is willing to take the punch.
That conversation is up next. And how much of a punch did we just get from China? Not much of a punch at all. From New York City, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
So no drama this morning. Stocks just about unchanged on the S&P 500. In the bond market, yields are just a touch higher, up by 2 or 3 basis points. Some important economic data later on today. You'll get the JOLTS job openings ahead of what we've hardly talked about so far this week. Payrolls just a few days away. Payrolls coming up on Friday. Under surveillance this morning, tariffs for national security.
This is the first time that a president has invoked tariffs on the basis of a national emergency. What you're seeing play out right now is the president's emphasis on border security. And he ran, of course, on the border and on inflation. And he is taking extraordinary steps to do something to tackle the number one priority, which is addressing the illicit flow of fentanyl and illegal immigration. And he is willing to take the punch.
So here's the latest this morning. President Donald Trump imposing 10% tariffs on imports from China and calling on the Communist Party to do more to stop the flow of fentanyl across U.S. borders. China opting for a measured response, enacting a 15% tariff on energy imports and targeting a handful of U.S. companies. Anne-Marie joins us now from Washington with a special guest. Good morning, Anne-Marie.
Good morning, John. That's right. I'm joined by Sarah Bianchi, who's a former deputy at USTR under the Biden administration. She now is head of international public policy at Evercore ISI. Sarah, thank you so much. It's been really an incredible 24 hours when it comes to Trump and it comes to tariffs. What happens next? What are you watching?
Well, obviously the Canadian and Mexican skirmishes are on pause for now while they continue negotiation for the 30 days. I assume they will continue to make progress. I don't expect to see across-the-board tariffs on Mexico and Canada. I do expect ultimately they will pivot into a broader conversation about trade and USMCA. China, well, we're just getting underway on that one. I think Beijing did, need to look strong in responding back, although it is a measured response. That one could go on for a while. There's a lot of complexity in that relationship and a lot of things to work out.
When it came to China, John called it a pinch, really not a punch. It seems almost like a warning shot. But given how Trump reacted with Mexico and Canada, got on the phones with both those leaders, he's teasing out this potential call with Xi Jinping. Do you think there's a chance that they could walk these back as well, claw back these tariffs when it comes to China?
Anything's possible, but I do think it's less likely. And regardless, I do expect this year we're going to see higher tariffs on China that are lasting. I expect the administration to go back to its initial 301 investigation. I expect there to be a lot to say on export controls. So maybe he pulls back briefly, but I think it's much more likely these ones stay in place.
Okay, so Mexico and Canada is a bigger discussion, potentially the end goal about USMCA. Maybe Trump wants to enact more when it comes to that trade agreement. China, this is going to be a long battle. Europe. What happens with the European Union? Trump was once again in the Oval Office listing off these grievances and told the world they're going to be next.
Well, Trump has always had a lot of issues with Europe, and I do expect that here, Trump uses tariffs for all sorts of reasons. He uses it for leverage on other matters. He uses it for retaliation, for reshoring. With Europe, it seems to be about a couple of things. One is other issues that he cares about. Buying natural gas from the United States, participating in NATO. But he also has grievances about unfair tariff rates. So the tariffs coming in on U.S. car exports are higher going into Europe than when they come here. There's a lot left to discuss about steel. So this one's going to be multifaceted, and I think will take time.
What do you tell your clients to prepare for this kind of environment we're dealing with?
Well, I think you have to watch each time what exactly is Trump solving for with this particular issue. And I think this one was very, very clear that it was about immigration and fentanyl and that he wanted concessions there. That made us think that it was easier to resolve. Also, when he does things permanently, we don't tend to see across-the-board tariffs. We don't tend to see him hitting the auto industry or the gas industry. So on those kinds of ones, the off-ramp is a little bit easier. When it comes to things like strategic sectors for China and Europe, there you have to watch a bit more of a balanced negotiation that's ongoing between experts and potentially more lasting tariffs in place.
We're still waiting for the head of USTR to have his hearing to be confirmed. That's going to be Jameson Greer. How do you think he's going to approach all of this? Is it going to be under 301 and his portfolio, or would Trump try to use IEEPA, 232? How is he actually going to enact this tariff agenda?
Well, Jameson Greer is a really good guy and very knowledgeable about all of the tools for trade. So I expect him to use all of the above. Even though IEEPA is not the USTR's authority, I think in certain cases he will argue for that. On China, I expect him to look back to the 301 that the Biden administration, the Trump started, and then Biden kind of re-upped to reopen that conversation, 232s. But again, like Lighthizer, who Jameson worked for, he is very, very knowledgeable about all the tools and also about all the relationships and some of the stakeholders who are going to come in on any particular issue. I think he'll be a very helpful addition.
I call him Mini Lighthizer. Robert Lighthizer, Ambassador Lighthizer, is not part of this administration, but this is probably for the Trump world the next best thing, that individual who was really trained under him. When it comes to China, Jamieson Greer in the past has said that we should be decoupling. Do you see that the direction of travel for the Trump administration? Or do you think Trump actually wants to be more nuanced because he wants a deal out of Beijing, whether or not it's with autos or whether or not it's with China putting the thumb on Putin to strike a deal in Ukraine or potentially something like TikTok?
So it's very interesting. I think that we are going to see a lot of transactions between the Chinese and Trump around issues that you mentioned, TikTok. But whether or not we have some kind of grand bargain that addresses all of the issues that the United States has with China right now, particularly around export controls and really complex technology, I think that's a little harder to see. I don't think that Trump himself or his people feel particularly reassured that China delivered on the Phase 1 agreement last time. I think all evidence is to the contrary. And there is a lot of concerns around technology. So where I see that we are going to still see this decoupling in sensitive areas, maybe not across the board as Jamieson might want. And I do think that leaves some opening for deals. But I think there's a lot of complex things that have to go right. First of all, I really do believe President Trump is very interested in resolving this TikTok thing. He sent a message to a lot of people that he's on the ball for that. So
Sarah,
that's
all the time we have this morning. Thank you so much for that, Sarah Bianchi. Jonathan, she was in the room in the past, former USTR deputy under the Biden administration. One thing pretty clear from that conversation, this is just the beginning.
Anne-Marie is set to continue. Appreciate your time. AMH down in Washington, D.C. Up next on the programme, we'll catch up with Sucharita Kodali of Forrester Research on the retail and supply chain outlook as trade uncertainty lingers.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Equity futures just unchanged on the S&P 500, 2 hours away from the opening bell with your morning movers. Let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. Dan Ives said the Palantir press release was so good, you want to print it off and shove it in the Louvre. There you go, up 22%. Two-thirds of their business comes from the government. Doge for them, with Elon Musk, it's like manna from heaven for them. They basically said that. It's a windfall for them to come 22.3%. I love this. Untamed organic growth. It's like unbridled exuberance in this stock. Commercial sales in the US for this year, going to be up 54% at over $1 billion. They're in a new phase. That's the CEO's line. Bank of America has a price target on this of $125, 43% as of the close last night. So we've done 20% of that, or 50% of the move so far. Spotify. This time last year, the headlines were Joe Rogan re-signed for $250 million. They spent $1 billion on podcasts last year, and that's what irked the market last year. We're up 10% this morning. Premium subscribers, they are rolling in quite nicely. In that back quarter of last year, they added 35 million users. That's the best fourth quarter for them ever. And they turned a profit, 367 million. So this is about raising your subscription prices. Are you still on the free version, Jonathan, or have you paid up and looked large? Close it off with Estee Lauder. This is about the reality of change costs. Costs $1 billion, costs nearly 7,000 jobs, and your net sales for this quarter are going to be down by about 10%. Why? Because the travel in Asia is lower. The duty-free sales are under pressure. Consumer sentiment in China and Korea under pressure. And a double-digit drop in those global travel duty-free. For paraphrase, duty-free is where the real pressure is on this. Change costs money. Are you on the free Spotify?
I'm paid up, Manus Cranny. You know that. I hate commercials. You don't want to listen to music and get it interrupted by a commercial, do you, Bremo?
I've done that.
Really?
Yeah, I have. I have to be honest. Yeah, exactly.
You've not paid up?
No.
Okay, you're in the gym.
Okay.
Okay, last set, big push, last 5 minutes of the workout, and then a commercial kicks in.
I know, that's why I listen to podcasts. It's true. And it's to get around that rather than just pay it, which is just the obvious logical thing. I don't want to be having this conversation on TV. I don't know why I'm being so honest.
Yeah, all right. Okay. I'm going to pay it for you. All right?
I'll pay it. I'll pay it tonight.
Under surveillance this morning. China retaliating against President Donald Trump's 10% tariffs with levies of its own. Beijing slapping a 15% tariff on just under $5 billion of US energy imports and a 10% fee on oil and agricultural equipment. China also adding at least 2 US firms to a blacklist. This is the pushback, if we can call it that, from the Chinese side.
This is the smallest amount to save face while not actually inflicting any damage. Oh, and guess what? This goes into effect on February 10th. They're supposed to talk today, so maybe it could be rolled back. There's a larger question of what this trade skirmish looks like. It won't look like Mexico and Canada. This isn't going to be something that you can very easily placate with a couple of measures and orders that already were going into effect. That's what I think people are looking at.
So China's playing the long game. I think the United States is as well. I don't think we should confuse short-term goals with long-term objectives. The US administration under Donald Trump has already got some concessions from certain countries. That's good. Step one. The long-term objective, though, is still the same. This president wants that manufacturing production to come back to the United States of America. Now, we can have some debate about the best way of doing that, or whether it can even be done. But that's the goal. That's the objective. BMW's factory in South Carolina in Spartanburg, they want thousands of them. They want more of that. And they think the best way to do that is to put the walls up and tell people you can't export into us anymore. What you need to do is invest and build a plant here, and then I'll drop corporate taxes for you. I'll make the economy a fantastic place to invest, not export to. They're two very different things.
China also has a very different type of parameter than, say, Mexico or China or even Europe. Is the U.S. really going to say, we want you to come build your factory here and then send all the data back? There is another national security overlay that makes this conversation much more complicated, which goes to TikTok, having to do with who might be owning it.
It's deeply complex. Let's talk about TikTok. President Trump signing an executive action he says would direct officials to create a sovereign wealth fund for the United States. The Treasury Secretary Scott Bessent, a Commerce Secretary designate Howard Lutnick, likely to lead the effort. Trump suggesting the fund could be used to facilitate the sale of TikTok. We've heard rumours of this over the past few years.
There are a lot of questions here. Where are they going to get the money? If it's a sovereign wealth fund, is it going to come from oil and gas the way that it has in Norway and some states in the United States? Then what are the parameters around what they can invest in? Is this a matter of just investing in, say, pharmaceutical companies that you're buying syringes and vaccines from? Or is this some kind of strategic fund that can be allocating in a very specific way to try to gain money? Then there's a question of who's going to run this. It's the Apollo Global Management co-founder Leon Black's son is going to run this. There's a lot of questioning here that needs to be evaluated. At the same time, it's actually an interesting idea, and it's one that actually Biden had a similar thought too. So you can't dismiss it, but a lot needs to be determined.
Do you remember the original deal, the original TikTok deal? And this should be on like those quizzes you do at the end of the year, and you should ask the staff if they remember the original TikTok deal. Wasn't it Oracle and Walmart? I think it was the two of those companies. And I think at the time the president made the point that he should get a cut. The Treasury should get a cut for brokering that deal. Is that where this is going? Does that even work?
That they're going to get a cut from it? No, it doesn't work. And where are they going to get the money? Are they going to borrow it at 4.5% and then invest it? Is it going to be a hedge fund? Is it going to be something that's going to be raised from certain levies? Is this going to be where all the tariff money is going to go and then get invested in TikTok's potential acquisition by somebody else?
That could work. That could work, potentially, sure.
Okay.
That could work.
We're giving free ideas here.
We'll see if that does work, if that's the way they move forward. Elsewhere, Israeli Prime Minister Benjamin Netanyahu set to meet with President Trump in the Oval Office at 4 p.m. Eastern Time. The two set to discuss the ongoing truce in Gaza, which Trump's Middle East envoy has indicated he wants to make permanent.
There have been a lot of changes going on with Israel, given the fact that the hostages have come back. There's a hope among a lot of people in Israel to continue with the ceasefire, also in Gaza. Big questions around who potentially could come into Gaza for some sort of two-state solution. And Donald Trump has been pretty aggressive in saying that maybe they should all move to another country, the people who live in Gaza. There has been so much pushback to that and a lot of anger on the part of allies in the Middle East toward the United States. Nonetheless, this goes to the idea that in Israel, a lot of people think that Trump is responsible for the ceasefire that has gone into effect. How can he push that forward at a time where there still is a lot of complicated negotiating that has to happen?
It's week 3. I think it's important to keep counting. Only week 3. It's kind of amazing, isn't it? The third week of the US administration.
Another year?
The to-do list is very long. A lot of people think that the previous administration did not get enough done, particularly in this region. The to-do list is very long, and I think they're only just getting started. Obviously, we've got 4 more years to make a real change. Equity futures then just about positive here on the S&P, but I think we can call it just about unchanged. I want to turn back to trade. Retailers bracing for the impact of President Trump's tariffs. Sucharita Gadali of Forrester Research writing, tariffs will inevitably hurt US GDP. The sectors most likely to be impacted are electronics, toys, and some components like plastics, which are in nearly all of our consumer goods. Sucharita joins us now for more. Sucharita, welcome to the program. I'm actually more interested in what happens to some of these Chinese retail players that have been selling into the United States at really, really discounted levels that won't be able to get certain breaks anymore. How much of a change are we going to see with that so-called de minimis exception? How much does that change?
Well, there is the executive order called for the tariffs on all goods. So that assumes that the de minimis exception is going to be eliminated. And also you combine that with the Congressional Budget Office's call for getting rid of those exceptions, too. There's no question that that is not a good thing for players like Temu, Shein, even TikTok Shop, particularly if they are selling from the Chinese sellers in overseas. This is not a surprise, to be honest. We have been talking about eliminating the de minimis exception for a long time. So this should not be a shock to sellers. This should not be a shock to consumers. But yet everyone is acting as if this is some new thing. My hunch is that some of those sellers may have already started to divert some of their goods to other regions so that the shipments aren't labeled as coming from China. So that's a way to circumvent it. Not something that I would advise, but likely happening. And otherwise, there will likely also just be some demand decreases or just some compression in any profitability, because some of these companies are absolutely going to have to absorb those differences in prices.
It's something that Gita Gopinath has talked a lot about at the IMF, the idea that when you put tariffs on, you put obstacles, just more gets funneled through Thailand, through Vietnam, through Malaysia, through the Philippines. And we've seen that with increasing volumes of imports from the United States, from those regions into the United States. How much do you expect that to accelerate the more that tariff talk continues?
In the short term, it will likely accelerate a lot. But in the long term, the United States is going to have to figure out how to reduce some of that diversion. And that can be through imposing tariffs on some of those regions of the world as well, or doing a better job just monitoring what is coming in. In this age of AI and camera vision and being able to automate more things, there's really no excuse for not being able to better track what comes into the United States through the ports. But yet there still seem to be claims that it is incredibly onerous and difficult to do. So I would probably allocate more funds to trying to figure out how to better monitor what is coming in versus some of the expenses that we're already doing that are not necessarily the most effective use of some of our artificial intelligence solutions that are out there.
John and I were talking earlier about how the ultimate goal of a lot of these tariffs, there are a number of the goals, but one of them is to increase production back home, bring it back home to the United States. How realistic is it for some of the retail companies to concentrate production in the United States and bring it back at a feasible price?
Well, in some cases where you can have a heavy degree of automation, it may actually be fairly viable. You see that in the automotive industry where there are factories that are producing goods, like, for instance, BMW, as was mentioned earlier. And they're able to do that if there is a heavy amount of automation. For those categories, like, for instance, perhaps apparel, where they're still very, very manual, that may not be realistic. And we're talking probably more about nearshoring to other regions that are closer to the United States. I think that really there are a couple of things with China. One is that there are geopolitical issues related. Oh, sorry. You can't hear me still?
No, we can hear you.
Okay. So there are issues that are related to concerns around Taiwan that are related to China. But in the case of Canada and Mexico, I think what is really there is about improving the number of exports so that the balances of trade are not as skewed, so that our American companies are able to export more. So I don't think it's necessarily about bringing manufacturing back, but increasing the manufacturing of the companies that are already sending to those regions.
Sucharita, there was a theory before some of this started that the biggest companies would have the easiest time negotiating new contracts, navigating through supply chain disruptions and rejiggering. Do you think that's still true, that the Walmarts of the world, that some of the biggest retailers will do better than, say, smaller ones?
Likely that is true. Certainly the bigger companies have the ability to move their production to different parts of the world. But there are a number of multinational companies that actually have very, very heavy presences in China. And they are absolutely nervous and trying to cut out different exceptions to some of these tariffs. That could be companies like Apple, Starbucks, even Tesla. Certainly the casino companies, which have a significant percent of their revenue coming from Macau. So there are a number of different players that absolutely want to see these situations resolved. And regardless of the level of negotiation of physical goods, they are still dependent on either Chinese manufacturing or Chinese consumers. And that puts them in an extremely vulnerable situation. So it's a complex story. There are companies that are going to be winners in all of this, and there are companies that are not going to win because they made bets on China that were decades ago that are going to be very, very difficult to unravel.
Everybody wants a carve out, that's for sure. Sucharita Kothari there at Forrester Research. Sucharita, thank you. Thanks very much. Howard Lutnick sat in this chair just to the left of me a number of months ago. That's the Commerce Secretary Designate. Do you remember? Will there be carve-outs? And he said there will be no carve-outs. Now, of course, since then, Donald Trump has won the election and he's been nominated to be the Commerce Secretary. I'd love his thoughts on that now. Will there be carve-outs?
So far, there have not been carve-outs. It's very early in this process, and as the China wars start to heat up, that might be a different one down the pike.
Yeah, Diplomat Kirk is going to dial 1-800-White House.
On his iPhone.
Yeah, probably. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hacker. Say, Yahara.
Hi, John. El Salvador's president offered to accept convicted criminals of any nationality, including American citizens, and house them in a mega prison for a fee. Secretary of State Marco Rubio praised the offer as unprecedented without saying whether the Trump administration would accept. Meanwhile, Spotify shares are rising in the pre-market, up nearly 10%. The company posted better than expected subscriber growth and its first ever annual profit. Spotify shares rose more than 135% last year as the company's CEO prioritized profitability after years of expanding into audiobooks and podcasting. And Salesforce is cutting more than 1,000 jobs at the same time it's hiring workers to sell new AI products. That's according to a person familiar. The company is focusing on maintaining profit margins after pressure from activist investors last year. Salesforce is expected to report earnings at the end of this month. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, Europe in the trade crosshairs.
The European has abused the United States for years, and they can't do that. And they want to make a deal. Let me tell you, in all cases, they all want to make deals.
Up next on the programme, George Saravelos of Deutsche Bank on the volatility in this FX market. Stocks and bonds just about unchanged. We're going nowhere on the equity benchmark on the S&P 500. Going somewhere in the bond market, kinda. Up 2 basis points on 10s, the 457. In foreign exchange, the euro negative again, down 0.1%, 26. Under surveillance this morning, Europe in the trade crosshairs.
The European has abused the United States for years, and they can't do that. And they want to make a deal. Let me tell you, in all cases, they all want to make deals. There's nobody that doesn't want to make deals. All we want is a fair deal. And you know, there's a word reciprocal. I'd go right now, reciprocal tariffs on everybody. Well, they charge us tariffs. The European Union is a VAT tax, which is through the roof.
So here's the latest this morning. EU leaders scrambling to avoid their own tariff war with the US as President Donald Trump threatens to slap levies on the bloc. George Saravelos of Deutsche Bank saying euro-dollar is at risk of parity, writing the drivers of euro-dollar can be broken down into two parts: relative monetary policy and a tariff risk premium. George joins us now for more. George, welcome to the programme. Let's talk about the second part, that tariff risk premium. How big is that?
So, John, I think it's the key question for the next few months. And on our end, we're not spending much time trying to predict what President Trump will do. I think the experience of the last few days has shown it's not a very fruitful exercise. It's all about trying to figure out what the market's pricing and therefore the risk distribution around events. And when we look at the so-called tariff risk premium, and you can see it in many different parts of the market, you can see it in the US inflation curve, you can see it in the deviation of the dollar from fair value, you can even see it in what's known as the EFP in COMEX futures for gold. When we look at all these tariff metrics, they've been sending a consistent message that the market's pricing a very limited tariff risk premium. It again tried to price more yesterday. It's now reverted back. But it's precisely because that tariff premium is still quite low that we see the risk distribution skewed towards essentially pricing in more tariffs if and when they materialize.
George, is that just the euro, or can you say the same thing about the Chinese currency?
I would say it's across the board. If you're looking at all global markets, whether you're looking at fixed income and the so-called inflation hump that's priced into break-evens, it is still, that inflation hump is still very low. It is definitely valid for the dollar. When you're looking at the euro, for example, when we mention parity, that is not a forecast, so to speak, that's set in stone. It's just that if you get a reasonable outcome in terms of tariffs around the midpoint of the range that's been discussed, that's where we'd get to. Of course, if you get even worse outcomes, it could be bigger. China is more difficult because this is a policy-determined currency. The market is not free-floating. And I think this one is where the specific policy choices by the authorities will play a much bigger role.
George, you talk about the trade war risk premium, and that typically has been strong dollar. We've been talking on the show about at what point the hangover effect of the tit for tat of trade negotiations, trade wars, ends up with the rest of the world trying to withdraw money from the United States, not put money into the United States. How much and how closely are you watching? What indicators to maybe suggest that the appetite for the dollar was starting to wane?
That's a great question, and I think a very important one. So the way we think about it, first of all, is relative economic impact. You have to think about currencies in that way. And the US possesses a number of unique features. It's the world's largest economy. It has the lowest share of trade. It has a big trade deficit, and it's very services intensive. And President Trump, of course, knows all these things. But what that means is that every time tariffs are threatened, it has an asymmetric impact on the rest of the world. And that's exactly why the dollar is strengthening. I think what you would need to see for an unraveling of the inflows you allude to is essentially a big US-centric growth slowdown that's more sharp than the rest of the world, that causes the Fed to become more dovish. And so far, especially given that tariffs are tied in with the fiscal negotiations, potentially in a fiscal expansion, we don't see any signs of that.
In the meantime, there is the likelihood, as you said, the disproportionate effect in other countries, that if tariffs do go into effect, or even the suggestion of them will slow economies like Canada, we heard that from the Bank of Canada, or potentially in the European Union on the margins, even though this is a single mandate ECB, do you expect them to cut rates more aggressively to counteract some of that potential growth shock?
Well, again, the ECB is a huge focus. And to go back to the point around the tariff risk premium that was priced in, up until last week, the market was pricing the ECB to stop above 2, around 2.1, 2.2. Now, if you think about that, that was at the upper end of the neutral range, which Lagarde alluded to, 225 to 175. So our view on the ECB has definitely been more dovish than market pricing. If you take a step back, European growth is below trend. Forward-looking numbers of inflation are pointing at or below trend. You've got a net fiscal stance that's tightening and tariff risks. So we see the ECB potentially cutting down to 150. The market has adjusted over the last few days, but I think, especially versus the Fed, we see that rate differential widening again.
So, George, when you say that, I just want to jump in. I'm surprised that that's even somewhat contrarian right now. It's surprising to me that ECB officials are still talking about neutral and not talking about getting accommodative. When's that going to change?
So it's a very interesting point you raised, John, because the narrative in the market is that the ECB should be cutting more. But I always like distinguishing between the narrative and what ultimately matters, which is pricing. And if you look at market pricing for the ECB, it has been fairly hawkish. It's been above 2. Why has that been the case? You have had some rise in energy prices, and the ECB is sensitive to that. But I think crucially it's the ECB communication, especially from those hawkish members, for example, Governing Council member Schnabel. And I think what is required to change is for these members to gradually accept that the ECB is going to need more, to do more, and I think we will get that over the next few months.
Hey, George, clinic from you as always, sir, on foreign exchange. Appreciate your time. George Saravelos there of Deutsche Bank on the risk of a return to parity on euro-dollar. Parity, of course, just around the corner. Two-part story for them, relative monetary policy and a tariff risk premium. And the latter surely informs the former.
At a time when you have, in particular, German members looking to maybe keep rates a little higher.
Up next on the programme, we'll catch up with Kevin Gordon of Charles Schwab, Angelo Zeno of CFRA, Greg Dacko of EY, Tony Rodriguez of Nuveen. The third hour of Bloomberg Surveillance. Up next.
Doesn't look to me like Wall Street has priced in these tariffs going into effect on a sustained basis.
I feel like the risks are much higher than people appreciate.
The biggest theme is risk off.
You think we're at the beginning of a multi-year move out of the U.S. into non-U.S.
There's so many unknowns. Our approach is, you know what, we expect nothing, but we plan for everything.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Today is just a fantastic example of beating expectations and a very low bar. The headline should be a 10% tariff on China goes into effect. But the headline that you get on tariffs is actually we've avoided tariffs on Mexico and Canada of 25%. We're talking about something else when typically we'd be talking about China and that one thing.
Which goes to the point of signal versus noise. And how do you decipher at a time where this is just the beginning? We're what, week 3?
Week 3.
I mean, to me, just to try to wrap your head around that, to understand what the destination is at a time where you're going to hear a lot of potential threats, a lot of potential tariffs and announcements, et cetera, and they could get walked back the next day, or in the case of China, they could not.
They stick. Equity futures right now just about positive on the S&P 500. On the Nasdaq 100, up by 0.2%. Big event for the Nasdaq comes after the closing bell. You'll get earnings from Alphabet. Before all that, you'll get some important economic data. Job openings coming at 10 a.m. Eastern Time, and a sprinkle of Fed speak through the session.
Fed speak is going to be what you expect. We don't know. We're going to have to watch the data. We can afford to be on hold. Okay, park that. JOLTS will be interesting because you get a sense of the actual real economy and just how tight the labor market actually is. But more importantly, this week, you get almost a quarter of the S&P 500's market cap reporting. Alphabet is one of them. Amazon comes later in the week. The earnings calls, how forward guidance can really be delivered at a time where there is that much uncertainty, that I think is potentially going to be the big event of the week.
Very dependent on what industry you're in, but We've seen a few interesting examples over the past week or so. You mentioned GM last week, came out with guidance, people didn't believe it. Diageo over in the UK didn't bother coming out with guidance. In fact, actually had to suspend its sales target. Why? Because of tariffs, couldn't offer any. This applies to central banks too. You mentioned the Fed speak. They can't offer any clarity. If they ever could, about the future. They can't give you visibility. The Bank of Canada in the past week, you were talking about that too. They cut interest rates and basically said there's no point providing guidance. We don't know what's going to happen here. The only thing we can do is provide you some comfort that we're doing what we can just in case it does happen.
And you made the really important point earlier. All of this has a drag on some level if it continues for a longer period of time. There is a feeling that it is a pro-growth type of moment. And yet, if you have companies that are unable to make certain types of investments that could potentially get caught up in the crosshairs but don't, does that start to drag on sentiment? And do you start to feel that? We're not there yet, but we did see the S&P 500 not recover yesterday the same way that some of the other currency pairs did, and that is somewhat telling.
The overall policy platform is still pro-growth. The overall platform is still pro-growth. We've talked about this repeatedly through this morning. You want to see that confidence translate into investment decisions. You want to see that confidence translate into hiring decisions. In a few months from now, I want to see job openings up, not down. I want to see decent payrolls growth. I want to see people be confident that unemployment's not moving in the wrong direction. You need to keep that confidence. Don't take it for granted.
I think you should run. That sounded like a really good speech. I want people to look out over their horizons and feel like they have opportunities. I want companies to feel the confidence to go out there and invest. It was good.
I think Kevin Hassett's job safe at the NEC. Thank you. Coming up this hour, Kevin Gordon at Charles Schwab as markets grapple with trade whiplash. Angelo Zeno of CFRA previewing the latest earnings from Alphabet, and Greg Dacko of EY on the economic impact of trade uncertainty. We begin this hour with stocks lower. The eyes of the world on Donald Trump's next move. Joining us now from Washington, Bloomberg's Anne-Marie. Morning, Anne-Marie.
Good morning, John. When it comes to the next move, I think you have to just look directly to the European Union. He already dealt with Canada and Mexico. Those tariffs were walked back, 30-day pause. We do see both those countries adding more to a robust border security, and also Canada saying they're going to have a fentanyl czar. And the Trump administration is really going out and branding that this was for the American people, and really him owning up to what he promised on the campaign trail and doing more when it comes to immigration. The Wall Street Journal says that Trump never admits a mistake, but he often changes his mind. And they say that's what he did yesterday. When it comes to China, though, potentially this is an opening salvo. Those tariffs went into place and we saw rebuttal from China. Now, they weren't massive, but they were calibrated. Xi Jinping clearly wants to make sure that he's not going to backfire on his own economy. And even when it comes to China, there's this potential for some deal to happen. Maybe it'll take longer, but potentially we could see a phone call as well between Xi Jinping and Trump. And then finally, Europe. We don't know what he's going to do. We don't know when he's going to do it. But this is what we do know. In the past, he's taken aim at Europe. And yesterday, he listed again a number of grievances he has with the European Union when it includes things like cars and farm products. Because when it comes to those tariffs, the gap is much wider than it comes to most normal everyday goods. So Europe is going to be next. That's what he said. We're just waiting on timing and the scope. We're living in an area of uncertainty right now, but we do know that Trump likes to use tariffs, and he's delivering on that promise.
Anne-Marie, we've been discussing whether he's trying to get out of the way some of the less growth-forward types of policies before going into some of the tax cuts and the other deregulations. Do you have any sense of your conversations down in Washington, D.C., that is the case and the goal of doing all of this up front?
As one person put it to me, Donald Trump is doing everything, everywhere, all at once. So while he wants to recalibrate trade and he wants to make sure he's focusing on the southern border and on fentanyl, and he's using tariffs basically as that negotiating tool, at the same time, of course, there are people in his administration that are looking to Congress and to trying to make sure they can get this tax bill done. But tariffs can happen immediately. We've seen that overnight when it comes to China. It's going to take a lot more work for this administration to work with Republicans on the Hill to get through their reconciliation package. I mean, some members of the Hill are still debating whether or not it should be one or two bills. They also need to make sure that they extend government spending, and potentially in March, the government could run out of money and we could see a government shutdown. And of course, they have to deal with the debt ceiling. All of that before they get to tax cuts.
Anne-Marie, on the latest in the nation's capital, a steep hill to climb to get all of that done. Kevin Gordon of Charles Schwab with this to say, if we are to learn anything from the 18-19 trade war, it's that markets do not price everything all at once. We have no clarity in our crystal ball on how this will all play out. Kevin joins us now for more. Kevin, welcome to the golden age of volatility.
Thank you. Nice to see you.
Quite something, isn't it, over the past few weeks? It's only week 3. Do you just stomach the volatility and just accept, believe in the pro-growth platform of this administration and stay long?
Well, stay long in the sense if you're lengthening your time horizon, yes. Because if you shorten it too much where you're trying to react to and digest all these day-to-day moves at every single moment, it's whiplash, it's exhausting. It's impossible to do in terms of trying to game out or forecast what's going to happen. But I think that, I think back to when we wrote our outlook for this year, you talk about stomaching volatility. I mean, our view this year, and you're already starting to see it play out, where the dynamic is probably going to be flipped versus what you saw in 2024. 2024 was amazing from an index level volatility standpoint. The max drawdown that you had for the S&P was 8.5%. All of the churn and the scarring that happened was at the so-called, individual member level, where the average max drawdown was more than 20%. But you didn't see that at the index level because it was just happening via rotation all year. Now, not that we're expecting imminently some 20% correction in the S&P this year, but there's going to be probably more of a struggle at the index level, in part because of what we've seen over the past week with some of the mega caps being more of a drag, but also because of the volatility that comes from anything tariff related. I would also argue immigration policy related. But clearly, tariffs have been in the driver's seat. But that makes it a much more challenging index level environment.
If you put a chart of the index up on the screen like we just did, it goes up and to the right. There's no problem there. You wouldn't be able to see that one of the biggest weightings in that index has had a more than 20% drawdown. Nvidia. What do you do with those kind of names? And I know you can't do single names, but the kind of names, the sectors that are getting beaten up at the moment, does it tell you about where leadership will be in the future? Does it give you any kind of signal with regards to that?
Well, in many ways, we've already had this signal from a sector standpoint. So that stock lives in the tech sector. The tech sector has gone nowhere since last June, which I find remarkable. That it doesn't get talked about a lot. But you're talking about the biggest sector with some of the largest names, which has become a dominant AI theme. It hasn't really moved much, and it's at its lowest since in early November. It's wiped out its entire post-election gain. So you've already kind of had the signal being telegraphed in some ways, where at some point at the summer, probably late summer last year, there was more of this broadening out trade that started to move more into financials, industrials, some of the more commodity sensitive parts of the market initially, but that has pulled back a little bit. And I find it remarkable that even within a group like the Mag 7, the 3 sectors that are representative, which is comm services, tech, and consumer discretionary, it's comm services and consumer discretionary that have really pulled forward and pulled ahead and kind of left tech in the dust. So if anything, if you're viewing it through the AI lens, I think that it probably speaks more to the fact that there is more to be had and gained from the rest of the market, not just a handful of names, not just one sector. So call it the AI adopters, now starting to catch some of the trade or some of the upside, and not just the AI creators.
I'm going to lean into golden age of volatility. You try to coin it. I think it's a really important thing to talk about. We're talking about volatility at a time where VIX is at 18. It's not actually rising that much. There is, however, every day a feeling that you have no idea what's going to happen. And the peak to trough on any given day is insane for specific names that are huge market caps. What's the hedge here? At a time where there's volatility in specific spots, but overall maybe things will even out and there's volatility in the messages and the truths coming from the White House.
I think the hedge is keeping your emotions in check, because this is not just volatility in the equity market.
But go on, yes.
The hedge is a therapist. I mean, the volatility is not just in the equity market. Now it's cross-asset. I mean, I think that probably what becomes more dominant, more of a focus in this next era that's dominated by tariff policy and immigration policy and down the line tax policy is in the FX markets. I don't think it's necessarily in the equity markets. And you can see that clearly yesterday with some of the moves. I know you were talking earlier, John, about the huge downdraft in the peso or the loonie, and then the massive upswing. You didn't have that kind of move in the equity market. You still closed down. Of course, you moved off the lows and closed off the lows. But I think a lot more signal is going to come from foreign exchange at this point because of not just the tariffs and the amount and the dollar amount associated with it, but just how much more fragile the global system is and the global backdrop is this time relative to 2018, 2019, especially because now you're talking about 2 major trading partners and allies, in addition to China. Last time it was really just China. So you add a whole nother layer of volatility associated with that because of who's involved.
Typically, when people are worried about risk, they go into the dollar. Right now, the source of risk is the dollar. Or not necessarily the dollar, but just the United States and the U.S. policy. At what point does that shift where the dollar doesn't have the same exact kind of knee-jerk response?
I think that's why the dollar becomes one of the most important, if not the most important thing to watch in the coming years, especially from a Fed independence perspective, not that we're worried about that imminently as some sort of risk, but at some point you have to imagine that there's going to be a little bit of a friction where if you do have a potential for slower growth, but you also have an administration that really wants lower rates, and you have an investor base that wants lower rates, but you have a Fed that probably can't move as much because there might still be an inflation problem stemming from whether it's a price level increase from tariffs or whether it's inflation coming from the labor market because we have suddenly, a lower labor force and lower labor supply. I think that's where there becomes an issue. Not that it is an imminent issue, but I could see that becoming a really dominant problem for the Fed.
Well, let's just finish on that one component of the story then. The bias of the Fed is still to cut interest rates, certainly not to hike. Is that bias to cut interest rates constrained by this? We had some pushback from BMO's Earl Davis yesterday, who said that wasn't the case. The Fed put still there, the bias is to ease. Do you sense that maybe that bias is constrained somewhat by the headlines we've had over the past week?
Well, I would probably just use Chair Powell's words. I think the three most important words from last week: we don't know. Nobody knows. And that's the tough thing about days like yesterday and now this new era that we're in from a trade policy, trade war, trade dispute perspective, whatever you want to use to label it, is that the fog now is so dense in terms of what this is going to mean for business capex, what this is going to mean for inflation. Because you think about the outcome of this, where you do have potentially aggressive tariffs going in place. Yes, at the outset, that's probably inflationary to some extent, especially if you have retaliation. But again, if we are to learn anything from 2018 to 2019, because that's really the only modern period we have for a trade dispute, it's that there was a meaningful slowing in business capex. I don't know if the fourth quarter, because we did have a slowdown and it went negative in the fourth quarter, as we learned from GDP. I'm not sure if that's a trend that continues, but if you see maybe a stabilization around that zero line for business capex, in addition to sentiment surveys that then start to roll over, that could be a problem for corporate America. It could be a problem for earnings. It's not our call, right away, but I think that's something that needs to be considered more.
When we have these debates, I think we've got to talk about what timeline we're on. If you want to stimulate a domestic supply side response, it's going to take a long, long time. In the short term, people just won't make those decisions. They won't make those decisions until they've got long-term clarity on what's going to happen with policy.
How can you have long-term clarity at a time where we don't have clarity on, 30
literally.
minutes from now?
What's going to happen next week?
Exactly. So there is this sense of paralysis, but longer term, it might become easier if there are some longer term Congress-led types of measures.
I always said that strategists should do a course in psychology because half the job is providing therapy to investors just to stay invested.
Well, that's what we just heard.
So it's like hand-holding.
The hedge is not gold. The hedge is not treasuries. It's sit down.
I think
Let's talk
Kevin's
about
living
the facts.
that every single day. Kevin Gordon, Charles Schwab. Kevin, it's good to see you.
Good to see you.
Appreciate it. Thank you. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hakkas. Hey, Yahara.
Hi, John. President Donald Trump wants something in return for helping Ukraine defend itself against Russia. He says his administration wants access to Ukraine's critical mineral resources like uranium, lithium, and graphite, which could be worth trillions of dollars. President Zelensky offered Western allies access to these resources as part of his victory plan last year. Meanwhile, Indian Prime Minister Narendra Modi has been invited to the White House. According to an official, Modi will meet with President Donald Trump next week. Modi seems to be on good terms with Trump. His government has made a series of concessions in recent weeks, including an overhaul of its tariff regime to try and avoid any clash over trade. And Pfizer shares are up 1.8% in the pre-market after beating expectations on strong sales of its COVID vaccine and pill. It's a welcome result for the pharmaceutical giant as it seeks to fend off criticism from an activist investor arguing the company squandered its pandemic gains and needs a new path forward. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in 30 minutes. Up next on the programme, the Morning Calls Plus, Angelo Zeno of CFRA previewing the latest earnings from Alphabet. That conversation just around the corner. The opening bell 1 hour and 11 minutes away. Equity futures on the S&P 500 just about positive by 1/10%. In the bond market, yields higher by a few basis points. We're up to 457.56 53. Let's get you some morning calls. First up, KeyBank reiterating its overweight on Spotify, highlighting premium subscriber momentum. That stock's flying. It's up by almost 9%, and Bramo promises
I will
to get a premium subscription.
I'm going to. My workout's going to be amazing.
Your second call from Evercore, upgrading Marriott to outperform, citing a constructive view on travel demand. How do you work out with commercials anyway? That stock's higher by more than 1%. And finally, Morgan Stanley upgrading Palantir to equal weight, noting a lack of downside catalyst, that's for sure. That stock's flying. Untamed organic AI demand. What a headline coming out of that company. The stock is up 24%.
What can they do next quarter? Unruly, demand. I mean, how do you sort of make this even better? But they are the big beneficiary. And to me, your question to Dan Ives, how much of a shift are you seeing the real winners become a very different cohort of stocks?
There's a new AI darling right now, and it's not Nvidia, it's that one. And that stock performed, that's for sure, in 24, up by more than 340%. Let's stick with tech. China launching an antitrust probe into Alphabet, the US tech giant reporting earnings after the closing bout today. Angelo Zeno of CFRA has a buy rating on the stock with a 220 price target. He joins us now for more. Angelo, can we just get something out of the way? How pointless is an antitrust investigation into Google in China?
It's very pointless. I mean, it was probably the first thing I thought of when I saw the news, right? I mean, I don't think investors are going to really think twice about this. I mean, the stock's not reacting to it at all. I think it was just kind of, China trying to add something else to kind of some of the tariff news that they threw out there, to be honest with you, kind of something on the headline side of things. And, something that you can say, hey, listen, we're attacking one of your kind of mega cap type names. But really, it's irrelevant, to be honest with you, for investors.
So let's focus on the relevant news, the news we get later, the earnings. What can we take from what we saw from Meta, from Microsoft, to gauge how we might see Alphabet perform a little bit later?
Yeah, so as far as Alphabet is concerned, I guess, you take away a little bit of from Microsoft and a little bit from Meta in some respect. On the Meta side of things, obviously it's all about kind of the digital ad side of things, and that looks pretty healthy as far as what you can extract for Alphabet. Clearly Alphabet is driven by search, whereas Meta is more on the social media side of things. But our view is, expect better than expected results as far as search is concerned, at least low double-digit growth. So for all intents and purposes, the run rate, it looks pretty healthy as far as search is concerned, not to mention the presidential election out there. It definitely helped Meta's numbers and should also help Alphabet's numbers. And as far as the cloud business is concerned, that's probably the most important thing we think from Alphabet here over the last couple of quarters. Is what's really allowed Alphabet, we think, to have some relative outperformance here over the last couple of months. I think there's definitely some fear out there, kind of the long-term trajectory of maybe Alphabet's core business. But as far as cloud is concerned, we've seen growth accelerate in each of the last 4 quarters. Last quarter, we saw a growth rate of about 35%. More importantly, the operating margins within cloud look extremely favorable. We're now looking at a run rate close to 17%, where a year ago it was closer to 3%. So they're executing kind of on all cylinders as far as cloud is concerned. Growth rates will probably decelerate this quarter. But, based on what we've seen, from Microsoft and what have you, cloud growth looks pretty good still.
Just to follow on with that, Microsoft did say that they didn't have enough capacity to meet demand. And that was one of the reasons why people were a little tepid with their results. Do you expect a similar message out of Google?
Yeah, I mean, listen, as far as Alphabet is concerned here, I mean, on the cloud side of things, they're by far kind of the smaller of kind of the 3 big plays out there, right? I mean, Amazon and Microsoft continue to have the lion's share of things right now. So Alphabet essentially can take as much business as they can kind of essentially expand in terms of their capacity is concerned. So growth is not necessarily going to be an issue for them. It's going to continue to be, expanding that capacity and doing it in an efficient manner out there, which I think, the street is definitely keeping a close eye at. But when you kind of look at the last couple of quarters for Alphabet and you look at the CapEx levels, they've been able to kind of increase that capacity and look at growth rates at a much more kind of attractive pace relative to some of those other big mega cap type names. We'll see kind of what type of CapEx numbers they throw out there, but just given what we've seen here the last couple of quarters, expect them to kind of be fairly efficient in nature.
Angela, I do wonder what we're going to see in terms of efficiencies built in from the AI that's being deployed currently. We've seen a number of companies, tech companies in particular, lay off a number of their staff. Google or Alphabet might be a prime component of that, given that some of the machine learning programs could do some of the work that previous programmers and others could do. How much are you looking at efficiencies in some of these earnings reports?
I think efficiency is extremely important here. I mean, you kind of look, the last 2 years, we didn't necessarily see the efficiencies on kind of some of the AI adoption side of things. I think as you kind of go into 2025, into 2026, you're going to see a lot more efficiencies. Alphabet just kind of launched Gemini 2.0 back in December. That's going to, we think, lead to a lot more kind of, significant improvements in terms of reasoning capabilities. And what you can kind of deploy in terms of AI agents out there. We just kind of heard Meta last week kind of talking about an AI engineer that essentially you can kind of deploy a mid-level engineer out there at some point later this year. So you're going to see a lot more of that stuff, I think, as you progress through 2025 and into 2026. And I think that's why what we've told investors is to shift more onto the software side of things, because you are going to start seeing that AI monetization and those use cases really start to pick up as we go through 2025 and into 2026. I think Salesforce is another great example of that as well.
Angelo, in 10 seconds, what's their Waymo stake worth now?
Oh, that's a great question. I mean, I think the valuation of it right now is way less than what's being priced out there for Tesla. I don't want to necessarily throw a valuation out there, but they are accelerating the investments on that side of things. So we do think that there's a lot of upside potential on the Waymo side of things.
Think of all these powerful stories you're told about Tesla and full self-driving, and you've got Waymo over there getting it done, and Alphabet earns a big stake of that, Bramo.
Yeah, although hard to know how they're going to value that.
New reporting out of the Financial Times just moments ago. I'll share the lead paragraph with you. Beijing has reviewed antitrust, or rather revived antitrust investigations into Google and Nvidia while considering a new probe against Intel. They go on to say as China looks for new leverage against US President Donald Trump. So reviving antitrust investigations into Google and Nvidia while considering a new probe against Intel.
The nature of the probe into NVIDIA in particular hasn't really been specified. If you take a look at pre-market moves in NVIDIA, this spike of volatility, and then it went right back to where it was because people don't know how much. This is just trying to seem like maybe there's a little more muscle behind this than we're investigating a company that hasn't done business here since 2010.
If you asked a lot of these companies their one wish under the Trump administration, just to stay out of the headlines. They don't want to be in the headlines. Well, those companies are in the headlines right now, and not for good reason. Equity futures elsewhere doing okay, just about positive by 0.1% on the S&P. Speaking of the big tech players on the NASDAQ 100 higher by 0.25%. With 60 minutes until the cash open, the opening bell just around the corner. Here's Manus Cranny with your morning movers. Hey, Manus.
Jonathan, just on the back of those FT headlines, that's what Adam Posen talked about this morning. The kicker. This is the step up from the normal tit-for-tat between China and the US. And that is the much bigger risk. Palantir, what a press release. Dan Ives framed it beautifully, printed off. Stick it up in the Louvre. That's how good it was. This company is promising untamed organic growth demand in AI software. This is where the rubber meets the road in terms of efficiency. And as for Doge, it's going to be like manna from heaven for this company. Their guidance, 2/3 of their revenue comes from the US government. US commercial sales this year will rise by 54% to just over $1 billion. We're in a new phase, says the CEO, Alex Karp, and warned against technical complacency. So much so that Bank of America have upped their price target on this to $125. I mean, we've already managed to do 50% of the uplift in price. Roll it forward and have a look at Spotify. Again, it's about whether you sign up for the premium product, and 265 million people have, and that's way ahead of the estimates. It's the first ever full year of profitability, and this company was lambasted really for spending. This time last year, they re-signed Joe Rogan, remember that, $250 million, and the hubris was, you're spending $1 billion on podcasts? Now it's about the monetization of those. They've raised the subscription prices as well. I'm still on the free one. I've got plenty of other subscriptions. I have too many subscriptions. Estee Lauder, change costs, about $1.2 billion to $1.6 billion in restructuring charges. Nearly 7,000 to up to 7,000 jobs can go. Somewhere between 5,800 and 7,000 jobs will go. Net sales for this quarter will drop by double digit, by 10%. They've got problems at duty-free. They've got problems with Asia, sort of travel market as well. These pressures will endure. Soft retail trends persist in the Asia retail market. Stock down 7.4%. Maybe I should upgrade myself on Spotify. Another app.
I was saying to Lisa, let's get real. You're in the gym and you work out with Spotify on, and you're telling me you listen to the commercial breaks as that's happening?
No, definitely not. I'm with you on that last big push, and you just want to be solely focused. You don't want any interruption of anything like news from you or me.
What's that Rocky song?
I don't know.
What's that Rocky song?
I don't listen to it.
I'm a Tiger. Isn't that your gym song, Bremo?
And then Pampers.
Pampers?
The ad in between.
Oh, okay. Forgive me. All right, your workouts are different to mine. Okay, let's turn back to trade. Okay, economists passing through the potential impacts of President Trump's tariffs. Greg Dacker of EY writing, tariffs should create, keep it together, a stagflationary shock while also triggering financial market volatility. We expect US GDP would contract by 1.5% in 25 and 2.1% in 26 relative to our baseline. Greg joins us now for more to talk about trade. Greg, good to see you.
Good to see you guys.
Thanks
always.
for dropping by. Big changes from this administration for about 5 minutes and then they don't go on. As an economist, what do you do with the uncertainty in between? How does that change your outlook, if at all?
I think it's very important to factor the uncertainty because what we've seen is essentially a desire to work on four policy front: trade policy, tax policy, immigration, and regulation. But at the same time, there was this pro-business sentiment right after the election that essentially businesses would be supported in this environment and would drive stronger business investment, which was really the hope. What we're seeing and what we've seen over the last 48 to 72 hours is that there's also going to be this layer of uncertainty. And if we recall 2018, 2019, we had a similar mix of policy uncertainty that actually deterred business investment and hiring at a time where we were passing the Tax Cuts and Jobs Act. So you had trade policy uncertainty that was constraining to some effect the potential boost from tax cuts at the time.
Just to think about this logically, I can't think of a good reason of why it would hold back domestic capex. I can think of a good reason as to why it would hold back decisions about investing in places like Mexico or Canada. But for a US-based company, did we actually see them hold back on domestic capex decisions as well?
I think it's not about the last 48 hours. I think it's about the last few months where pre-election there was a lot of uncertainty as to who would win the election. After the election, there was a lot of uncertainty as to what policy would be prioritized. And what we're hearing from clients across a multitude of sectors is that there's a little bit of that wait-and-see approach. It's not a retrenchment approach. We're still seeing strong trends when it comes to economic activity. The economy in the fourth quarter is still growing around 2.5%. Final demand, very strong still. But we are seeing CapEx be a little hesitant. And my fear is that we start to see that replicate itself into the labor market. We have a robust labor market. That's a key fundamental pillar to the U.S. strength and the U.S. outperformance. If that starts to become weaker, that could be a catalyst for weaker income growth and more caution on the consumer end.
We do have some tariffs to talk about.
We do.
So not all of them were avoided. We've got 10% on China. Let's lean on the experience of 18, 19, and we can discuss the differences as well because there are many. I want to understand from your perspective on how you think these tariffs and the costs will be distributed. So I keep saying this up front just so we don't have to even deal with the debate. The tariff is, of course, paid by the importer. How the cost is distributed, though, is unclear. You can have the exporter drop prices. You could have the companies absorb it at the margin. Or, of course, this can get passed on to the end consumer. Given where we are in the economy at the moment, how do you think about how the cost gets distributed?
There are two factors that I think are really important to consider when it comes to the overall economy. One, we're coming out of an unusually high inflation environment. Over the past 2 years, we've seen inflation come down, but it reached levels that we had not seen in 4 decades. Very different than 2018, where we were coming out of 4 decades of low inflation. Number two, the economy is close to capacity. So that means that any potential supply pressures that comes at this time could be more inflationary than it usually has been. So you combine the fact that we have likely more pricing power or sentiment, a sentiment of stronger pricing power with the fact that the economy is evolving close to potential, and you have more inflationary risks on that front. Both of these, I think, are important to keep in mind when it comes to the overall inflationary dynamics. And I think that's why you're starting to hear a little bit more from the Fed leaning on the more hawkish side, that contrary to 2018, when it may have been optimal to look through these tariffs, there is a risk that inflation may become stickier.
Surely you would have to believe, though, that not only corporations will pass it through, that there is some price tolerance for the consumer at the other end, that they'll keep buying, that we won't just see demand fall off. Are we knocking on the door of the limits of consumer price tolerance in this economy?
I think we are. We're already seeing it in terms of lower to median income families. They're already being much more judicious with their spending outlays. And that's why you're starting to see consumer spending trends soften gradually. No major pullback, but you're starting to see the pace of growth of consumer spending gradually moderate. And that is a key risk. As we should not forget, the U.S. economy is in a sustainable state right now. The outperformer on the global scale, the exceptionalism is still firmly in place. But the fundamentals underpinning this exceptionalism are at risk. The labor market is at risk of a pullback if business sentiment starts to turn. Productivity growth is at risk if companies do not focus on driving stronger supply, but instead focus on managing these policy disruptions. And income trends are still solid, but they're cooling.
So final question on the bond market, and I'm not going to ask for a trade on fixed income. Just to look at the signal from yesterday, yields dropped at the long end. There were some people, including BMO's Ian Lingen, that made the case that perhaps investors are starting to focus on the demand consequences, the growth consequences of tariffs, and maybe less so, relatively speaking, on the inflationary consequences. Based on the conversation we've just had, are you doing the same thing?
No, I think both elements are still very, very important. They're important because in an environment where you're focused on driving that sustainable growth environment, you have to be conscious that both elements are important. Having an environment where you're driving stronger productivity growth, you're driving stronger labor supply, those are conducive to sustainable growth at a higher level and essentially augment your potential to grow, which reduces inflationary pressures. That's really key. I'm going to be very much focused on the productivity data at the end of this week to see how strong productivity is, because a higher productivity level or higher pace of growth is a luxury that affords you higher inflation, higher wage growth, which feeds into income and allows consumers to spend more freely. Both elements, growth and inflation, are important. They're also very important for the Fed, because let's not forget, the Fed has two mandates, the employment mandate and the inflation mandate. They've put more emphasis recently on policy uncertainty and the risk to the upside for inflation, but they're extremely data dependent. So softness on the labor market front would likely lead them to turn more dovish again.
Greg, this was smart. The debate continues. It's good to see you. Thank you, sir.
Good to see you, as always.
Greg Dacko there of EY. For those of you just tuning in, the opening bell about 50 minutes away. Equity futures just about unchanged, slightly positive. Lots of data still to come this week. On Friday, had Greg mentioned the productivity data he was looking for. Payrolls is just around the corner. That's the big one. And then you've got job openings later on this morning, ahead of lots of Fed speak too. So let's bring in Michael McKee for a little bit more. Mike, what are you going to be focused on later on this morning and through today?
Well, we'll be focused on anybody making any kind of news. You know, when you and your lovely bride get invited to a party you don't want to go to and you just go kind of stand in the corner, that's about where the Fed is right now. We're going to hear from a lot of folks, but they're not going to have much to say. Yesterday, we already started off with 3 Fed officials saying we probably need to be on hold because we don't know what's going to happen. Austin Goolsbee, the most important of those, because he had been the guy who was talking about, another 100 basis points of cuts in the coming year. He was ready to cut rates, and now he's on the sidelines because nobody knows what's coming out of the White House. We do have a lot more coming up this week. One of the most interesting ones is going to be Philip Jefferson. He's speaking twice. He's the vice chair, doesn't often speak. One of his speeches is on the economic outlook. So we'll get a sense of where the leadership is with him. And then tomorrow, Tom Barkin stops by to talk with the three of us. We're going to have a nice chat with him about what he sees, what people in his district see, and whether we can take literally the president's views, or whether the Fed does, at least.
That's going to be a timely conversation, Mike. Thanks for that. Looking forward to it. Mike will be leading that tomorrow, so look out for that on this programme on Bloomberg Surveillance. Let's turn to fixed income. Tariff uncertainty pushing yields higher at the front end of the curve just yesterday, but a little bit lower at the long end of the curve. Tony Rodriguez of Nuveen writing, we expect tariffs to exert a flattening influence on the curve and to put upward pressure on spreads. Tony joins us now for more. Tony, good morning. Good to see you. Let's separate those stories then. We'll talk about corporate credit in just a moment. I want to focus on the Treasury curve. So yesterday was really interesting. Yields pushed higher at the front end, a Fed component there that we can discuss. At the longer end, yields dropped on 10s. Can we start with the longer end? What explained that move for you?
So from our perspective, I mean, we do think that ultimately the stronger influence from this whole tariff war and tariff situation is the drag on growth. So I think at the long end, you begin to see that put into place. If you think about what happened since, let's say, the fall of last year, almost 100 basis point rise in rates. A lot of that was on the pro-growth, positive growth side of the equation, whether it was deregulation, whether it was tax cuts, whether it was more
earnings. Our next guest says the tech giant is playing chess in the AI arms race while others are playing checkers. Joining us now, Dan Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. I don't know which analogy to pick. They're the Messi of AI. They're playing. I'm picturing like Messi playing chess.
I like that.
Against maybe some other entire team playing checkers. I don't know. Yeah.
No, I like that. I think that's a great one.
You have my permission to put that in your next.
I will. I mean, I could cite you.
So why do you think Palantir, in your view? I mean, you have said consistently that they are way ahead. Mm-hmm. What do you think is the sort of special sauce?
Look, I think Karp and the team at Palantir, they have built a unique product that I think is unmatched. When it comes,
what makes it so unique?
When it comes to any customer, literally the 50 or 60 customers that we've talked to, no one matches Palantir. They could come in here and basically do a data dump for a day and come out and be like, these are the 3 to 4 use cases that you should do here. And there's no other company out there that offers that. And that's why Microsoft's partnering with them, Oracle's partnering with them. But if you look at that earnings last night, I would only, outside of NVIDIA, there's really been none that's been such a jaw dropper relative to what they posted from a revenue, commercial growth, as well as guidance. That's why we always say, like, the Bears, they hated at 12, despised it at 50, and 100, they're screaming, from the top of the buildings because remember, the Bears, they can see AI in the spreadsheets.
Let me ask you this, Dan. The Bears, here's one. RBC's Rishi Jaluria, smart guy. I've known Rishi a long time. Not a fan of Palantir. So here, what does the Bear say? Okay, here's what he told his clients. He said, our concerns about the runway for growth and product differentiation remain. And he goes on to say, we continue to see the risk-reward skewing unfavorable with shares trading at a premium multiple. You say what to Rishi?
I say that would be the equivalent of an NFL scout being at the 2000 Combine, seeing Tom Brady and be like, this guy, undraftable. So it was 6th round, Michigan. And then 5 years later, after a few Super Bowls, this is overdone. And then a few more Super Bowls. And now so my view is, look, haters are going to hate. The reality is when you do the due diligence and you understand what they're doing, I believe this could be the next Oracle or Salesforce. I mean, that's my view relative to where Palantir is going to be over the next 3, 4, 5 years. And I think it's so institutionally hated. I think in a lot of ways similar to Tesla. But yet I think Karp on that Mount Rushmore.
So let me ask you, if it's not valuation, your clients at Wedbush, they said, okay, Dan, but what's the risk? What's the risk here I need to think about on my radar? You tell them what.
The risk I always tell them is like, look, execution, okay, they have so much demand. Quarter to quarter, they got to continue to execute, and some of those deals could push left to right, but ultimately their pipeline, their opportunity, and the street's basically underestimating it over the long term, over the next 2, 3, 4 years, by 50, 60%. I mean, I think it's that big because I think when you look at it, this is a company that I could see doing 8, 10 billion a year annually. But again, that's going to take time, but no different than, as you know well, if you valued every transformational tech name over the last 20 years, just on 1 year numbers, you would have missed from Meta to Amazon to Google to Tesla and everyone else.
I want to widen this out a little bit because I want to zero in on something that Venu Krishna of Barclays just told us a few moments ago. We were talking about the CapEx cycle of all of these companies that are throwing so much money at AI data center infrastructure build out, right? We're going to hear from Alphabet in a little bit. They're probably going to repeat that. He said, you've got $100 billion that's been spent and they're collecting up to this point something like $5 billion in profit or in revenue from this stuff. And he said, everybody's waiting for the sort of killer apps to come out. Where are we in that, Dan Ives? I mean, you pay attention all day long to this stuff. Where are we in that? When are we going to get to that point? And is there a point at which investor patience is going to run out to get there?
I think Palantir showed it last night. I think you've seen it in Salesforce. ServiceNow has shown it. I think Oracle Components has shown it. And I believe 2025, if we sit here a year from now, we're going to look back. It's the year of software. From an AI perspective, second, third derivatives playing out. And that CapEx, that's $2 trillion of AI CapEx over the next 3 years. Software is going to play a huge role. but what the monetization is starting to happen. And I think that is fundamentally at the core. That's why names like Palantir are so important in the broader view. We talk about DeepSeek and everything that's happened, but the reality is NVIDIA, obviously Godfather AI, and Jensen, that's really the foundation. But the most important, I'd say most important earnings potentially during earnings season was Palantir, because it shows the use cases are exploding.
All right, we're on the other side of Alphabet at AMD earnings. That means we're bringing back Yahoo Finance tech editor Dan Howley for his big takeaways.
Yeah, Josh, there's a few things here that we want to look at. Let's look at Google first. And really, the big deal here is the miss on cloud revenue. That's really impacting the stock, as well as a dramatic increase in CapEx spending. They're going from $57.9 billion to $75 billion as far as CapEx goes for the full year of 2025. They beat on the earnings per share, a little bit light on revenue, but it was the cloud that came in at $11.9 billion in revenue, falling short of the $12.1 billion that Wall Street was anticipating. Advertising revenue beat $72.4 billion versus expectations of $71.7 billion. But the other thing to look at there is cloud deceleration for Google versus the last year. So the year ago quarter, the growth was better than what we saw in this quarter. Then let's take a look at AMD. I think it's also worth noting really quick that Google is down 7% in after hours. AMD, meanwhile, also suffering after hours, down just about 5%. And there's a few things going on here. They had a good quarter. They beat on the top and bottom line. They offered a great outlook for Q1. The issue here is that cloud, again, is an issue for them, not necessarily cloud data center sales.
गैस नेचुरल गैस देखो वहीं पर रुक गया है एफईजी पे अपना हाफ प्रॉफिट बुक करके ही चलना है इसमें ठीक है फिर रिपीट कर रहा हूँ या तो हाफ प्रॉफिट बुक कर लेना या सेल कॉस्ट पर रख लेना थोड़ा सा ऊपर आ जाता तो ये रेजिस्टेंस यहाँ से वापस सेल करने का प्लान था नहीं आ रहा है वहाँ तक नीचे आया तो फिर चांसेस आर वेरी हाई कि ब्रेक डाउन हो जाएगा और कोई नया रेजिस्टेंस भी बन नहीं रहा है यहाँ पर फिलहाल के लिए 15 मिनट टाइम फ्रेम पे सो बुक द हाफ प्रॉफिट एंड ट्रेल द एसएल 5 PM होने वाला है New York session is going to open at 6:30. उसके बाद शायद थोड़ा और मूव आ जाए डेटा भी हैं आज उनका भी ध्यान रखना important data schedule for today. देखोगे यहाँ पर ये जो नेचुरल गैस का चार्ट है यहाँ पर एक फॉरेक्स में नेचुरल गैस की बात कर रहा हूँ वहाँ पर एक रेजिस्टेंस ऑलरेडी है यहाँ पर बट एमसीएक्स में नहीं बना है एमसीएक्स में सिर्फ एफईजी है इसलिए उसके बिहाफ पे लेना सही नहीं रहेगा आप प्रॉफिट बुक करके ट्रेल करना ठीक है बाकी कोई नया रेजिस्टेंस बनता है तो देखेंगे नहीं तो नीचे सपोर्ट है वहां पर फिर बाइंग का प्लान रहेगा बाकी इस एफईजी को चाहो तो आप रिमूव भी कर सकते हो बिकॉज इसके ऊपर नीचे मल्टीपल टाइम मार्केट जा चुका है अगर एक कैंडल नीचे क्लोज हो जाती है तो क्रूड ऑयल देखोगे स्टिल एफईजी के अंदर ही फंसा हुआ है नीचे सपोर्ट है बाइंग एक्सपेक्टेड है ये पूरा ही सपोर्ट जोन है यहाँ से यहाँ तक भी करते रहो guys don't forget to like the stream and subscribe the channel थोड़ा सा नीचे आता है तो फिर यहाँ पर एक बाइंग ही एक्सपेक्ट रहेगी डाउन साइड पे गैस में हाफ प्रॉफिट बुक करके ट्रेल करना और कोई ऑप्शन नहीं है यहाँ पे. थोड़ा सा ऊपर जाएगा तो सेलिंग है प्लान. नहीं आया तो फिर नीचे ये रिटेस्टी ब्रेक हो जाएगा. यहाँ कहीं से ना एक सेलिंग का प्लान देखेंगे. Probe into Apple's App Store fees practices.
With Bloomberg News Now, I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with controversy in the Middle East. President Donald Trump says the U.S. should take control of the Gaza Strip. The president spoke during a White House news conference alongside Israeli Prime Minister Benjamin Netanyahu.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site.
Reaction is pouring into Trump's Gaza proposal. Former NATO Supreme Allied Commander in Europe, Wesley Clark, is warning it would be exceptionally challenging to deliver.
There are huge problems at the bottom, not to mention strategic consent at the top. So, look, he's the President of the United States. Better listen to him. But I've done these things. I can tell you how difficult this is. This is unimaginably difficult.
Former NATO Supreme Allied Commander in Europe, Wesley Clark, spoke at Saudi Arabia, reiterated its support for a Palestinian state with East Jerusalem as its capital. Saudi Arabia says it rejects any infringement on the legitimate rights of the Palestinian people.
Well, Nathan, there's new developments this morning involving Trump's trade war. The U.S. Postal Service has temporarily suspended the acceptance of inbound parcels from China and Hong Kong. According to its website, letters and flat packages from the region will not be impacted. The move comes after President Trump imposed a 10% tariff increase on Chinese goods.
And we may be seeing signs, Karen, that China's firing back. Bloomberg News has learned the country's antitrust watchdog's laying the groundwork for a potential probe into Apple. We get more on this from Bloomberg News Global Tech editor Peter Elstrom.
We see these tensions between the two countries.
The US हो चुका है. देखते हैं कितना वॉल्यूम अब जनरेट होता है और
In response, we're seeing some measured responses from Beijing right now. We have the investigation into Google. And just to be clear, the Apple investigation was not announced. This is a sources-based story where we're reporting that we understand the regulators at SAMR are taking a look at Apple. They've informed the Apple executives in the country that they're concerned about some of these practices that they have in the App Store. These have been issues globally, really. It's not just in China, but they're taking a 30% cut of revenue from the App Store in certain cases, and they're also limiting your payment options so that you run through the Apple Store.
Bloomberg's Peter Elstrom says if Apple resists making changes, the Chinese government may launch a formal investigation.
Nathan, Donald Trump and Elon Musk's efforts to slash the federal workforce have taken a new turn. And Bloomberg's John Tucker is here with more. John, what's the latest?
And Karen, most employees of the U.S. Agency for International Development will be placed on administrative leave. This starts Friday. Staff members stationed overseas, they have to return within 30 days, with exceptions to be considered on a case-by-case basis. This all comes after Trump ally Elon Musk singled out U.S. aid repeatedly on X. And Donald Trump described the agency as run by a bunch of radical lunatics. Secretary of State Marco Rubio said that he was now in charge of U.S. aid and warned U.S. lawmakers the agency might be abolished. And it doesn't stop there. The CIA has offered staff buyouts. That move comes after 2 million federal workers were given similar offers, and that move initially excluded national security agencies. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. And as controversy swirls around Elon Musk's role and power in the Trump administration, the Treasury Department says Musk's government efficiency team has been given read-only access to coded data of the government's payment system. Democratic lawmakers had raised concerns about the system's integrity stemming from the Musk team's access.
Nathan, President Trump's cabinet continues to take shape. Pam Bondi has won a full Senate vote to be the next Attorney General.
On this vote, the yeas are 54, the nays are 46. The nomination is confirmed.
That was the final tally for Pam Bondi in the U.S. Senate. The new Attorney General will now get a chance to reshape the 115,000-member Justice Department. Ahead of her confirmation, interim leaders forced out or reassigned many officials who investigated the January 6th attack at the U.S. Capitol, including career prosecutors and FBI officials.
And Karen, more cabinet nominees are moving closer to their confirmations. Both Robert F. Kennedy Jr. and Tulsi Gabbard have advanced through Senate committees on party-line votes. Kennedy faced questions about his past efforts to link vaccines to autism at his hearing to lead the Department of Health and Human Services. Gabbard drew criticism for meeting with then-President of Syria, Bashar al-Assad, and she also refused to call NSA leaker Edward Snowden a traitor in her hearing to be Director of National Intelligence.
Well, Nathan, now we want to take a turn to the latest on the plane crash investigation in Washington, D.C. The remains of all 67 victims have been recovered from the collision between the American Airlines flight and the Army helicopter. The National Transportation Safety Board says the latest data show the Black Hawk was flying at about 300 feet at the time of the accident. That's about 100 feet higher than the preliminary radar indicated. Investigators say they need more data from the Black Hawk itself, and they expect to recover it from the Potomac River later this week. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Top two teams in the NBA's Eastern Conference met in Cleveland, and the Celtics held the Cavs to only 15 points in the first quarter. Boston went on to win 112-105. The Cavs are now 40-10. Lakers beat the Clippers by 25 with the newest Laker, Luka Doncic, sitting on the bench. Can't play yet. He's got a calf injury. His old team, Dallas, lost by 2 in Philadelphia. Joel Embiid had a triple-double for the Sixers. At the Super Bowl, 66-year-old Chiefs coach Andy Reid says he'll be back next season. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now.
गोल्ड को भी देखोगे तो बुलिश ही बना हुआ है 15 मिनट में, अभी तक कोई मेजर ऐसा रेजिस्टेंस तो मार्क हुआ नहीं है। स्मॉलर टाइम फ्रेम देख लेते हैं एक बार, 1 मिनट टाइम फ्रेम में कोई अगर रेजिस्टेंस क्रिएट हुआ हो। देखो 15 मिनट पे तो नहीं है, 1 मिनट टाइम फ्रेम पे एक रेजिस्टेंस बना हुआ है, 5 मिनट टाइम फ्रेम पे एक रेजिस्टेंस बना हुआ है, इसको देख सकते हो। अभी फिलहाल के लिए 5 मिनट भी है, देयर इज नो अदर रेजिस्टेंस राइट नाउ। 2871 रेजिस्टेंस पर है 5 मिनट टाइम फ्रेम के गोल्ड। बाकी डे हाई का ही एसएल बनता है, लेकिन उसके हिसाब से ओवरऑल व्यू तो बुलिश ही है, बट यहाँ पर एक छोटा सा मार्केट ने ये एक रेजिस्टेंस जरूर बनाया है। बाकी यहाँ पर एक सपोर्ट भी था आपका 2866.500, वहाँ से 2 बार सपोर्ट ले चुका है प्राइस। एक बार अभी थोड़ी देर पहले 245 पे लिया था, एक जस्ट अभी 440 पे लिया है। मिनट का बता रहा हूँ, ये ध्यान रखना। नीचे नेक्स्ट सपोर्ट देखोगे तो वो आपको 2860 के आसपास दिखेगा, एक बहुत ही छोटा सा सपोर्ट जोन। टू 2855 ये कुछ सपोर्ट जोन है। 5 मिनट टाइम फ्रेम पे रेजिस्टेंस के अराउंड है गोल्ड। एक क्रूड में भी देखो नीचे टारगेट, वैसे तो फाइनल टारगेट यहीं तक रखा हुआ है ब्लू कलर की लाइन तक, क्योंकि यहाँ से पूरा ही सपोर्ट जोन स्टार्ट है। दिस होल एरिया इज अ सपोर्ट एरिया, बट ऑब्वियसली इतना बड़ा ऐसा ले नहीं सकते, क्योंकि फिर रिस्क रिवॉर्ड मैटर कर जाएगा। तो थोड़ा नीचे और आएगा तो वहाँ से देखेंगे, होने को ये यहाँ से भी सपोर्ट ले सकता है, बट हम उसको भी कंसिडर नहीं कर रहे हैं। बाकी सेलर्स अगर निकलना चाहें निकल जाना, होल्ड करोगे तो एक टारगेट यहाँ तक थोड़ा सा और रख सकते हो, यहाँ से फिर बाइंग का प्लान रहेगा। बाकी इस एफईजी को अब रिमूव किया जा सकता है, इसकी ज़रूरत नहीं है। लाइक करते रहो, कम ऑन। नेचुरल गैस का एफईजी भी रिमूव कर देंगे, कैंडल क्लोज होती है, अभी तो एक कैंडल क्लोज हुई नहीं, मुझे लग रहा है हो जाएगी, 2 मिनट बचे हैं सिर्फ, रह गए थोड़े से। फॉरेक्स में यहाँ पर एग्जैक्टली रेजिस्टेंस है, एफएक्स ओपन सॉरी capital.com या फिर एफएक्स ओपन ब्रोकर का चार्ट देखोगे तो। ये कैंडल देखो क्लोज हो गई है एफईजी के नीचे, इसको रिमूव कर सकते हैं, जरूरत नहीं है एफईजी। नीचे आता है तो देखो 274.5 के अराउंड आ सकता है, फिर वहाँ देखेंगे इन द सेंस ऑफ इस रीटेस्ट के लोअर एंड को टच करने की कोशिश करेगा तो तब फिर एक वापस बाइंग करेंगे, दोबारा यहाँ पर बाई मत करना। थोड़ा सा अगर पुल बैक दे देगा तो वापस सेलिंग का प्लान हो जाएगा, नहीं तो यहाँ पर कहीं आएगा इस लेवल के आसपास, तब फिर देखते हैं बाइंग के लिए, क्योंकि फिलहाल तो ये ऊपर फॉरेक्स वाले रेजिस्टेंस से मुड़ गया। फॉरेक्स 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 का ओवरऑल वीकली व्यू क्या लग रहा है? क्रूड ऑयल ने कल बाउंस मारा था वापस, कल तो न्यूज़ की वजह से आया था मार्केट, कल वो न्यूज़ थी एक्चुअली उस समय। बाकी वीकली एनालिसिस मैं कर चुका हूँ, लास्ट वीक का वीकली एनालिसिस देख लो एक बार। मार्केट अभी भी रेंज के अंदर ही फंसा हुआ है, नीचे देखोगे वीकली टाइम फ्रेम के अकॉर्डिंग तो 6050 एक सपोर्ट है, ऊपर 6670 रेजिस्टेंस है स्मॉलर रेंज के अंदर, इस रेंज के अंदर से बाहर नहीं जाने वाला। बाकी नीचे आता है तो बाइंग ही एक्सपेक्टेड है, थोड़ा प्रॉफिट बुकिंग आनी चाहिए। नेचुरल गैस में दोबारा बाय मत करना इस लेवल पे, ओके गाइस, डोंट बाय डायरेक्टली। लाइक भी करते रहो, डोंट फॉरगेट टू लाइक द स्ट्रीम। फाइव 30 हो चुका है, लाइक करते रहो गाइस। नेचुरल गैस का तो स्ट्रक्चर भी बेरिस ही चल रहा है, कल मार्केट ने अपने रेजिस्टेंस ही रेजिस्टेंस लिया है, इतना कह सकता हूँ। 273 अगर होल्ड नहीं किया तो फिर थोड़ा ज़्यादा ही बेरिस हो जाएगा, एटलीस्ट 267 तक। बाकी बुलिस होना है तो एटलीस्ट निकलना चाहिए प्राइस 289 के ऊपर। मुझे रेंज लग रही है 285 से 275 के बीच में। नेचुरल गैस की कोई अगर न्यूज़ नहीं आती है, वैसे क्रूड की इन्वेंट्री है। क्रूड में देखते हैं आज कुछ होता है तो स्ट्रांगली। 630 का डेटा भी इंपॉर्टेंट है, उसका भी ध्यान रखना। टेपर आप वॉचिंग लाइक भी करो। 40 लोग 40 लोग लाइक कर देंगे, अभी 40 लाइक्स हो जाएंगे। ये 6 फुट नहीं, सिक्स उसका क्रूड पे तो नहीं, गोल्ड और सिल्वर पे इम्पैक्ट होगा। बाकी 5 मिनट टाइम फ्रेम पे और रेजिस्टेंस पर ये डे हाई गोल्ड 5 मिनट, नॉट 15 मिनट। 15 मिनट में अभी लेवल नहीं बने। वॉलेटिलिटी बहुत ज़्यादा चल रही है आजकल। ट्रम्प का कुछ भरोसा नहीं। कल भी एक स्टेटमेंट दिया था, याद है वो गाजा वाला, उस पर भी क्रिटिसिज्म हो रहा है अभी उनका। क्रूड फोरकास्ट क्या इन्वेंट्री का क्रूड ऑयल का फोरकास्ट देखोगे, लास्ट वीक आई थी +3.5, इस बार भी +2.4 एक्सपेक्टेड है। लास्ट वीक के कंपैरिजन में देखोगे तो थोड़ा सा कम एक्सपेक्ट कर रहे हैं। तो अगर कम आती है फोरकास्ट के अकॉर्डिंग 2.4 से +2.4 से कम आता है कुछ भी डेटा, मान लो 2 आ गया, 1 आ गया, माइनस में कुछ आ जाए, तो इट इज़ पॉजिटिव फॉर क्रूड ऑयल प्राइस। तो फोरकास्ट तो ऐसा है कि प्राइस को ऊपर जाना चाहिए। फोरकास्ट की बात कर रहा हूँ। अब फोरकास्ट के साथ ही आता है या फिर उसके अगेंस्ट आता है तो डेटा आने पर ही पता चलेगा, बट फोरकास्ट पॉजिटिव है, एक्सपेक्टेड। नीचे सपोर्ट भी है, आ जाए तो बढ़िया ही है, बाइंग भी है वहाँ पे। बाकी ये सर्विस पीएमआई का डेटा देखना पड़ेगा किस तरह से निकल के आता है। सर्विस पीएमआई, एडीपी, नॉन फार्म एम्प्लॉयमेंट चेंज, बोथ आर वेरी इंपॉर्टेंट ओवरऑल देखोगे तो। गाइस 5:30 हो चुका है. 5:30 is there. एक घंटा और है न्यूयॉर्क सेशन की ओपनिंग पे. करते रहो guys. Don't forget to like the stream and subscribe the channel as well. ओके देखो यहाँ पर एक रिस्की ट्रेड बन रहा है अगर नेचुरल गैस में प्लान करना चाह रहे हो. ये कुछ थोड़ा सा रिस्की है बट यही है. 550 हो गया ना. ठीक है थोड़ा सा रिस्की रहेगा. प्लान करना चाह रहे हो थोड़ी कम क्वांटिटी के साथ या मिनी में ट्राई कर सकते हो. टारगेट अराउंड 274.5 के अराउंड रखते हैं. थोड़ा सा रिस्की टाइप साइड में है ध्यान रखना. ये थोड़ा सा फॉरेक्स के चार्ट के साथ ना कॉन्ट्राडिक्ट कर गया है एमसीएक्स का चार्ट. लेट्स सी कितना होल्ड करता है ये. ठीक है ये नेचुरल गैस में ध्यान रखना. नेचुरल गैस का जो चार्ट लगाया हुआ है. तो 74 1 रेशियो 2.5 समथिंग कुछ बन रहा है ये. ये कहाँ तक लेके जा रहे हैं इसको नीचे तक. ओके ओके गाइस एक एनएससी कम्युनिटी के रिगार्डिंग एनएससी के ही ऑथराइज जो मेंबर हैं ऑथराइज पर्सन हैं उनके थ्रू एक लर्निंग सेमिनार मैं और जो हमारी धन की टीम है वो कराने की सोच रही है. तो अगर आप लोग थोड़ा सा इन्फॉर्मेशन अगर चाहिए उसके बारे में और तो जुड़ सकते हैं हमारे साथ. आने वाले समय में उसके रिगार्डिंग एक वेबिनार शॉर्ट वेबिनार करने की कोशिश करेंगे जहां पर एनएससी और एनएससी कम्युनिटी के बारे में डिटेल डिफरेंस क्या है एमसीएक्स से और आप लोगों के कुछ जो क्वेश्चन होंगे वो लेने की कोशिश करेंगे. वो जो पर्सन होंगे वो एनएससी के ही मेंबर हैं. मेंबर इन द सेंस ऑफ एनएससी के अंदर ही काम करते हैं. डेली हेड को देखते हैं. तो इफ़ यू आर इंटरेस्टेड लेट अस नो. वैसे तो आप सभी लोगों को डिटेल मिल जाएगी धन की ओर से. वो पर्सनली हमारी ओर से ही रिकॉग्नाइज किया जाएगा. सो इफ़ यू आर इंटरेस्टेड स्क्रीन पे नंबर दिया हुआ व्हाट्सअप नंबर उस पर बता सकते हैं. बाकी उसका लिंक कब वो शेड्यूल करेंगे वो हम आगे डिसाइड करेंगे. तो पहले बता देना जो लोग इंटरेस्टेड रहेंगे. आधे घंटे का होगा शायद. कोई भी आप लोगों के क्वेश्चन रहेंगे वो लोग आप लोग पूछ सकते हैं उनसे. सेमिनार स्पेशली फॉर कमोडिटी मार्केट. ठीक है कमोडिटी के लिए ही है वो स्पेसिफिकली. इक्विटी के लिए उतना नहीं है. मेनली हम उसमें क्रूड ऑयल नेचुरल गैस कमोडिटी की ही बात करेंगे. गोल्ड सिल्वर कॉपर जिंक. ठीक है कि किस तरह से उसको आप और ब्रीफली ट्रेड कर सकते हो. थोड़ा सा नेचुरल गैस का ट्रेड लगाया रिस्की साइड पे, थोड़ा ध्यान रखना। अभी कोई ट्रेड ही नहीं बन रहा है इसमें, नहीं तो थोड़ा सा नीचे आने का वेट करना पड़ेगा या फिर ऊपर रेजिस्टेंस तक जाने का वेट करना पड़ेगा, तभी कुछ ट्रेड प्लान कर सकते हैं। बीच में वैसे ट्रेड लेना तो नहीं चाहिए, बट काफ़ी देर हो गई है। मॉर्निंग पे एक ही मोमेंटम यही आया है बस छोटा सा, ये डायरेक्टली चला जाता तो बेटर था, गया नहीं डायरेक्टली। हाँ अप्रॉक्सीमेटली 2 पॉइंट का बन रहा है, और छोटा करना चाहो तो इसको मिनिमम 1 पॉइंट कर सकते हो, 1 to 1.5, इससे छोटा एसएल तो नहीं रख सकते। वो गोल्ड का प्राइस ऊपर क्यों जा रहा है? गोल्ड में मैंने बताया था, गोल्ड के प्राइस के ऊपर जाने के परसों अलग अलग रीजन है, बट जितने भी रीजन है सारे पॉजिटिव ही हैं प्राइस के लिए। एक तो डिमांड कंटिन्यूसली इंक्रीज हो रखी है देखना, और सप्लाई उस वजह से बढ़ते जा रही है, प्राइस इंक्रीज होते जा रहा है सप्लाई। अब अगर ज़्यादा हो गई, डिमांड कम हो गई, क्योंकि प्राइस बढ़ेगा तो लोग लेना पसंद शायद फिर ना करें, तब हो सकता है प्राइस ड्रॉप करें, बट फिलहाल के लिए तो डिमांड ऑल टाइम हाई के आसपास ही चल रही है। चाइना इज़ वन ऑफ द रीजन। बाकी देखो वॉलेटिलिटी बहुत ज़्यादा एक्सपेक्टेड है अंडर द करंट यूएस प्रेसिडेंट, तो इक्विटी मार्केट में पैसा लगाना थोड़ा सा रिस्की हो सकता है, इसलिए तो लोग थोड़ा सा सेफ चीज़ों को ढूंढते हैं जहाँ पर पैसा इन्वेस्ट कर सकें। गोल्ड इज़ वन ऑफ देम, बट आज देखना पड़ेगा, आज 3 डेटा हैं और तीनों के तीनों इंपॉर्टेंट हैं। ये एडीपी नॉन फार्म एम्प्लॉयमेंट चेंज का, फाइनल सर्विस पीएमआई का, और आईएसएम सर्विस पीएमआई का, ऑल आर वेरी इंपॉर्टेंट डेटा फॉर गोल्ड सिल्वर प्राइस। पर एमसीएक्स में कोई रेजिस्टेंस तो नहीं है नेचुरल गैस में, यहाँ पर फॉरेक्स में एक रेजिस्टेंस था, एमसीएक्स में नहीं है। एमसीएक्स में तो ऊपर ही है रेजिस्टेंस, वो 285 के अराउंड, 285 एंड देन 287, और नीचे सपोर्ट देखोगे तो 274.5, 275 कह सकते हो राउंड नंबर, बट बिकॉज फॉरेक्स में इसलिए थोड़ा बहुत यहाँ भी रुक रहा है। लोग बाइंग में थे नेचुरल गैस में, हाफ प्रॉफिट बुक करके रिमेनिंग क्वांटिटी का ऐसा लगा ट्रेल किया हुआ है, कॉस्ट से ज़्यादा नीचे मत रखना, ठीक है। जो लोग बाइंग वाले ट्रेड में थे पूरा टारगेट दिया नहीं, हाफ ही टारगेट दिया, पूरा ही बुक करके निकल गए, वो तो कोई प्रॉब्लम नहीं है। बट अगर अगर अभी भी रुकी हुई है हाफ क्वांटिटी, तो हाफ क्वांटिटी का एसएल, रिमेनिंग क्वांटिटी का एसएल कॉस्ट पे रखना। बाकी ये जो ट्रेड सेलिंग का लगा रखा है थोड़ा सा रिस्की साइड पे, पहले बता दूं। यहाँ पर एमसीएक्स में मुझे कोई रेजिस्टेंस नहीं दिख रहा है, फॉरेक्स में ज़रूर है, तो थोड़ा सा रिस्की साइड पे समझ के ट्रेड करना, क्वांटिटी कम रख लेना, इतना ही कह सकता हूँ। 1.5 पॉइंट का एसएल बन रहा है फ्यूचर चार्ट के अकॉर्डिंग। ये टारगेट थोड़ा बड़ा रख रखा है 275 475 के अराउंड, 15 मिनट टाइम फ्रेम। ये नेचुरल गैस, ये कौन सा ब्रोकर है? टिप रहा वॉचिंग 25 लाइक्स ही हुए हैं, बाकी लोग भी लाइक कर दो फटाफट से स्ट्रीम को। कम ऑन गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। इफ यू हैव एनी क्वेश्चन यू कैन आस्क इन द कमेंट बॉक्स। बॉक्स में अपना क्वेश्चन पूछ सकते हो अगर कोई क्वेश्चन है तो। वाला वो भी अच्छा है। 6 p.m. हो चुका है. Nissan is pulling out of its deal with Honda to combine both brands. A 900% stock surge has created a billionaire couple in India. 900%. ये कौन सा स्टॉक है 900% चढ़ गया जो? 900%. Wow. Sanjay, Alpana, Dangi are worth 2.3 billion. Dangi says days of easy money in India stock are over. Investment and Infrastructure Limited, AII, a shadow bank controlled by Dangi, had surged 900% in the past 3 years. देखो नेचुरल गैस आया है रेजिस्टेंस पे. मैं पहले ही बता दूं ये थोड़ा सा रिस्की ट्रेड है, तो क्वांटिटी थोड़ी कम रख लेना. एमसीएक्स में कोई रेजिस्टेंस नहीं है, फॉरेक्स में बना हुआ है बस. वगैरह ट्राई कर सकते हो, 1 पॉइंट का एसएल, ज़्यादा रिस्क नहीं होगा. ऑप्शन मत ट्राई करना, रिस्की है, पहले ही बता चुका हूँ. तो कुछ कर नहीं सकते. या तो रेजिस्टेंस बना होता है एमसीएक्स में बढ़िया था, या फिर थोड़ा सा ये और ऊपर चला जाए ज़्यादा यहीं पर. यहाँ देखेंगे ये एक रेजिस्टेंस जोन है डेफिनेटली. तो यहाँ पर ये सेलिंग वाला जो ट्रेड लगाया है नेचुरल गैस में, वही लोग लें जो थोड़ा सा रिस्क ले सकते हैं नेचुरल गैस में. ठीक है, नहीं ले सकते हैं तो फिर अवॉइड करना. फिर उनके लिए दो ही ऑप्शन है, या तो प्राइस को थोड़ा सा ऊपर आने दो यहाँ कहीं, या फिर यहाँ बिल्कुल नीचे आने दो. ये दो ही लेवल रहेंगे. बाकी जिन लोगों ने नीचे से पुराना वाला ट्रेड बाई करके रखा हुआ था, अगर रुके हुए रिमेनिंग क्वांटिटी, फिर रिपीट कर रहा हूँ, आप अपना एसएल, ट्रेलिंग एसएल कॉस्ट टू कॉस्ट से भी रिमूव करके इसके नीचे भी डाल सकते हो. ट्रेलिंग एसएल लेवल हिट नेचुरल गैस में आ चुका है रेजिस्टेंस पे. लेट्स सी ये रिस्की ट्रेड निकलता है या फिर ऐसा लेट करता है. ऊपर कहाँ पर है? 285. हाँ, बहुत बढ़िया. बाकी 6 PM भी हो गया है, आधा घंटा और है. न्यूयॉर्क सेशन की ओपनिंग में ध्यान रखना. 6:30 न्यूयॉर्क सेशन विल ओपन. करते रहो गाइस. डोंट फॉरगेट टू लाइक दिस स्ट्रीम. जिन्होंने लाइक नहीं किया स्ट्रीम को अभी भी. ये दो किसको कर रहा है? रिपीट कर रहा हूँ, नेचुरल गैस का ट्रेड थोड़ा सा रिस्की है. MCX में कोई रेजिस्टेंस नहीं है. फॉरेक्स में यहाँ पर एक रेजिस्टेंस बना हुआ है बस. तो वही लोग लेना जो थोड़ा सा रिस्क ले सकते हैं. ठीक है. 1.5 2 पॉइंट के अराउंड SL बन रहा है फ्यूचर चार्ट में. 2% डाउन है. ओके, इस कैंडल के बाद सिर्फ एक कैंडल और है, देन न्यूयॉर्क सेशन ओपन, वहां पर भी एक वॉलेटाइल कैंडल क्रिएट हो सकती है, ध्यान रखना। वॉलेटाइल कैंडल 6:30 PM पर, 6:45 डेटा भी है। रिस्की ट्रेड वाला जो है नेचुरल गैस का ऐसे जाएगा तो निकल जाना, ठीक है। इसके ऊपर फिर एक रेजिस्टेंस है, वहां से देखेंगे अगर ये किसने लिया है यहाँ पर। स्पेशली 6:30 कैंडल का भरोसा नहीं है कुछ। ट्रेलिंग एज शिफ्ट कर दो। हाँ, फ्यूचर ईयर्स में। ओके। क्रूड ऑयल भी देखो सपोर्ट के अराउंड आने वाला है, ये यहाँ से पूरी सपोर्ट रेंज स्टार्ट हो जाएगी, ध्यान रखना।
News when you want it with Bloomberg News Now. I'm Karen Moscow. President Trump says he wants the U.S. to take ownership of the Gaza Strip and redevelop it after Palestinians are resettled elsewhere. Trump made the remarks in a joint news conference with Israeli Prime Minister Benjamin Netanyahu.
We have an opportunity to do something that could be phenomenal. And I don't want to be cute, I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad, this could be so magnificent.
Trump's proposal was met with sharp opposition from Palestinian and Arab officials who rejected any displacement of Gazans from the area and warned of destabilizing the Middle East. Trade tensions between the U.S. and China heating up. China's antitrust watchdog is laying the groundwork for a potential probe into Apple's policies and the fees it charges app developers. It's part of a broader push by Beijing that risks becoming another flashpoint in the country's trade war with the U.S. Sources tell Bloomberg the State Administration for Market Regulation is examining Apple's policies, which include taking a cut of as much as 30% on in-app spending and barring external payment services and stores. Meantime, the Trump administration ordered the U.S. Post Office to suspend inbound international packages from China and Hong Kong. The announcement rattled Asian markets, sending shares of Chinese e-commerce retailers like Alibaba and JD.com lower. Another key member of President Trump's cabinet has been confirmed. Pam Bondi will take over as Attorney General on a full Senate vote of 54 to 46.
Under the previous order, the motion to reconsider is considered made and laid upon the table, and the President will be immediately notified of the Senate's action.
And that Senate action now gives Pam Bondi a chance to reshape the Justice Department. At her confirmation hearing, Bondi said, quote, "Under my watch, the partisan weaponization of the Department of Justice will end." President Donald Trump's administration says it's pulling almost all the workers from the U.S. Agency for International Development off the job and out of the field worldwide. The order takes effect just before midnight Friday and gives direct hires of the agency overseas 30 days to return home unless they're deemed essential. The notice posted online yesterday says contractors not determined to be essential also would be fired. The Army helicopter that crashed with an American Airlines flight near Washington last week may have been flying too high. The National Transportation Safety Board says its latest data show the Black Hawk was at 300 feet. That's about 100 feet higher than preliminary radar information showed. Meantime, all 67 victims.
लगता है क्रूड ऑयल में नीचे पूरा ही सपोर्ट जोन है यहाँ से, ठीक है। अब इतना बड़ा लेवल लगाया नहीं है, बिकॉज इतना बड़ा लेवल लगाएंगे तो रिस्क रिवॉर्ड कुछ खास बना नहीं रहा है। But the support start from that particular zone. Okay, 15 मिनट लेफ्ट, 15 मिनट और रह गए। न्यूयॉर्क सेशन ओपन होने वाला है। लेट्स सी कुछ बड़ी कैंडल अब बनती है वहां से। बाकी ये नेचुरल गैस का रिस्की ट्रेड था, इसमें अगर निकलना चाहो निकल जाओ, एसएल जा चुका है। ये नेचुरल गैस का रिस्की ट्रेड था, एसएल गॉन फॉर सेलिंग साइड। जो लोग बाइंग में रुके हुए हैं रिमेनिंग क्वांटिटी के साथ, अपना ट्रेलिंग एसएल यहाँ से रिमूव करके इस स्विंग के नीचे रख सकते हैं रिमेनिंग क्वांटिटी ऑलरेडी निकल गए थे तो बीच में एंट्री मत कर देना आप थोड़ा सा ऊपर जाता है तो फिर हम इस लेवल से एक जो प्लान था ओरिजिनल प्लान यहाँ से सेलिंग करने का सोचते हैं नेक्स्ट कैंडल इंपॉर्टेंट हो जाएगी ओपन पोजीशन चल रही होगी तो एसएल सिस्टम पर डाल देना डोंट टेक एनी रिस्क बिफोर 6:30 कैंडल ठीक है
Of last week's crash have been recovered from the Potomac River. Investigators hope to get more data from the helicopter itself later this week. We turn to the markets now. Walt Disney reported fiscal first quarter results that beat analyst estimates, fueled by the blockbuster film Moana 2 and higher income from its streaming services. The improved performances of Disney's streaming operation and film studio led to a 31% gain in operating income for the quarter. Other Disney businesses struggled, with profit from TV networks slumping and theme park earnings little changed. Uber reported weaker than expected fourth quarter earnings and operating income, overshadowing steady bookings growth. Disappointing tech earnings, leading futures lower. Alphabet shares are down. Fourth quarter revenue at the Google parent missed analyst expectations after growth in its cloud business slowed. We get more with Bloomberg technology reporter Caroline Hyde.
It does seem that if it's not going to be bearing fruit, where is the return on your AI investment? If your cloud isn't going to be living up to expectations, that 2025 is a significant amount that the market had seen about $57, $58 billion of spend. And they're coming out with $75 billion. It's a lot more than had been anticipated by the street.
And Bloomberg technology reporter Caroline Hyde says search advertising brought in $54 billion in sales, slightly beating analyst estimates. Shares of AMD also lower as it struggles to catch up with AI computing leader NVIDIA. The chipmaker's fourth quarter revenue topped estimates, but its data center division's revenue was below analyst projections. Job cuts on the way at Walmart, the retailer eliminating hundreds of jobs and asking workers to move to central offices in Arkansas or California. And San Francisco Fed President Mary Daly says the central bank does not need to overreact to President Trump's trade policies.
There is uncertainty, but I remind everybody the world is always full of uncertainty. I mean, in my time at the Fed, I've lived through a financial crisis and a pandemic, and those were extraordinarily uncertain times. And what I want to convey to everyone here is that uncertainty is not a paralysis. It just means you have to watch and be careful and thoughtful as you navigate the information we have.
And that's San Francisco Fed President President Mary Daly, who says she is comfortable with policymakers' December projections, which showed broad support for 50 basis points in interest rate cuts this year. Again, futures are lower, with S&P futures down 0.5%, Dow futures down 0.1%, NASDAQ futures down 0.8%, and the 10-year Treasury yield at 4.47%. That's news when you want it with Bloomberg News Now. I'm Karen
Let's just
Moscow.
look at the numbers here. When you go through to the data center, they came in at $3.9 billion on revenue versus expectations of $4.09 billion. So not a huge miss, and you would imagine that Q1 outlook being higher than anticipated would buoy the stock. But the reaction here from the street is obviously
Today,
on the negative side.
Trump says the U.S. will take over Gaza and that all Palestinians should leave.
We hear the reaction from Palestinians on the ground and follow the journey of one family heading back home in Gaza after the ceasefire deal with Israel. Plus, El Salvador's offer to host U.S. prisoners.
It's Wednesday, February 5th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Jonah Green in New York.
And I'm Tara Oakes in London.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it.
President Donald Trump says he wants the U.S. to take over the Gaza Strip and redevelop it after Palestinians are resettled somewhere else.
Create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Trump selling the pitch, which upends decades of U.S. policy towards the Israeli-Palestinian conflict, much like the real estate developer that he is.
Be a wise guy, but the Riviera of the Middle East, this could be something.
Speaking at a press conference alongside Trump, Israeli Prime Minister Benjamin Netanyahu said the idea was worth considering. Trevor Honeycutt was at the White House.
His remarks raised a ton of questions, from feasibility to legality, and the status of the Gaza Strip itself is something that has been in question for many years. The question of who owns the Gaza Strip and who will control the Gaza Strip is kind of one of the foundational questions of whether we'll ever get to a two-state solution that gives Palestinians a state. We're talking about Palestinian people who were displaced and dispossessed from parts of what is now Israel. And Trump now has this idea of sending them to new places again. And so where these people would go, how they would get there, how the United States would control this territory, which is still extremely unstable and dangerous, whether troops would be involved, all of that was left unanswered by this press conference. I think we're also interested in seeing, how does this affect the ongoing Gaza ceasefire question? Does this provoke Hamas? Does this put the deal at risk that is allowing hostages now to come out of Gaza? And so all of those are kind of questions that we want to keep exploring in the next few days.
On the ground in Gaza, where the first phase of a fragile Israel-Hamas ceasefire is in effect, some families are just starting to get back to their homes. Ismail Mohammed, his wife and 6 children, have been living in a sprawling camp and are now heading back to their home in the north. It's an 11-mile walk to Jabalia, and for Ismail, it's a brutal one. He walks with a stick after his leg was injured in an airstrike, and he lost an arm before the war to diabetes. At the end of their journey, they find the neighborhood and their house flattened. Many Palestinians say they want to go home despite the widespread destruction. Our senior Palestinian territories correspondent is Nidal Al-Maghrabi.
The Palestinians who rushed back after the ceasefire took effect, they rushed back to their homes in northern Gaza, knowing that these houses may not be still standing, have rejected Trump's remarks. They want to go back to where they lived for much of their lives, and even live in a tent, but next to the rubble of their houses. The issue of displacement is very sensitive to Palestinians in particular. Trump's remarks reminded the Palestinians of the 1948 Middle East War, when hundreds of thousands of Palestinians fled or were forced to flee their hometowns and villages. The Palestinians were displaced in 1948. They called it a Nakba, or catastrophe.
And what has been the wider reaction in the Middle East?
Hamas rejected totally Trump's remark, described them as ridiculous and absurd. Saudi Arabia voiced their support to this two-state solution, so echoing again their outstanding position of supporting the Palestinians in establishing and having their own independent state. The Australian Prime Minister also reiterated the position of his government in supporting the two-state solution and the rights of the Palestinians to have their own state. It was a shock and surprise for many.
Swedish police are warning that misinformation is being spread on social media following the country's deadliest gun attack. 11 people were killed at an adult education centre on Tuesday. The suspected perpetrator is among the dead, and the motive is unknown.
Federal government employee unions are suing the Trump administration to block its buyout for federal workers. The news comes after a U.S. official told Reuters that more than 20,000 employees are planning on taking the deal to receive pay and benefits through September 30th.
And the CIA has offered buyouts to its entire workforce, citing an aim to bring the agency in line with Trump's priorities. That's according to two sources familiar with the matter.
Military aircraft carrying detained migrants flew to Guantanamo Bay on Tuesday. The Trump administration has said it will potentially house tens of thousands of migrants at the naval base in Cuba.
Are you expecting a new crop top from
1 minute left, 1 मिनट है न्यूयॉर्क सेशन की ओपनिंग पे. किसी कोई ओपन पोजीशन चल रही है सिस्टम पे रख लो अपना एसएल. डोंट टेक एनी रिस्क. क्रूड ऑयल सपोर्ट जोन के अराउंड है. नेचुरल गैस वहीं का वहीं रुका हुआ है. एक रिस्की ट्रेड था, निकल गए हो, वेल एंड गुड. नहीं तो थोड़ा सा ऊपर आता है तो यहाँ से एक सेलिंग का प्लान करेंगे, फिर नहीं तो नीचे आएगा तो उन्हीं लेवल पे बाइंग किया जाएगा. ठीक है, ये थोड़ा सा अब यहाँ है इस लेवल के आसपास, तब थोड़ा सा एक बाइंग का प्लान रहेगा इन नेचुरल गैस वापस से. कॉपी ओवर हियर, गॉट इट. बाकी से निकल जाना, ये रिस्की ट्रेड था जो बीच में, इसमें जा चुका है एसएल रिस्की ट्रेड वाला. ओके, गॉट इट. हो गया ओपन न्यूयॉर्क सेशन. सॉरी, या न्यूयॉर्क सेशन इज ओपन. एक 6:45 पे डेटा भी है गोल्ड और सिल्वर के लिए, उसका भी थोड़ा ध्यान रखना. 1 मिनट, 5 मिनट. ओवरऑल व्यू तो बुलिश ही है, बट फिलहाल अभी डे हाई रेजिस्टेंस बना हुआ है. ओनली 5 मिनट, देयर इज नो रेजिस्टेंस इन 15 मिनट इन गोल्ड. 5 मिनट में रेजिस्टेंस है. फॉरेक्स चार्ट में तो रुका ही है वहाँ पे.
This is the Asia Trade. I'm Chevrian in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for gains after Wall Street dip buying overcomes trade war jitters. Mainland Chinese markets set to reopen today amid the tariff tensions. Beijing responding to US levies by targeting a handful of goods, companies and critical minerals, signalling a cautious approach from President Xi. And Alphabet is one of the companies singled out by China. Its shares sliding in late trade as it reports disappointing cloud sales growth. We do have some breaking data out of South Korea when it comes to inflation gauges there. The CPI numbers for January coming through as a headline number. Consumer prices rising 2.2% against an estimate of 2.1%, so more or less in line with estimates, a little bit hotter than expected. When it comes to that month-on-month gauge, a 0.7% gain against expectations of 0.5%. If you strip out more volatile food and energy prices, we're seeing a gain of 1.9% year on year there as well. So continuing to watch inflation levels when it comes to the meaningful implications for the Bank of Korea. They are expected to cut rates for the third time this cycle later this month. A lot of concerns about economic cooling domestically, political turmoil that continues to play out, as well as these global trade headwinds as well. A lot of concerns about private spending being stagnant and household pressure, as well as these ongoing tariff threats. Sherry.
We'll get an indication of how China is doing. Of course, we are getting the markets back today from Lunar New Year holidays, and this coming after that U.S. tariff went into effect, additional 10% on China. And of course, we saw the measures coming from Beijing that were swift, but also very calculated. So we saw the upside in markets overnight. Right now, this is the setup. Nikkei futures looking to the downside of 0.25%, but you can see right there that when it comes to the ASX 200 early in the session, obviously, as we're seeing that staggered open is still to the upside. The Japanese yen also weakening slightly against the U.S. dollar. We have seen that safe haven move pare back a little bit, but it will really be about the yuan fixing that we'll be watching, especially if we'll see that the PBOC is letting the yuan weaken, perhaps given the additional tariff costs. But this is a big speculation in the markets right now. Usually the CSI 300 index has historically come back online after a Lunar New Year holiday on the upside. But take a look right now what the setup is when it comes to U.S. futures, because we might be taking a hit on the tech side of things. We mentioned Alphabet earnings disappointing. We also had AMD results disappointing, and you can see the futures trading at the moment remains to the negative. This is after that rebound in the regular session, though, Heidi, because there was a lot of optimism and perhaps a wave of dip buying that these measures from China and the trade war could be contained. Of course, we'll be watching the dollar and its performance, because we're seeing the first fall in 6 sessions. And gold futures also retreating a little bit after touching record highs, of course, on that haven demand, Heidi.
Sherry, let's get some more analysis on our top story when it comes to these ongoing trade tensions. A response from China. I want to bring out Chief North Asia correspondent Stephen Engel, also Garfield Reynolds, who leads our Markets Live coverage. And Steve, I'll start off with you. Look, lots of analysis already when it comes to Beijing's response. Measured, muted, cautious. Does this speak to the sort of domestic, precarious domestic economic situation? Does it speak to the hopes that maybe something will be agreed upon when the two leaders finally speak?
Yeah, I think it could have been worse for China, obviously, and the market has reacted that way. And I'll leave it to Garfield to talk about whether the market will whipsaw again, because Donald Trump in the last hour has come out and said he's in no hurry, no rush to talk to Xi Jinping, even though yesterday the White House said, and even Trump said yesterday, that he'd likely talk to Xi Jinping about these tariffs within 24 hours. Now he says there's no rush. He also said it's fine that China has launched its own retaliatory tariffs and other measures. So we'll have to see how market participants react to that. But right now, you're absolutely right. It was a more cautious approach from China this time on tariffs, even though it was almost like, pre-programmed. As soon as that deadline hit for the U.S. tariffs came in at 12:01 Eastern Standard Time, or 1:01 in the afternoon yesterday, Beijing time, Beijing rolled out its response, and we can bring up some of those steps. And it is quite measured compared to the 10% across-the-board tariff that the United States imposed on China less than 24 hours ago. Here you can see 10% tariff on oil and agricultural machinery, 15% tariff on coal and LNG, export controls on tungsten-related materials and other key minerals, Antitrust probe into Google. They're expanding that, which is highly symbolic. Let's face it, Google has not been in China since 2010. So this is more of a symbolic move. And it adds PVH Group, which owns Calvin Klein and also Illumina, to the unreliable entity list. So it's a pretty measured approach. PVH Group, by the way, gets about 8% or 6% of its revenue from China and 16.6% of its earnings. So that's going to be a bit painful for the Calvin Klein owner, and also Illumina, which is a gene sequencing company. It gets about 8.5% of its revenue from the Greater China region. But still, only 2 companies added to the unreliable entities list. So, yeah, a bit of a measured response right now from China. We'll have to see, though, because those new tariffs that China imposed will go into effect February 10th. That's 5 days from now. There's still time over the course of those 5 days for Xi and Trump to have a phone call, much like Trump did with the Mexican president and also Justin Trudeau of Canada. Maybe some sort of deal could be reached. We'll have to see how market participants respond today to the whipsaw nature of these headlines.
Karf, I mean, it's been quite a week that Chinese investors have missed out on, right, in terms of just the to and fro and the dramatic start to the year of the snake. I guess, to Steve's question, are we also going to see a measured response in the markets?
Well, I think there'll be some volatility. I also think that overall the picture is rather bullish for Chinese equities in particular. 10% tariffs from the US, that's still a long way from the 60% that was, had to be still hanging over people. You sort of thought, okay, he said 10% early on, and 25% each for China and Mexico, and so Canada and Mexico. And kind of the thought was that because he didn't do those straight away, well, we've got some time, it's not going to happen. Then we had the definitive Canada and Mexico, but still only 10% on China. And the rhetoric has been nothing like as strong as it was about Canada, about Mexico, even about the EU, and for that matter, deciding to take funding away from South Africa. So, Trump has also been very keen on pushing the idea of the TikTok deal. Him saying, we can wait for this call, but he thinks it's fine that China has put, measures in for itself. That speaks to the idea that, there's nothing here from that front that is going to really hurt sentiment in China. It's going to help to feed expectations for stimulus. And then finally getting around to the issue, which I think really helps to paint a bullish picture for China, is DeepSeek. The Chinese markets missed most, if not all, of the DeepSeek positives. That's going to come in line. You look at what happened in Hong Kong over the last couple of days, and over the last week or so, it's been one of the better performing markets globally. That doesn't gel with the idea that China's about to sell off because of 10% tariffs, which, it's worth remembering, come on top of tariffs that are already in existence against Chinese exports, going back to, from when they were imposed during the first Chinese term. So, the incremental hit from 10% tariffs on China is less than, the immediate hit that would be if, Canada or Mexico was to get only 10% tariffs.
But the caveat there is also that, of course, we have seen China veer away a lot of the supply chain away from the U.S., right? I mean, I really, to your point, have no idea what we'll see in the Chinese markets today. I mean, DeepSeek is a whole different issue right there, right? But I do wonder if we will see some moves from the PBOC, especially when it comes to the currency side. If you have tariffs, could they try to, make up for that cost with a cheaper yuan? Let the yuan just weaken.
Well, Sherry, the thing is that the PBOC has actually, if anything, moved to rein in yuan declines on exactly that concern. It let it go, was sort of pushed as well to let it go earlier in the immediate aftermath of Trump's election. But when it got the chance, it pulled it right back in. And it's been pretty determined with that daily fixing in the lead-in to what then we had all these tariffs happen. It's probably been helped by the fact that although the yuan, offshore yuan, weakened noticeably after China brought in its tariffs, once the picture became clearer that this was a measured response, that Trump wasn't reacting strongly to this with the potential for counter retaliation. The offshore yuan came back down, came back up overnight. The dollar yuan rate came back down. And we're sitting now with the offshore yuan about 0.5% weaker since the Lunar New Year holiday occurred. That indicates that the currency pressure isn't too huge, and it's quite possible the PBOC will set a fairly staid yuan fix, with the message being that there's no need to rush to devalue now because, again, things are far from being at high levels of concern for China when it comes to the US relationship.
Right, our Chief North Asia correspondent Stephen Engel and Garfield Reynolds, of course, with a breakdown of how markets are expected to trade today. But we have been talking about Alphabet as well, already been caught up in the U.S.-China trade tensions. Steve just mentioned that, of course, seems symbolic given that they haven't really operated in China since 2010. But when it comes to Google, what we're watching today was also the earnings reports. And we just mentioned, you can see right there, that's falling more than 7%. The results falling short of analysts' estimates. Annabelle Jewelers now joins us with the latest. The reaction that we're seeing in the markets, how much is it to do with actual performance? We know that the focus is on their cloud division, with perhaps a contrast with just high expectations about these Magnificent Seven stocks.
Yeah, that's right. Really, the primary reaction that we're seeing today does relate to the cloud business in particular, because overall revenue, we saw growth of around 12% on the year. It was a slight miss on what analysts had been expecting at the headline level. But the cloud, as I said, the primary focus in this, because it has really been seen as the primary growth driver for the business moving forward. What came in terms of the revenue, again, it was just a slight miss on what analysts had been expecting here. So sales at $11.96 billion for the fourth quarter. The estimate you can see there had been for $12.2 billion instead. So about 2% drop from where we had been expecting on Wall Street. But essentially, the cloud business is an area that benefits from all of this spending on computing power and infrastructure. And so it's really been a primary focus as well, because DeepSeek's already been raised or mentioned a couple of times in this show. But essentially...
Saniji, hello. एक बार रिपीट कर देता हूँ जो लोग अभी आए हैं. 6:30 हो चुका है. 6:45 पे एक डेटा आने वाला है. गोल्ड और सिल्वर को इम्पैक्ट करेगा, याद रखना. क्रूड ऑयल को देखेंगे, ऊपर से थोड़ी बहुत सेलिंग है. ये नीचे पूरा ही सपोर्ट जोन है यहाँ से यहाँ तक, ठीक है. इतना बड़ा लगाया नहीं है बिकॉज फिर ऐसा काफ़ी बड़ा हो जाएगा, इसलिए ऊपर लेवल पे थोड़ा क्वांटिटी कम रख लेना है, फिर नीचे आने का ही वेट करना. बट द सपोर्ट स्टार्ट फ्रॉम दिस पर्पल कलर लाइन टू दिस ब्लू कलर लाइन. नेचुरल गैस अटक गया बीच में, ना नीचे आ रहा है ना ऊपर आ रहा है. ऊपर आता है तो यहाँ पर एक सेलिंग का प्लान वापस रख सकते हैं. नीचे आता है तो फिर एक यहाँ बाइंग का प्लान रख सकते हैं 275.8, ये पर्पल कलर की लाइन पे, और फिर इसके नीचे सपोर्ट आपका यही है. ये जो ट्रेड लगा रखा है नेचुरल गैस में, रिस्की ट्रेड था, पहले बता चुका हूँ, ठीक है. ध्यान रखना, यहाँ पर कोई रेजिस्टेंस नहीं है एमसीएक्स में. फॉरेक्स में जरूर है, इसलिए रुक रहा है. एमसीएक्स में नहीं है, एमसीएक्स में थोड़ा सा ऊपर है अभी. बाकी गोल्ड और सिल्वर को देखोगे, गोल्ड और सिल्वर मैंने बता दिया. ओवरऑल व्यू बुलिश है. डेटा देख लेते हैं क्या आने वाला है. आ चुका है डेटा 645 वाला, एडीपी नॉन फार्म एम्प्लॉयमेंट चेंज का. पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर. पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर. कैंडल भी देखोगे ओपन इक्वल टू हाई बनाई है. अभी फिलहाल मार्केट ऑल टाइम हाई के अराउंड है. 5 मिनट टाइम फ्रेम पे, 5 मिनट टाइम फ्रेम पर ही एक रेजिस्टेंस बना हुआ है डे हाई पर. 15 मिनट में अभी भी कोई रेजिस्टेंस नहीं है इसमें, इसलिए 15 मिनट में कोई लेवल मार्क नहीं किया हुआ है. 5 मिनट टाइम फ्रेम पे एक रेजिस्टेंस है, तो वो ही आप लगा सकते हो. फिलहाल डेटा है, ये 5 मिनट के लेवल लगा रहा हूँ, 15 मिनट के नहीं है, ध्यान रखना, कंफ्यूज मत कर लेना नहीं तो. ठीक है, ये 5 मिनट की टाइम फ्रेम 5 मिनट में कन्वर्ट कर लेना इसको. डेटा अभी फिलहाल के लिए पॉजिटिव फॉर डॉलर, यूएस डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर आया है। नेक्स्ट डेटा अब 815 और 830 पर है और क्रूड ऑयल की इन्वेंट्री भी है। ओवरऑल व्यू बुलिश ही है, कोई न्यूज़ पे इम्पैक्ट हुआ तो बात अलग है। 15 मिनट में कोई लेवल नहीं बने ऊपर रेजिस्टेंस के तौर पे तो नहीं लगाए, बन जाएंगे तो लगा लेंगे। व्यू तो बुलिश ही है। बाकी सिल्वर को देखोगे, इसका भी वैसे ओवरऑल व्यू बुलिश ही है। यहाँ पर आपको लेवल वैसे मिल जाएंगे बिकॉज इतना प्राइस प्राइस के पास काफ़ी स्पेस है अभी। कल के जो लेवल हैं फिलहाल वही चल रहे हैं सिल्वर में। ये मैंने फ्यूचर का चार्ट लगा दिया, फॉरेक्स का चार्ट देखना पड़ेगा, एक सेकेंड। हाँ, डेटा तो नेगेटिव ही आया है गोल्ड और सिल्वर के लिए। 645 का जो डेटा था। फिर सिल्वर में वही कल वाला ही लेवल है, 32.57 के अराउंड एक रेजिस्टेंस बना हुआ है 15 मिनट टाइम फ्रेम पे। कल भी वहीं से रेजिस्टेंस लिया था लास्ट टाइम भी, आज भी वहीं से रेजिस्टेंस लिया है। नीचे सपोर्ट अगर देखोगे 15 मिनट टाइम फ्रेम पे, नीचे सपोर्ट देखोगे तो 31.74 के अराउंड एक सपोर्ट मिल जाएगा। 15 मिनट की मैं बात कर रहा हूँ मैं। करते रहो guys. 50 people are watching. 50 likes at least हो जानी चाहिए. Don't forget to like the stream. 6:30 हो गया तो थोड़ा सा volume expect करना चाहिए, आना चाहिए अब.
A rally this evening basically saying Elon Musk wasn't elected to anything, that Elon Musk in doing this, in trying to pare back some of government and particularly the federal government and federal government workers, has had access to Treasury Department material and other private material as
Good morning. We are half an hour away from the open in Hong Kong, Shanghai, and Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Chung-Wilkins.
Our top stories today. Mainland Chinese markets are reopening after that Lunar New Year break, with trade tensions simmering between Washington and Beijing. Today's yuan fixing on watch for any signs that authorities are going to be relaxing their grip.
Investors awaiting also trade negotiations and details from that, even as President Trump says he is not in any rush to talk to Chinese President Xi Jinping after their first exchange of tariffs.
Also ahead, Trump proposes a U.S. takeover of Gaza, saying reconstruction could make it the Riviera of the Middle East.
And China touts surging consumption during the holiday, with box office sales hitting a record. We hear exclusively this hour with the CEO of IMAX China. Right, good morning and welcome to the show. A perfect start to the show with a minor correction on my part. We will be speaking with the IMAX China CEO. Okay, I'm just losing track of day and time and hour and second here, given all the news flow in the next hour of the China Show. In any case, of course, it's happening today. That aside, stocks across the region, as you can see, are playing some catch-up to the gains we had on Wall Street overnight. That may be short-lived. The reason I say that is in the after-hour session in the U.S. more specifically, we did get, of course, a tumble in some of the big tech plays, which is weighing, as you can see, on the S&P contract right now, about 0.25%. All that being said, the separate market story today, which will remain, I think, largely on its own path, will be the reopen of markets onshore in mainland China. So everything from commodities, fixed income securities listed and traded in the mainland. The Stock Connect, of course, reopens today. And just to give you a sense, really, of some of the non-mainland proxies and how they fared while China was shut for the holidays, largely been okay and resilient amidst, of course, what's been taking place on the geopolitical side. Add to that, though, the additional tailwind we're getting across some of the AI plays and the DeepSeek and Alibaba conversation. They're lifting really a lot of the big plays here in Hong Kong. The what to watch as well is CGBs. Okay, we have the first foray now across the CGB curve, 2, 5, 10, and 30. Not a lot of movement there. The 5-year is seeing a little bit of upside as we speak. Golden Dragon Index overnight had a massive day to the upside, so that does bode well, of course, for what we might see today. We are at 4-month highs on the Hang Seng China Index. Massive day again that we had yesterday. The AH premium, there's a benchmark that measures that, actually now is at a 4-month low. But that is mechanical because one part of that equation was actually shut. So we'll expect that to narrow when things come online. And, of course, more importantly, we do get the PBOC fixing of the day for the first time in about a week and a half.
Yeah, that's right, Dave. Well, I hope we've all had our coffees this morning because it's going to be a very busy day. So just stating the obvious, as you say, mainland markets reopening. We've been closed for 6 sessions. There has been an enormous amount of news that has come over that time, not least the DeepSeek story, the AI story, but, of course, this flip-flopping back and forth on the tariffs. Will they, won't they? They did come into play. China retaliated. We're going to see all of that playing through today. A couple of stocks to watch specifically. Zhejiang Mining. Now, this is sort of its own story, receiving binding commitments to raise funds. This is via a strategic private placement, so watch that name. Also, as you were saying, SMIC. I mean, this is the sort of sanctioned, US-sanctioned Chinese semiconductor foundry. Yep. Enormous bump up in the stocks today, 20%. Wow. Over this week in the Hong Kong traded stock. So we'll be we're looking at that onshore one very, very closely. We also have Tyson non-manufacturing PMIs coming through. Just recall, we had on the manufacturing side some weakness coming through, also weakness in the official business survey. Are we seeing signs that growth is stumbling in China? The yuan fix, as we've said, really the first sign from authorities, a really direct sign of where they're going to go when it comes to reacting to some of that weakness in the dollar that we've seen for the first time in quite a while. And we do have the Thai PM in Beijing. Does look like Beijing is rolling out the red carpet. This is, of course, Thaksin, the sort of tycoon turned populist, the daughter of Thaksin. She's also there to make this play that Thailand is still safe for Chinese tourists after some of these quite high-profile incidents and anxieties over cyber scams in neighbouring Myanmar and some of those Southeast Asian countries. So, look, it's a busy day for China. It's a busy day for markets.
Yeah. And speaking of travel, right, the other theme, and Rebecca just mentioned Thailand, I'll just sort of slip this in as well. You know, some of the sort of high-frequency numbers that took place during the holidays, things like, you know, box office spending, travel and spending, do expect some pockets of the market, of course, to come in and come back online in a very good way today.
Yeah, okay. And so turning back a little bit to this geopolitics theme that, of course, we've all been watching, Beijing retaliated to Donald Trump's opening trade war gambit. We saw his tariffs. They're targeting a handful of American companies. They're slapping levies on some U.S. goods. Let's bring in our chief North Asia correspondent, Stephen Engel. I mean, so we saw a fairly restrained response here from the Chinese side. What's the strategy? What's the thinking?
Well, it was calculated and targeted, and it came out within seconds of that deadline passing yesterday afternoon, 1:01 Beijing time in the afternoon, and it was not as large as you could compare it to the last time that China retaliated against those initial salvos from the Trump trade war 1.0 in 2018 and then through 2019. Essentially, Beijing needed to show strength, but not exacerbate the trade war, because the Chinese economy obviously is in much worse footing than it was the last time around. In fact, Larry Hu, who's the chief China economist over at Macquarie, he says China this time around has a lot more to lose. But that's not the message Xi Jinping wants to give to the people of China. He wants to show that they've retaliated swiftly as soon as it became law and it was enacted. The deadline passed. Boom, boom, boom. Here were the different measures that Beijing announced. We can bring it up on a graphic. We can see that essentially 80 products, American products, were brought under the Chinese tariffs. They will take effect, by the way, February 10th. So there's still 5 days to go that there could be some sort of negotiation. We don't know yet, even though there was supposed to be, Trump yesterday, 24 hours ago, said he would likely talk to Xi Jinping within 24 hours. A White House spokesperson said it might be within a couple of days. Peter Navarro said it was going to happen Tuesday night. It hasn't happened yet. Donald Trump is actually saying he's in no hurry. He's in no rush to talk to Xi Jinping, and it was fine that they retaliated in this way. As you can see, 10% tariff on oil and agricultural machinery. In fact, 15% tariff on coal and LNG. It's an interesting fact. Obviously, the U.S. is the biggest LNG exporter in the world, but 6% of its LNG exports went to China. So that's an interesting thing that we can look at on the energy space. Export controls, they've already done export bans on germanium and gallium and other key minerals. This time, tungsten-related materials have been restricted. And then there's that antitrust probe into Google. Highly symbolic, since Google has not been operating in China since 2010. And then PVH Group and Illumina. PVH Group is the parent of Calvin Klein. 6% of their revenue, 16% of their earnings come from China. And also that gene sequencing company, Illumina, gets about 8% of their revenue from the greater China market.
While we, I think, wait for more clarity to your points, that we really don't know when that phone call is taking place.
Right.
If, I mean, who knows, it might be taking place right now. But do we get a sense of the direction of travel here? I mean, could things get better before they get worse, or could it be the opposite?
Well, we don't know. This could be the opening salvo from the Trump administration. It could be the opening retaliation from China. We simply don't know. So you have to kind of look at things, how they move in this new era of the last couple of weeks under the Trump administration. The sentiment gets whipsawed almost daily, right? Yep. So we don't know. But one thing that, again, I mentioned Larry Hu at Macquarie. Let me just read you his quote. "A full-blown trade war is not in China's interest. Instead, China is likely to respond to tariffs mainly through domestic stimulus." Now, that points to what happens 1 month from today, Dave. National People's Congress in Beijing begins on that Wednesday, March 5th. So we're going to have to really look and start calibrating again what is going to be the policy response for the domestic economy and potentially even further afield for the export situation from the legislators who meet in Beijing.
Well, interesting that you note March 5. I think that's also when Donald Trump comes in front of both chambers of Congress. So that's going to be an interesting...
Busy day. Don't take it off.
Yes. Well, don't. Okay? We're all going to be here. All right, team. Fantastic. Thank you so much, Stephen Engel. They're getting us up to speed here on the latest on the sort of first shots fired from both sides. Joining us here on set to talk us through the market implications of this, out of Goldman Sachs, Sifu, China portfolio strategist. Good morning and nice to see you. You guys were, I would imagine, have been busy this week. Did you take any days off, or was it busy for you guys as well?
Definitely everybody is working during the holidays, given all the news about AI development, about tariffs, everything. So it's definitely a busy holiday.
Okay, you guys put up this new report. How does this affect the outlook for Chinese markets?
Yeah. For this year, we don't change our base case view. Even though the tariff announced is smaller than we are expecting and also the market expecting, the 10% tariff increase is smaller than our base assumption is 20% tariff increase. And if thinking about the market, actually,
में टाइम फ्रेम पे सपोर्ट कहाँ होगा गोल्ड में देखना पड़ेगा एक सेकंड
increase. And even in January, when we hold the macro conference here in Hong Kong, we did a polling, and 55% of the audience vote say they are seeing 10 to 20% tariff increase. So it's also slightly higher than what has been announced. But that's definitely, we are seeing great uncertainty this year. As mentioned, how it may evolve. We are still need to watch how the two presidents will talk and negotiate. And also, we are seeing the retaliation measures announced from the China side. Definitely, it shows the attitude of the policymaker. As we just discussed, the tariff announced is much smaller in size. Our estimate is it only impacts 14 billion imports to the U.S., which only accounts for 8.5% of the total U.S. import from China. So it's a small size. But we are seeing more coordinated and comprehensive measure, including putting company into the entity list and probes, and also restrict some exports. So definitely we see the attitudes. So what we are seeing now is we are looking forward to more negotiation and see how it may evolve.
Talk us through, because you've done some sort of calculations.
15 मिनट में देखो एक नीचे मिल जाएगा सपोर्ट आपको 2854.500 2854.500 के अराउंड एक करंट लेवल पे भी है 2861.700 जहां पर अभी आया है 15 मिनट में वो भी एक सपोर्ट ही है
The long term, how the inventory could be addressed or digest. So this is another angle we are looking at. In addition to that, we are also seeing some direct liquidity support to the equity market, including PBOC are providing fundings to corporate use to do buybacks. So we continue expecting that to keep going, and will provide more liquidity for both financial institutions and corporates to invest in the equity market, also bringing long-term capital that will be supportive to the market as well. So these are the domestic measures that will also influence the returns.
Yeah, and we've been waiting for the domestic story to start to catch up to all the stimulus that's been announced. And since you mentioned global long-term investors, do you think the current geopolitical situation, the investment conditions that, we don't know day to day what the headline's going to look like, is that going to be an additional hurdle, you think, global investors to reallocate more back into China? Are they also waiting for things to settle? What's your sense of that?
Yeah, it's still in their mind. During our macro conference, we also did a polling asking what are the macro risks you think about globally that may impact your investment decisions. The top two are tariff first and U.S.-China relations second. So combining these two, 50% of the investors are still considering these risks. So that's why we do think tariffs are impacting their decisions. And also broadly, U.S.-China relations, including technology, capital markets, geopolitics, as we categorize. If we look at our barometer, it suggests the risk level is still in the mid cycle, but slightly to the high end.
Okay, we'll have more from Sifu in a moment. Of course, he'll be rejoining us in a couple of minutes, China portfolio strategist at Goldman Sachs, for more recommendations really on how to trade this market. We are just waiting for the renminbi. The first fixing of the year of the snake should be out in a couple of seconds. As we wait for that, just have a look at this beautiful morning here in Hong Kong. 15 minutes to the opening bell in Hong Kong, in Shanghai, and in Shenzhen. Futures are pointing slightly to the upside. We are coming and waking up to a broad global risk rally still, and futures are indicative, and some of the proxies, while China was sleeping, are pointing to some gains in the opening going. I'm just waiting for this fixing to cross my screens. The estimate is for 728. The last fixing we got was about 716 against the US dollar. We have it now just 7 pips stronger than a 717 handle. Plenty more ahead. This is the China Show. Good morning. Right, welcome back. You're watching the China Show. First fixing is out, year of the snake. And yeah, I mean, the PBOC is retaining more than a little support here for the currency. The fixing coming through about 1,000 or more, 1,000 or so pips stronger than the estimates are out there, of course, given, of course, the initial foray in the trade war. And really the sense is, while the anchoring is still in place, there will be more tolerance to get to see a weaker currency amidst. By the way, I should also mention this, everything else against the dollar has fallen as well. So, on a basket basis, the yuan might actually be trading on the stronger side of things. Back to the equity market implications of all of this. Joining us still here on set, Goldman Sachs China portfolio strategist, Sifu. So we're at 10% on the tariffs. If we go to 20, 30%, do you think the markets will be able to take that in stride? How do you think we're gaming out these scenarios right now?
Even though the announced tariff is 10% increase, we are still taking 20% tariff increase as our base case assumption. This is mainly because we are still seeing some uncertainty about how this may evolve or may continue. And even we take 20% tariff increase into our base case assumption, we are expecting 5% earnings drag from the no tariff scenario. But after that, we are still expecting 7% earnings growth in 2025. And in terms of valuation, we are forecasting 11 times PE value for MSCI China as the fair PE, but the current PE level is only 10 times. So even taking 20% tariff increase, we are still seeing around 15% upside from the current level. So that's why we think the market have pricing in some level of tariffs impact. But other than that, we also think domestic policy delivery is important. Whether fiscal policy will meet the expectation or beat the expectation will also matters for all our assumptions. Especially, we are expecting more stimulus on the consumption side to really boost the confidence and also improve the inflation scenario. This is incorporated into our base case assumption. So that's why I said two sessions will be important events to watch.
Okay. I want to ask about one of the sort of big tailwinds that we might expect to see this year. That is taking some by surprise, which is the DeepSeek development, the AI development. Of course, we're seeing a similar potential product coming from Alibaba too. How much of a boon is this for markets in 2025?
It's definitely surprise to the market, especially during the holiday. People are trying to quantify how much impact it may have, but it's still quite early. It's difficult to really quantify how much productivity impact it may have, but clearly we are seeing from the listing universe in China, we are seeing more soft tech companies, i.e. the AI application companies. The weight is much larger than the hard tech companies. So that's why we think it's more beneficial. If we think about the hard tech versus soft tech tends to benefit more from the DeepSeek development, but hard tech is also it's a little bit of question whether it may suffer because of the low inputs. But besides that, we are also thinking a potential valuation re-rating for Chinese tech companies. If we compare the U.S. tech companies versus Chinese tech companies now, the valuation discount is 66% for Chinese tech. So definitely we see a huge room for them to re-rate if people hold a more optimistic view about the China technology development.
Yeah, and I think you're right. I think in the U.S. we've started to see it's becoming a lot more difficult to impress investors with the earnings season and just the fact that I think AMD came out and some of the earnings coming through really unpressed markets. Final question for you. Best tactical opportunity in whether it's onshore and offshore, and how do you think stuff's going to trade today, first day of trading?
Yeah, the first thing is we continue like the shareholder return strategy.
Okay.
We still think the government will give more policy support as well as funding support for companies to do buybacks and paying dividends. The other theme is AI-related themes. We also recommend a portfolio that looking at AI application companies in China, we highlight them. We think they may have a chance to perform as well. Broadly, we continue like consumer stocks, including consumer services, internet stocks, healthcare stocks as well. We overweight them in the China market. In terms of today, I think it's definitely going to be a very busy day, given all the news announced during the holiday.
Okay, well, on that note, less than 7 minutes to the opening bell. We'll let you go. We know it's going to be a busy day for you, as you point out. Sifu, their China portfolio strategist. At Goldman Sachs, futures are, pre-market in Hong Kong is trading slightly to the upside, although we're already at about 4-month highs on this. So, yeah, a full preview of the trading day is just ahead. Keep it here.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Good morning and welcome back. You're watching the China Show. We're just counting down to the reopen of mainland markets. I think we'll wait for some of the pricing to come through here. It's worth pointing out Hong Kong markets have done extremely well of late, 4-month highs on most of the benchmarks. In fact, they might have done too well. Some overheating signs, early ones, have emerged here. So we'll talk more about that in a moment. But as you can see, we're trading near 21,000. And yeah, we're looking at some of the sort of the A share counterparts of the 8 shares that have done very, very well. And I think really one example of this is SMIC.
Yeah, SMIC. This is, of course, the semiconductor foundry Chinese that is sanctioned, in fact, by the US. But we saw a 20%, nearly 20% bump up this week in the Hong Kong share. We're up about 6.6% in pre-market onshore, but really looking to see whether we come up. By the way, just at 6.6%, that already takes the price to 100.
Yeah, there we go. The one in Hong Kong, as Rebecca was pointing out as well, so we are at a record high on SMIC. And the CSI 300, in the early goings, there we go, just shy of 3,900. Wait for this to really get warmed up, stretch its legs. We have a full runway ahead. This is Bloomberg.
Welcome back. You're watching The China Show. We are counting down to the open of markets here, and it's really all about the reopening of the mainland markets. We've been shut for 6 sessions, Dave, waiting to see whether or not we see some sort of catch-up with Hong Kong counterparts. Of course, I mean, investors have been able to express themselves somewhat through those Hong Kong equities, and of course, we now have this widening premium between A shares and H shares.
Yeah, because stuff has been shut there. That's interesting. It's also going to be the first time, to your point, that mainland investors will, try and, get first dibs really on this AI play. I think we had one day when the DeepSeek story came out and then things went shut in China. So we'll see how this plays out with the sort of Alibabas of the world. So just a couple of seconds to the opening bell here in Hong Kong, 20,900 on that. Okay, here we go. I'm looking at my screens right now. 230 stocks or so on the CSI 300 are trading to the upside. We're better by about 0.7 to 1%. We'll wait for volumes to really give us a better indication of what the pent-up excitement and demand looks like here. Some of the big names, bottom of your screens. The bond markets are also coming back online, including some of the commodities as well. It's worth pointing out iron ore is playing some minor catch-up to the prices we saw, of course, in Singapore, which traded to the upside as well. Okay, you know what? Some of the big names that I'm seeing in the early goings are mostly related to, and as you can see here on the IT index, mostly related to the tech, hardware, IT, and chip design plays, right? So a couple of names on your screens. Let's flip the boards, please. So SMIC is one, iFly Tech, ZTE, Kunlun Tech, 360 Security Tech, Beijing Kingsoft. If those names sound familiar, they're part of some of the AI ETFs traded here in Hong Kong. If they're not familiar, I can tell you they're mostly in that space as well. So we'll continue to track the upside here. So that is really one market theme we were expecting to provide the guide, the support for markets today. One of the stocks, by the way, in play, to see if SMIC is also Shenzhen Innovance, which is traded over clearly in Shenzhen. Okay, Zijin Mining, as Rebecca's pointing out, that's an idiosyncratic story. On top of that, there's the gold price, of course, which I believe is, if not at a record high, I think we see a gold prices push up even further earlier, about an hour back. Let me just check my screens. And while I do that, can you change the page, please, and have a look at Hong Kong, where we are seeing, there we go, pullback about a 1%. MSCI China's down about 1%. Oh, Alibaba keeps giving here, 0.4 of 1% to the upside. Gold prices are 28.73, in case you're curious. And really the momentum, I'll end on this, in Hong Kong. So you have HSI, Hang Seng China, and I think Hang Seng Tech Index following the rally yesterday. First time we are exhibiting some signs that things might be overbought here in Hong Kong. But it's a good problem to have, I guess.
Well, yeah. Let's see. I mean, let's bring in a guest now. We have Carlos Casanova, MD and Senior Asia Economist at UBP, joining us to sort of help break down some of that. I just want to open. We saw this sort of whiplash with the tariff news. We thought they were inevitably coming in, and it looked like there might be a deal because Mexico and Canada had managed to have a reprieve, and then they came through, and then we saw this intermediate retaliation. Is there any way, given this level of unpredictability, is there any way to position as we're going through these extreme periods of turbulence and decision-making?
So what we're going to see under a Trump presidency is a lot more policy uncertainty. And, he started off his first month with a lot of that. Inevitably, given the strong performance of the U.S. economy, we remain quite overweight that sector. There's been some reshuffling within tech, given this evolving AI story, but we're still quite overweight U.S. equities. What we have done in order to address some of that increased volatility, of course, is to look at hedge funds as a vehicle to absorb some of the volatility. And within Asia, we continue to view China as a structural story, but there is also a lot of uncertainty. This domestic policy and also the U.S., and that is going to continue to drive these bouts of market sentiment, increasing and decreasing within that more complicated structural story. So for China, we are looking at structured products as a way to sort of capitalize on the upside while still preserving some protection on the downside.
When it comes to those tariffs, I mean, one thing that economists have said is that inflation might hold Trump back. If we see this reprieve with Canada and Mexico turn into something longer, we don't see tariffs rolled out in other parts of the world, does that give Trump more room to impose higher tariffs on China? And how high do you think we go? What's your base case for this year?
That's very interesting because the tariffs on Canada and Mexico are a lot more problematic for the global economy than China. A 10% on China is not really a problem, and we can discuss retaliatory measures, but they seem very calculated and very mild, in my opinion. Canada and Mexico, it's more problematic because they won't have the same ability as China to offset the impact of tariffs through domestic policy. China's been using deflation and also tax subsidies for exporters to offset some of that pressure. So 10%, I think, won't have a big impact on global inflation. But a global sort of trade tariff would be problematic. And I think that's why we've seen Trump sort of backtracking on some of his previous claims that he would impose tariffs on Canada and Mexico. With China, our view is that 10% was always going to be there, and they would argue that the failure to curb fentanyl exports to the U.S. Warrants that increase in tariffs, modest impact on global inflation, so not a big deal. Over the next few months, what we're going to see is the negotiation of a phase 2 trade deal, which is, of course, very, very beneficial for the U.S. and potentially even beneficial for China, if you ask me.
The supply chains have been rejigged substantially since the pandemic, right? And I think one of the things I was reading earlier on, it really has a minimal impact on the Chinese economy because of just their import exposure to the U.S. How are trade links specifically between China, say, and some of the major trading partners of the U.S., like Mexico, for example, because that seems to be a détente between the U.S. and Mexico? In other words, is that proxy route still open for Chinese exports effectively?
Well, part of that North American trade negotiation will be proving that your exports to the U.S. don't include a significant proportion of Chinese value added.
Yeah.
And it's, as an economist, I can tell you it's a lot more difficult than you think to prove that there is Chinese value added in those exports. But we do note some Chinese investment into manufacturing in Latin American countries, Mexico being one of them, but there are other countries where we've seen an increase in Chinese FDI in order to circumvent some of these tariffs. I think one of the things that the Chinese government have noted is that they will continue to increase their FDI into some of these countries to try to circumvent those tariffs. I guess the key for countries like Mexico will be ensuring that there's enough domestic value added in those products that they export to the U.S. so that they don't get caught up in sanctions or tariffs. So that will entail, rejigging their domestic policies to ensure that Chinese companies are investing not just in assembly or low value added types of manufacturing in the country, but further upstream and leaving more of that value add in the country.
How problematic is it that even though, as you say, we've seen quite restrained, mild, I think is your word, response from the Chinese, how problematic is it that Beijing still does clearly feel a need to respond, even if just symbolically? Because we know Trump is someone that does take symbolism seriously.
Yeah. Yes, but the response is orders of magnitude more moderate than the U.S. So the U.S. is tariffed 13% of its total imports. If you look at the U.S. imports that China has targeted, they constitute 0.7% of its total imports. So it's a very, very, very calculated response. Of course, they have to do something. They're both big men, it's big men politics. But the message that they're sending across to the U.S., in my opinion, is that they are open to a phase 2 negotiation. They are open to buying U.S. imports. And potentially, if we're looking at something like the phase 1, $200 billion per year over the next 4 years, that's 800 billion, or if you factor in all of the imports they didn't buy during the phase 1, 1 trillion. I think that's a very good soundbite for the Trump administration, and it's something that they are likely to pursue more so than increasing tariff levels to, worst case scenario, 60% across the board for Chinese exports.
One of the issues, though, is that there is this Trump sort of skepticism around whether or not China will actually deliver. I mean, that's the issue on the sort of phase 1. Does China have to do more this time around, or what can China do to actually sort of convince the Trump administration that it's going to deliver?
Well, one point that the Trump administration complains about vis-a-vis China, but also Germany, Mexico, and Canada, is that these countries don't consume enough. So the consumption to GDP ratio is too low. And to be very frank, China needs to boost its domestic consumption anyway. So if the pledge comes with some domestic reforms aimed at promoting domestic consumption as the next driver of growth, I think it's more credible than sort of previously, where China was doing a lot of supply side reform but neglecting that demand side. We also have to cut them some slack because of COVID. So hopefully this time around they should be able to meet more than 60% of the commitment, which is what happened during the phase 1 deal.
Well, how's the economy doing apart from this?
We continue to see structural headwinds. It's not easy to sort of destock the real estate sector. 20% of the GDP is under jeopardy. What we have noted over the past year or so is a more willingness to deploy some of the policy levers. So before, a couple of years ago, when we discussed this topic in the show, they were looking more like a Japan, very slow and very hesitant to deliver monetary, fiscal, and other policy levers. I think what we are seeing now is that monetary and fiscal is going to happen in 2025, but they're also going to throw more money at new emerging industries. That's something that really helped the U.S. Get out of the hole in 2008. The Googles, the Facebooks, the Amazons of China this time around should help to offset some of the downside on the real estate front. And what we also could see going into 2025, 2026 is FX reforms. So every 10 or 11 years, they do reconfigure their FX regime. Last time they did this was 2011, so I think we are potentially overdue a reform on the FX front that could buy them some more policy room domestically to do that stimulus and to ensure that consumption does increase.
Well, I mean, just to follow up as a final question there, does that mean likely a stronger currency? Because it's almost like, we're due for an adjustment. It's almost like waiting for, that earthquake that's been long due or an asteroid that hasn't hit in about 1 million years.
Yes, so the US dollar is in the driving seat. So what we've seen across the board in Asia, but in particular in China, is a lot of depreciatory pressure. So they're using up valuable policy space to defend the peg at 7.3. And that's costing them not being able to do more stimulus. So by moving away from such a strong focus on the US dollar to a broader basket of currencies, potentially what we could see is they don't have to defend the currency at that level, and they are able to do a lot more rate cuts and other types of monetary and fiscal stimulus.
Carlos, thank you so much. Nice to see you.
Thanks.
Let's chat again soon. Carlos Casanova there, MD, Senior Economist Asia at UBP. Right, about 11 minutes and 30 seconds into the cash market session. And there we go, how quickly these gains have petered out. We're down about 0.25%. On the CSI 300, although some of the AI and tech plays are still holding up quite well. More on that in a moment.
Yeah, and there's more also on some of these trade tensions that we've been discussing. In the next hour, we'll be speaking with Fudan University Professor of Finance Chen Jun about what he sees as Beijing's muted response to the US tariffs so far. Stay with us. This is Bloomberg. We're keeping an eye on CK Hutchinson shares here, with Panama said to be considering cancelling its port deal with the firm due to Trump's threats about China's involvement in the Panama Canal. For more, let's bring in our China correspondent, Min Lo. Just tell us what's the latest that we know so far.
Yes, so Hutchinson operates two of the 5 ports in the Panama Canal. They have one on each side of the port. They've been doing so since 1997, and their contract was renewed in 2021 for another 25 years. But sources are telling Bloomberg that the Panamanian Authority is considering whether to cancel that contract, and nobody really knows what goes from here, like whether it would end up in a lawsuit, or those sources are saying that the government is hoping to do so in a way that follows due process and that would avoid any lawsuit. But separately, 2 Panamanian attorneys had already filed a lawsuit against that Hutchinson contract, saying that it goes against the authority, the country's constitution, saying that it the contract provides too many concessions in terms of tax breaks and ceding too much land to the company, and the Constitution actually guarantees public interest over private interest. So remains to be seen if Beijing would step in any way to try to exert pressure on Panama, given that it is still the largest trading partner that Panama has.
Speaking of exerting pressure, we know Marco Rubio made a recent trip there.
Yes, so it was his first overseas trip, which shows how important Panama is to American interests. And 2 things came out of that. Panama agreed to 2 concessions. They have agreed to allow the U.S. To have free passage for its naval ships. And they also agreed to sever their relations with China under that Belt and Road Initiative, making them the first Latin American country to do so. But Trump, though, has said that that's not enough. He's not satisfied. He wants more, or he's still going to retake the Panama Canal. And this comes even though in 1999 the State Department had investigated and concluded that Hutchinson doesn't impose any sort of threat to American interests, that they're just there to, develop port facilities, to handle cargo and so on. Well, Trump wants what he wants, and it looks like the momentum is now shifting slightly in favor of Trump.
Min, thank you so much. Min Lo, our China correspondent there. As we were just discussing that story, the Caixin PMI numbers are out. This is for the composite data set and also services or non-manufacturing. So a decline from the previous month and also a miss on the services number. So 52.4 was the survey. We came in flat at 51. So again, weaker currency looks to be in reaction to this. Plenty more ahead. This is Bloomberg.
President Trump's tariffs are firmly in focus for Chinese media as we look at what's trending in China today. We have an editorial in the China Daily saying that protectionism and isolationism will not benefit the US. It says while Washington claims it's only protecting its domestic industries, these sort of barriers will hurt its own consumers and businesses. The editorial also points out that Chinese measures are tailored to avoid hurting overall economic relations, and areas that Beijing will impose retaliatory tariffs from February 10 include LNG, oil and coal. So keen there to stress some of that restrictive, mild tone of that response.
Yeah, measured approach there for now. The top story on the People's Daily isn't about tariffs, in fact, here, but the Lunar New Year. And, of course, a reminder that we are just coming out of that with the first trading session a few minutes in, showcasing celebrations from just around the world, including a lion dance in London. Now, Xinhua also sees the 8-day Lunar New Year holiday boosting domestic travel and also consumption. The report says box office revenue for the holiday averaged $140 million, that's US dollars a day, setting a new record for the period. Right. Joining us to talk us through this story is our global business reporter Adrian Wong is here with the details to break down the spending numbers for us. So, yeah, where did we see people spend their hard-earned moolah?
Well, let's talk about movies, right? Yeah. So we saw a record $1.3 billion spent during that Lunar New Year holiday. So pretty much every day, they actually topped 1 billion yuan in box office sales, which is up 18% from the year earlier. It also was, and those were numbers according to Maoyan, the ticketing site. And another data point that we can also look at is IMAX China, because they also saw all kind of records being shattered as well, seeing $53 million in sales, which beat its record in 2023, up 57%. Now, IMAX does has a lot of theaters, 800 theaters in China, the most in any market. And so they saw record 5.5 million people going to the movies, also record market share at 4% as well. So it really does kind of suggest that the officials, when they introduced those subsidies last year, they may be working. And I remember one of your guests yesterday, I think it was Professor John Gong in Beijing, saying he was trying to buy a movie ticket, but unfortunately all the theaters were sold out. So it does kind of show a little bit of a turnaround, at least in sentiment. So it's still early days, but when you compare to the box office sales in 2024, that was actually down over 20%.
So sort of booming demand for movies, but really it's being dominated by domestic production here. I just want to ask, I mean, do these tensions with Washington, do they affect Hollywood movies being made in China? Is it impacting business there?
I mean, certainly, yes, geopolitics can shape priorities. It can also complicate the plans for US studios to release those big movies. I mean, later this year, we have the sequels to Avatar and Zootopia from Disney. And they were hugely popular in China when they were released. But for context, like we know that China has censored movies which were, deemed too westernized or like immoral. But there are signs that things are easing up, because last year China actually introduced over 90 foreign films into China, which was the most since 2019. And like I mentioned earlier about the subsidies, the thing is, economics really is playing such a huge part now, where China really is, you guys have been talking on the show, really trying to boost consumer demand. And so it's kind of a bit of a fine balance of like weighing geopolitics and the economy as well, because Ying Zhu, who is the author of Hollywood in China, she was saying that, you know, the movie industry in China cannot produce enough domestic movies to sustain a market. They do need to rely on Hollywood and also other international films to kind of sustain that market and make it stronger. And when we look at geopolitics, there's a lot of things to consider, because it's not just US. I mean, if you look at Indian movies, we saw those disputed those clashes with the Indian troops in those disputed areas back in 2020, and as a result, China approved 0 Indian movies for like a couple of years. So it does play a part. However, the economy really is the key here. It really is a key proxy for consumer spending.
Bloomberg's global business reporter Adrian Wong there. And there is plenty more coming up on the Chinese cinema sector and broader consumer sentiment with the CEO of IMAX China, Daniel Manwaring. He joins us exclusively in a little over half an hour. Stay with us.
Yeah, if you have any questions for him, you know how to reach us, of course, for Bloomberg clients. Okay, so breaking news, and the geopolitical story is keeps on giving. So this is according to the U.S. Postal Service website. They have now announced that effective yesterday, Feb 4th, still in the U.S., of course, the Postal Service will temporarily suspend only international package acceptance of inbound parcels from Hong Kong and China until further notice. Note that the flow of letters and flats from China and Hong Kong will not be impacted. Okay, just that's really quite a short statement. Yeah. Headline tells you everything you need to know about this.
A little bit of context we can add.
Sure.
That part of this is, we have to assume, is linked to the de minimis restriction that's been removed.
That's right. Yeah.
I.e., parcels that are worth $800 or less no longer get. Sorry, excuse me. Yeah, below. They don't get this exemption anymore. So perhaps related to that.
Okay, this is now a housekeeping exercise for me. I just had a parcel actually sent, so I need to check actually who the courier is for that. If it doesn't come, it doesn't come, as they say. It's not expensive. I know I'm not going to tell you this what it is. IT stocks and AI and tech bucking the overall trend, as you can see here. So most sectors have actually now erased the earlier gains. And while this group has actually still held up quite substantially, so Kingsoft down to iFly Tech, Kunlun Tech, flip the boards, same theme here. SMIC, ZTE, Range Intelligence, and really good gains here. Okay, lots more coming up in the second hour of the China show amidst this broad rally still showing up in pockets of the region. So, yeah, lots more ahead. This is Bloomberg. Welcome back. You're watching the China show. So, yeah, a couple of things we're tracking here. Of course, Chinese stocks coming back online in mainland China, to be more specific. Left side of your screens is, of course, a beautiful live shot of what still doesn't look to be a very busy financial district there in Lujiazui in Shanghai. The view, of course, from our offices there in Shanghai. The benchmark is down about 0.4 to 1%. Overall, though, we are seeing most stocks have lost some momentum, if not most, from the open, with the exception of this group of stocks coming on your screens very, very shortly. So a lot of the tech, AI, hardware-related stocks, even some of the software developers, are actually seeing some upside right now. And just really, this is really an emerging theme. Well, it has been an emerging theme domestically. The world just caught notice of it largely 2 weeks ago with DeepSeek's model, of course, and then shortly after that, Alibaba. So everything from Giga Semiconductor, SMIC has really been a very popular play in Hong Kong. Are we going to change the page? Thank you so much. There we go. On your screens, are we showing that? I guess not. Not this. Can we go back to the other one, please? Not this. Can we go back to the other one? I want to tell my the viewers about that, too. Giga Device, SMIC, Range Intelligence, ZTE. Really, if you do an MOV on your screens here on the Bloomberg terminal, you do get a sense of that this is really 10 or 15 of the biggest gainers onshore are really most of these stocks on your screens, with the exception of some of the, I think some of the gold miners are also seeing some gains as well. Right. On the geopolitical story, which is related to this tungsten-related stocks, of course, on the back of the announcements that we had yesterday, included in the minimum necessary exercise and that response coming out of China. Some upside there. North America exposed mainland stocks on your screen shortly coming up too. And yeah, I mean, apart from that, the story that is starting to emerge right now, we'll talk about this later, is we're seeing a lot of profit taking place here in Hong Kong, with some of these e-commerce related firms extending their losses, with JD.com in fact down about 5%. We could talk about that later. Asia ex-China looking like this. So apart from mainland China and Hong Kong seeing some downside, you are still getting some support in the form of a Korean market and a Taiwanese market that are doing quite well in the early goings of this Wednesday. The dollar is flat. S&P futures are down after some rather, I wouldn't say disappointing, but the markets really have a very high bar not to be impressed by these tech earnings. We'll get to that, of course, later on in the show. Right, more context for markets. Mark Cranfield joins us right now, our MLive strategist, to talk us through this. Mark, are you excited about this reopen today in mainland China? Seems to be not giving us a lot to talk about today. I don't know. What do you think?
We've been excited about it since last week. We couldn't wait for China to come back. I think we just have to get used to erratic trading. You have to consider that where we are in the whole thing here. We're at the beginning of what could be a protracted trade war. We don't know exactly how bad it's going to be. So far, it doesn't look as though it's the worst case scenario, so investors are probably slightly relieved about that. But we're also going to have to get used to some very specific things which the Chinese market is going to focus on. Hopefully, from their point of view, it will be good. You've just been talking about the AI reaction. So there's clearly a good story there, and Bloomberg Economics have written about how much that is already contributing to growth in China. Significant numbers, outperformance, really. The whole sector, AI-related sector, is doing very good things already for the Chinese economy, which obviously is in contrast to sectors like property and things like that. But investors will still want to see more of a top-down approach from the Chinese government. They will still want to see the big bazooka come out in terms of overall stimulus, because they know that from the other side, they can't rely on the United States to help them out. So China's got to do a lot more to develop itself to make sure that its markets are becoming ring-fenced to some extent from the rest of the world, and they're on the way towards doing that. But they can't operate completely in isolation. They know they're affected by what goes on outside. But that volatility, that conflict is going to go on for a long time. It's going to make it very tough for traders. Short-term traders will probably enjoy this a lot more than portfolio managers. Trying to take medium to long-term views will be increasingly difficult, apart from on specific sectors such as the AI space.
Mark, we saw relatively robust fix again today. When do we see the PBOC easing up on the yuan?
Pretty soon, I should think. The part of the fixing today is backward looking, because it has to reflect where the last trading was for the CNY before they went into the break. So now onshore markets have reopened. The onshore dollar yuan trading has resumed. It's getting closer to where the CNH has been trading. The offshore yuan weakened quite a bit while China were on holiday. It's not as weak as the worst case, around 737, but it's still relatively weak compared to where they were. So the onshore is now catching up with that. By the time we come to the fixing in the next couple of days, if the onshore yuan is allowed to stay at those kind of levels, we might be getting to 7.3 pretty soon. It will start to be reflected in the fixing. The PBOC have shown they can be pretty aggressive. They can have a very big divergence between where traders are expecting it and where they actually fix it. It could be 1,500 pips. Today it was only 1,100 pips. There's plenty of room to go on there. But they will probably be looking back at 2018, 2019. They will appreciate that eventually the yuan needs to get weaker and weaker to compensate for the friction outside in the rest of the world. So the path of the yuan is probably going to be a steady move for it to get slightly weaker over time. As long as they keep to their word, which is they will not devalue the currency, probably nobody will be too concerned about it. But traders will see it as a slow burn situation, probably moving towards the 7.5 area over the months ahead.
Mark, I miss talking about the Fed. This might be the longest stretch on shows that we haven't over-obsessed about a Fed that, to be frank, I was kind of fed up talking about. But why do we talk about the Fed? When do we start talking about the Fed again? I think we have a jobs report coming up.
Yeah, I mean, with the Fed is always there in the background. There's Fed speakers on a continuous basis. More of their expressions are that they can stay on hold for longer. They want more time to see how things are playing out. Of course, they must be slightly concerned that the inflationary situation is starting to come back. CPI numbers will probably take over from jobs numbers as being the bigger factor in the short term. They really will be very concerned to see, they've set their target, it's been moving towards this 2% area, but clearly the fact that new policies coming out from the US administration do risk upside moves in inflation, and people are already beginning to see the consequences of that. So that's those numbers, the CPI reports, and anything suggesting that traders are pricing in higher break-even rates as well. That will concern the Fed as well. So they'll be watching that very, very closely. The jobs market has been relatively stable and pretty strong. They won't be so concerned about that. But they counted so much on inflation coming down into their target range. Watch what Fed speakers have to say about that, because it could mean they're on hold for a very long time. Already some analysts are suggesting the Fed won't move at all this year.
Well, yeah, I mean, with a U.S. break-even, I'm just looking at a 2-year here. We're back to 2-year highs in this. Who would have imagined, Mark, that we'd be here in this situation again? Mark, thank you. Mark Cranfield there with some sober advice, MLive strategist in Singapore for us. We were talking about e-commerce stocks in Hong Kong. So JD.com and Alibaba are leading these declines and the weakness coming through. Although as I speak, we're just coming off lows in Baba. JD.com is off about 5%. It's worth pointing out that overnight, I think JD.com also had some weakness. I'll correct myself if I'm wrong. But in any case, the breaking news earlier on was the U.S. Postal Service suspending their inbound parcels, so into the U.S. from China and also from Hong Kong. To the point you're making earlier, this might have to do with these restrictions around this too.
Right, we have the removal of this de minimis exemption, which means that basically packages worth $800 or less are no longer free of tariffs. So, yeah, we'll wait to see if this is actually just the first step in rolling that whole plan out. But for more on Trump's response, on China's response to Trump's tariffs, let's bring in Tian Jun. He's a professor of finance and the executive dean of the International School of Finance at Fudan University. I mean, just to kick off, we've heard that China's response being described as moderate, mild, restrained, very considered. Did it surprise you, though, to see the response coming out so swiftly, really within minutes past that 1:01 p.m. deadline in Hong Kong?
I think the response is mostly as expected. As I would tell my students, this is the beginning round of a multiple round bargaining game, if you will. So clearly, no response is not an optimal strategy because you need something to gain leverage to further talk. But what you've seen is that the China response is a measure one. What that means is that China doesn't want to escalate first. So on the other side, the additional 10% put on by the new Trump administration is also very much as expected. So I guess the interesting thing is we'll see what's going to be next.
Yeah, I was curious. Well, I'm curious to get your thoughts on this. Why we did not see any announcements on fentanyl?
Again, this is a tricky situation. I don't follow that as much. I guess from China's side, the view perhaps is that there's only so much that China can do. Especially compared to Mexico, for example. So I know that the Chinese government is trying to assure the U.S. that China certainly doesn't want to export anything related to this. But in terms of exactly what China can do, we'll see. My own assessment is that this is different between China and Mexico. Mexico, because of the border, perhaps it can do more, as we have seen in what Mexico has been doing. But with China, we'll see if there's anything else other than fentanyl that can lead to further discussion between the two countries about economic relations.
there have been some economists and other analysts who have argued that the inflationary pressures that come from Donald Trump's tariffs will essentially curtail his willingness, that he will be somewhat more moderate imposing those because he'll be cautious about wanting to lead to inflation in the US. What if, though, Trump's, which is what he said himself, sees tariffs as not a means to an end, but an end in and of itself? What if tariffs are actually a way of raising revenue rather than just a mechanism or a type of leverage to renegotiate the balance of power? What does that mean for China?
Well, you talk about international trade 101, the stronger effect of a tariff for U.S. is that prices will go up, especially if the tariffs on Mexico would actually come into play. Because we know that, if you look at the largest trading partner for the U.S., Mexico is number one, China is number two, and there's the EU, and there's also Vietnam. So if you raise a tariff, if you increase tariff, there's a lot of studies showing that overwhelming amount of the tariff, 95% or more, will be borne by domestic importers and consumers. So if you're Trump, you've got to care more about inflationary pressure, because I think that's what got Biden into trouble, even though the U.S. economy did actually quite well last year. For China, on the other hand, the strategy has been that China is going to diversify more about its import-export structure. And also the other thing is that you want to diversify your supply chain and production chain more. On the other hand, China is going to stay open to the world. I think for China, that's their strategy, basically regardless of what the U.S. will do.
Yeah, Professor, you bring up a fantastic point. I mean, China has diversified their supply chain. I mean, look at the links between mainland China and Southeast Asia, for one. They've also, to your other point, diversified their export markets a lot more. And I think tariffs, in a funny way, come back into the conversation because tariffs are an answer. And funnily enough, the Canadians raised tariffs on Chinese EVs because they were just too competitive, for example, by 100%. And no one was causing an uproar back then, but that's a separate conversation. So my point is China's economy now structurally more resilient to deal with even the worst-case tariffs that Donald Trump can throw at the Chinese economy? And I think the same part of the question, too, is, is the tariff threat from the White House as potent this time around as it was back in 2019?
So this is a good question. On the one hand, I do believe the Chinese economy, especially the more diversified export-import supply chain and production chain, to deal with this type of tariff situation than before. On the other hand, clearly more domestic support is also needed, because I really think that the more urgent situation is that in the domestic economy, we need more stimulus, especially fiscal stimulus, to get real estate, local government debt situation in order, and stimulate domestic consumption. On the other hand, if you look at globally, as I said, I think China is better equipped to deal with this tariff situation than before, because, as you said, the production chain, the supply chain has been present in Southeast Asia, in Mexico, and other parts of the world. So, as I said, if Trump also raises tariff on Mexico, on EU, on Vietnam, on Southeast Asia, that pressure, that's going to go back to influence the CPI situation, the inflation level in the U.S. So for China, on the other hand, really, it's two things. On the global front, stay more open, further diversify the supply chains, but also at the same time, very importantly, they need to stimulate the domestic economy more and stabilize the financial system.
Yeah, well, let's end on that final point you made, because they solved that problem. Arguably, the world has another problem to worry about, which is inflation coming out of China. Where do you think the priority should be to fix the domestic consumption problem? And what's your sense of, the output gaps, for example? When does inflation come back in China in a big way?
So I hope, I'm hopeful that first, you will see a lot more fiscal stimulus out of China, perhaps as soon as the 2 Congress in March. And also the other indicator we should observe is what's the target, what's the growth target that the Chinese government will set. If it's going to be 5%, around 5% again, that actually signals that the Chinese government will indeed have more stimulus to support that growth target. So with the Chinese economy, I think at the moment, 2 things are the most important. One is to stabilize the real estate sector and the local government debt situation. With the real estate sector, you do see encouraging signs in the top tier cities, like in Shanghai. The last 3 months, the numbers for secondhand sales of apartment has been encouraging. So there's some good signs there. Also with local government debt situation, again, we need more. We need more fiscal stimulus to buy up this, to buy up the inventory housing, to solve these debt issues. And the other point is that we need to help the domestic consumers. There are many ways of doing it. So with those 2 things effective, hopefully we'll see that CPI will go up by at least 0.5% to 1% this year. And if that happens, and if the real estate sector stabilizes, I think Chinese economy will start its rebound going forward.
Professor, I know I mentioned final. Let me just ask another final one. I promise, final one, because you provide unique insights here. How do your students feel about their jobs prospects? What's the sense right now as far as, because that's a very important window into what this economy looks like and feels like?
It's interesting. So we're a school of finance. So for the financial services industry in mainland China, also in Hong Kong, jobs are still there. Obviously, there's some adjustment. On the other hand, I think with the tech booming, there are a lot of new opportunities related to finance plus technology. So again, if you're an undergraduate or graduate student coming out of university, there are a lot of opportunities in this AI application fields. On the other hand, if you look at traditional manufacturing, I think the main problem is that there's a lot of mismatches between supply and demand. If you go to factories in Zhejiang, for example, they use a lot of robots, but they also need a lot of high-skilled labor worker, and the supply is simply not there. So, the labor market is dynamic evolving. On the one side, there should be a lot of opportunities related to AI applications. On the other hand, there are a lot of opportunities into modern manufacturing, but the labor force need to acquire the necessary skills.
Tian Jun, Professor of Finance and Executive Dean of International School of Finance at Fudan University there. Thank you for joining us. Stay with us. We'll be talking more about this tariff theme. There is plenty more ahead. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
President Trump has proposed the US taking over the Gaza Strip and assuming responsibility for reconstructing the war-torn territory. He made the suggestion while hosting Israeli Prime Minister Benjamin Netanyahu at the White House. Just take a listen.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
Let's bring in Bloomberg News editor Jill Desis here. Jill, explain the latest. What do we know so far?
Yeah, I mean, this is an absolutely remarkable statement from a sitting U.S. president. I mean, essentially sweeping away decades of how the U.S. has really shaped foreign policy when it comes to the Middle East. Really sort of no indication here in this statement from Donald Trump that he supports any type of two-state solution or Palestinian statehood in the Gaza Strip. He essentially kind of implied that the Gaza Strip should become some kind of a massive development block. He referred to it as the Riviera of the Middle East, potentially. Sort of sweeping away all of everything there. I think what's really important to sort of keep in mind as we kind of digest some of these comments from Donald Trump is that, first of all, other neighboring Arab nations have not agreed to take in Palestinians that leave the Strip. And Netanyahu, who was sitting beside Donald Trump during this very press conference, sort of declined to formally, full-throatedly endorse anything that Donald Trump was sort of putting forth here. But I do think that, just kind of as we sort of sit here and kind of read into what Donald Trump is saying, obviously lots of developments here that I think we still need to kind of see how, this type of statement from the U.S. president really takes shape.
Yeah, okay. Well, we'll wait for the next press briefing. Who knows when that's going to be. Jill, thank you so much. Jill Desis there, our news desk editor. Right, markets in Hong Kong are down about 1.4%, just near session lows. Plenty more ahead. Market check plus others coming through. This is Bloomberg. Welcome back. So we're about an hour into the, first session back for mainland markets, as you can see. So we're now on price itself. We're down a little bit right now. The Stock Connect, of course, is back online. So this sort of free flow of exchange between Hong Kong and, of course, mainland exchanges are up and running as well. And certainly the closure of that premium that's narrowed is starting to close a little bit today. As far as the sector movers are concerned here, so apart from the AI and sort of tech theme, everything is actually seeing some downside on the CSI 300. There we go. And as you can see, that's showing up quite clearly. Maybe you could make out some gains here as far as some of the cyclicals are concerned. But apart from that, it's really a broad-based decline in this market an hour into the year of the snake. This is Bloomberg. Right, welcome back. It's 11:29 in the morning over in Tokyo. Japanese markets are just going to the break in a minute. So the major data point coming through out of Japan, we look at markets there, was wages and wage inflation. The biggest wage hike in Japan going back to 1997, so just under 5% on nominal wages coming through. Adjusted for inflation, we're still seeing some wages coming, at least outpacing inflation, but not by that much. If you adjust it for the currency hit, though, that makes Japanese yen earners feeling the poorest in a generation. But I guess if you ply your trade mostly in Japan, that should not affect you. For our colleagues, of course, in the Japan office, it might be venturing out, maybe paying us a visit here in Hong Kong. Well, the bill is still on you. Keep it that way. All right, S&P futures are down right now. A lot of this is down to earnings. Big tech earnings coming through, so some of the gains that we did see overnight are petering out right now. The dollar is weaker. Gold is catching a strong bid today, just under 2,900 an ounce. Right.
Yes, well, it's also coming out of Lunar New Year, which means we're coming out of this period of sort of high-frequency data. We tend to try and look at some of this to understand how demand is recovering in China after the COVID-19 pandemics, of course. And so just taking a look at some of the China cinema stocks. Now, we did have a little bit of a pullback in stocks, Chinese stocks in Hong Kong today, so just bear that in mind. But as you can see, IMAX China up about 1% or so, but really sort sort of the abnormality here. Maoyan, Alibaba Pictures, Wonder, all down. Maoyan in double digits at 10.5%. Now, that's all, you know, of course, there's this broader recalibration in the markets that we're seeing today. But it does come in this context that Lunar New Year box office sales reached this record $1.3 billion. That's an 18% increase from the previous year. So quite a bump up here.
Bit crazy, actually, and I think it still should be ongoing right now. And I think when you compare that to previous years, I think for one, there are two themes at play here, right? You know, and you and I were talking earlier on during the break. You know, have habits of moviegoers changed? You know, do you only go to see movies, whereas if one had gone more frequently in yesteryear, now you wait for special occasions, right? So a lot of it is also, was it front-loaded and concentrated within the last 8 days or so, or are we actually seeing some green shoots emerging here as far as the broader consumption themes are concerned here?
Just to put it in context, last year's decline was 23%. So even just sort of moving very firmly into this green territory, it is a big shift year over year, you know, when we think about it. Anyway, joining us now exclusively is Daniel Malwaring, CEO of IMAX China, joining us. I mean, I want to start with that big sort of number here. What have you seen for your Lunar New Year sales, and what has really driven this sort of spike?
Yeah, it's really unprecedented. I mean, we think that, number one, we're seeing a major preference for premium. You know, IMAX saw its greatest market share ever in the company's history. And what's most interesting is that market share was growing every single day from day one all the way to the last day. And so that preference for premium was really, really high. And obviously, premium means highest ticket prices in the market. But I think one of the most encouraging things that we've seen is, you know, this is just a further example that last year's down market was really a result of film supply or lack of film supply. When the films are there, the audience is there. And the movie-going audience in China after this Chinese New Year has really proven to be fully back in force. And I think that there's a lot to come even post this holiday window.
So Daniel, let me follow up then. What is the pipeline then for films? Because to your point, that seems to be a big driver currently.
Well, I think, number one, the Chinese New Year titles are going to continue to play, you know, really strong through the rest of February and even possibly beyond. Typically, these higher quality films have very long legs, so I think we'll definitely see a pretty long tail there. And even looking into some of the other windows like May holiday and summer, obviously release dates, you know, haven't been confirmed for local language titles, but we're certainly seeing a lot more transparency into what that slate is looking like compared to last year. Just to let you know, we've got the highest number of film for IMAX local language Chinese titles in the market this year. And those are big budget movies that are shot on our certified cameras by the best directors in the country. So I think this is only the beginning of a lot of really positive momentum for the year.
How are tastes for Chinese moviegoers changing? I'm thinking both in terms of what it is that they want to see, but also how frequently and who it is that tends to be going to the cinema.
It's a great question. You know, number one, tastes are constantly changing, especially in China, just like every other sector of this economy. I mean, it changes so fast and so frequently. But I would say that, you know, this Chinese New Year holiday, we still saw confirmation that big IP really does work. I mean, the Ne Zha first film did incredible numbers, both for IMAX as well as the industry. Number two, obviously, is surpassing that in a very big way. But I think the most important thing is we're seeing audiences with a more sophisticated and refined taste. I think the demand for quality has increased a lot, and that's also relevant in their preference over premium formats and higher quality experiences like with IMAX. So I think it's a good thing. It's a natural thing to see the elevation of production, storytelling, as well as audience preference just continue to go up.
And Daniel, the notion that, and I think you made a very good point earlier on, I like that insight, that, you know, this preference for premium showed up in the last few days or so. I'm wondering what insights you can glean, though, in terms of just the notion that consumers are spending in spots, for example, right? That is there, can we be confident that they will continue to spend as much on aggregate, say per capita, going to theaters and watching movies, or is there a broader shift that's taking place that's not very visible if you just look at the last 10 days?
I think the demand for experiences is stronger than ever. And I think that area specifically is going to continue to grow. So when there's a big event, when there's a big movie, particularly younger audiences really are going to be very open to whatever is going to bring them the best possible experience, regardless of the price. So I think experience is key here. And again, we saw our highest numbers ever on an animated film, and that typically is not a film we would normally see our IMAX indexing highest, right? We've traditionally in the past few years done really well in action and sci-fi and those genres, but to see IMAX's performance on an animated film is really telling of the overall audience preference for premium, regardless of what that genre really is.
Right, but Daniel, the other part to the question too, and sorry if I wasn't clear on that too, are people still spending as much on going to movies as frequently as they once did?
Again, I think it's all about the movies. When the quality movies are there, they are going to show up. I don't know what the exact number is now, but I think even Ne Zha 2 saw 180 plus million people went and watched that movie over the course of 7 days. That number will likely surpass 200 million probably before the end of this weekend. So I think as long as the films are there, the audience is there.
Okay, Daniel, unprecedented response. That's your words there. What are your plans for IMAX expansion in China this year?
Well, I think this has really been a great kickstart to all areas of our business. I have a feeling we're going to see a lot more upgrades. We're going to certainly continue to do more films, both local language and Hollywood. The Hollywood slate looks really great. We've got Avatar 3 coming out, obviously Zootopia 2, and a whole host of other local language Chinese films. So, growth is our main priority right now, and capitalizing on an incredible Chinese New Year is priority number one.
What's the CapEx spend you have in mind for this year, Daniel?
Well, I don't have a specific number in mind. I think we're highly focused on, high PSA or per screen average territories. So, we don't really give ourselves a CapEx number at the beginning of the year. We remain very opportunistic in where we expand. But content is key, and I think we're going to be really specific in choosing the right movies for the rest of the year.
Daniel, you touched there on Hollywood movies coming to China. I want to ask you how geopolitics is playing into the movie scene. How are tensions in Washington kind of falling out on the Hollywood offering and the Hollywood business in China?
Yeah, it's a great question. We're really fortunate to be in a fairly isolated sector, I would say. We have seen really incredible openness in terms of policy domestically here on the mainland. A lot of Hollywood films are getting in, and so that's kind of always been our regulatory sense, is what Hollywood films are going to be able to get in. As it is right now, I don't see that changing. The tone of the regulatory bureau here is that they want to continue to grow the film industry. They want to allow as many films as possible into the country, and so we continue to see that being the likely scenario for 2025.
Daniel, I know you guys might be in somewhat of a quiet period, but I'll try to get it out of you. I think you had a very good first half of last year, calendar half. In dollar terms, do you guys think you crossed $1 million US in revenue in 2024?
I can't speak to that because we haven't disclosed our year-end numbers, so I apologize, and I'm not able to speak to that. But, you know, honestly, last year is just so far in the rearview mirror after the last 7 days that I don't even think it matters. I mean, I think last year, again, was a result. It was sort of a for the industry, it was a hangover of COVID. You know, the films that came out in 2024 were the result of a lot of smaller budgets, an uncertainty in 2023. There weren't a lot of film. You know, 2023, we exhausted a whole bunch of films that were sort of on the shelf in the previous 3 years. So 2024 was a real transitional year, and I think all eyes were on this past week to see, okay, we're past COVID, we're past the hangover, what does the future look like? And I think we saw a great example of that.
Okay, thank you, Daniel Manwaring, CEO of IMAX China there. And if you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function TV Go. And you can join the conversation by sending us instant messages to our team and our guests during the live show. Check it out at TV Go. This is Bloomberg.
Good morning. We are half an hour away from the open in Hong Kong, Shanghai, and Shenzhen. You're watching The China Show. I'm David Ingles with Rebecca Chung-Wilkins.
Our top stories today. Mainland Chinese markets are reopening after that Lunar New Year break, with trade tensions simmering between Washington and Beijing. Today's yuan fixing on watch for any signs that authorities are going to be relaxing their grip.
Investors awaiting also trade negotiations and details from that, even as President Trump says he is not in any rush to talk to Chinese President Xi Jinping after their first exchange of tariffs.
Also ahead, Trump proposes a U.S. takeover of Gaza, saying reconstruction could make it the Riviera of the Middle East.
And China touts surging consumption during the holiday, with box office sales hitting a record. We hear exclusively this hour with the CEO of IMAX China. Right, good morning and welcome to the show. A perfect start to the show with a minor correction on my part. We will be speaking with the IMAX China CEO. Okay, I'm just losing track of day and time and hour and second here, given all the news flow in the next hour of the China Show. In any case, of course, it's happening today. That aside, stocks across the region, as you can see, are playing some catch-up to the gains we had on Wall Street overnight. That may be short-lived. The reason I say that is in the after-hour session in the U.S. more specifically, we did get, of course, a tumble in some of the big tech plays, which is weighing, as you can see, on the S&P contract right now, about 0.25%. All that being said, the separate market story today, which will remain, I think, largely on its own path, will be the reopen of markets onshore in mainland China. So everything from commodities, fixed income securities listed and traded in the mainland. The Stock Connect, of course, reopens today. And just to give you a sense, really, of some of the non-mainland proxies and how they fared while China was shut for the holidays, largely been okay and resilient amidst, of course, what's been taking place on the geopolitical side. Add to that, though, the additional tailwind we're getting across some of the AI plays and the DeepSeek and Alibaba conversation. They're lifting really a lot of the big plays here in Hong Kong. The what to watch as well is CGBs. Okay, we have the first foray now across the CGB curve, 2, 5, 10, and 30. Not a lot of movement there. The 5-year is seeing a little bit of upside as we speak. Golden Dragon Index overnight had a massive day to the upside, so that does bode well, of course, for what we might see today. We are at 4-month highs on the Hang Seng China Index. Massive day again that we had yesterday. The AH Premium, there's a benchmark that measures that, actually now is at a 4-month low. but that is mechanical because one part of that equation was actually shut. So we'll expect that to narrow when things come online. And of course, more importantly, we do get the PBOC fixing of the day for the first time in about a week and a half.
Yeah, that's right, Dave. Well, I hope we've all had our coffees this morning because it's going to be a very busy day. So just stating the obvious, as you say, mainland markets reopening. We've been closed for 6 sessions. There has been an enormous amount of news that has come over that time, not least the DeepSeek story, the AI story, but of course, this flip-flopping back and forth on the tariffs. Will they, won't they? They did come into play. China retaliated. We're going to see all of that playing through today. A couple of stocks to watch specifically. Zhejiang Mining. Now, this is its own story, receiving binding commitments to raise funds. This is via a strategic private placement, so watch that name. Also, as you were saying, SMIC, I mean, this is the sanctioned, US-sanctioned Chinese semiconductor foundry. Yep. Enormous bump up in the stocks today, 20%, wow. Over this week in the Hong Kong traded stock. So we'll be looking at that onshore one very, very closely. We also have Tyson non-manufacturing PMIs coming through. Just recall, we had on the manufacturing side some weakness coming through, also weakness in the official business survey. Are we seeing signs that growth is stumbling in China? The yuan fix, as we've said, really the first sign from authorities, a really direct sign of where they're going to go when it comes to reacting to some of that weakness in the dollar that we've seen for the first time in quite a while. And we do have the Thai PM in Beijing. Does look like Beijing is rolling out the red carpet. This is, of course, Thaksin, the tycoon turned populist, the daughter of Thaksin. She's also there to make this play that Thailand is still safe for Chinese tourists after some of these quite high-profile incidents and anxieties over cyber scams in neighbouring Myanmar and some of those Southeast Asian countries. So, look, it's a busy day for China. It's a busy day for markets.
Yeah, and speaking of travel, right, the other theme, and Rebecca just mentioned Thailand, I'll just sort of slip this in as well. You know, some of the sort of high-frequency numbers that took place during the holidays, things like, box office spending, travel and spending, do expect some pockets of the market, of course, to come in and come back online in a very good way today.
Yeah, okay. And so turning back a little bit to this geopolitics theme that, of course, we've all been watching. Beijing retaliated to Donald Trump's opening trade war gambit. We saw his tariffs. They're targeting a handful of American companies. They're slapping levies on some U.S. goods. Let's bring in our chief North Asia correspondent, Stephen Engel. So we saw a fairly restrained response here from the Chinese side. What's the strategy? What's the thinking?
Well, it was calculated and targeted, and it came out within seconds of that deadline passing yesterday afternoon, 1:01 Beijing time in the afternoon, and it was not as large as you could compare it to the last time that China retaliated against those initial salvos from the Trump trade war 1.0 in 2018 and then through 2019. Essentially, Beijing needed to show strength, but not exacerbate the trade war, because the Chinese economy obviously is in much worse footing than it was the last time around. In fact, Larry Hu, who's the chief China economist over at Macquarie, he says China this time around has a lot more to lose. But that's not the message Xi Jinping wants to give to the people of China. He wants to show that they've retaliated swiftly as soon as it became law and it was enacted. The deadline passed. Boom, boom, boom. Here were the different measures that Beijing announced. We can bring it up on a graphic. We can see that essentially 80 products, American products, were brought under the Chinese tariffs. They will take effect, by the way, February 10th. So there's still 5 days to go that there could be some sort of negotiation. We don't know.
Okay, crude oil को देखोगे, I hope sellers निकल गए होंगे. जैसा मैंने बताया, ये पूरा ही सपोर्ट जोन है, ध्यान रखना. दिस होल एरिया इज अ सपोर्ट एरिया फ्रॉम हियर टू फ्रॉम हियर. लेवल थोड़ा सा नीचे ड्रॉ किया हुआ है बिकॉज अगर पूरा ड्रॉ करेंगे तो फिर वो एसएल बहुत बड़ा हो जाएगा. सो दो चीज़ आप कर सकते हो, या तो अगर यहाँ से बाई करा है या फिर कर रहे हो तो क्वांटिटी कम रखना या मिनी वगैरह ट्राई कर लेना, नहीं तो फिर नीचे आने का वेट कर सकते हो. बाकी मैंने बता दिया, पूरा ही सपोर्ट जोन है, ऊपर पर नीचे पर्पल कलर की लाइन से ब्लू कलर की लाइन तक. बाकी यूएस मार्केट ओपन हो चुका है ऑलरेडी. सिल्वर और गोल्ड का भी ओके, एक डेटा भी आने वाला है. एक सेकेंड, एक डेटा भी है अभी 8:30 पे, ध्यान रखना. 8:15 वाला डेटा ऑलरेडी आ चुका है. 8:13 का डेटा है, इंपॉर्टेंट है. 4 मिनट और रह गए. बाकी गोल्ड और सिल्वर का व्यू देखोगे ओवरऑल बुलिश था, सिल्वर रेजिस्टेंस पे था, मैंने बताया था। सिल्वर ऑन रेजिस्टेंस ऑफ फॉरेक्स की बात कर रहा हूँ मैं। एक बार चार्ट ही दिखा देता हूँ। ठीक है, ये रेजिस्टेंस पर ही है। डे हाई इज द रेजिस्टेंस एरिया इन 15 मिनट टाइम फ्रेम, और सपोर्ट से सपोर्ट लिया। गोल्ड भी ओवरऑल व्यू बुलिश ही मानेंगे, थोड़ा बहुत पुल बैक ही आ रहा है प्राइस में, नथिंग एल्स। एक के दो बार रेजिस्टेंस ले चुका है यहाँ से। ओके, 2 टाइम ये रेजिस्टेंस ऑलरेडी ले चुका है यहाँ से, फर्स्ट टाइम लिया था, लोअर लो बनाया नहीं। नीचे यहाँ पर ये सपोर्ट, तो ओवरऑल व्यू बुलिश ही है, गोल्ड का भी सिल्वर का भी। बाकी गोल्ड में कोई रेजिस्टेंस था नहीं 15 मिनट में, 5 मिनट में लेवल बनाए थे, फिलहाल मार्केट उन्हीं को फॉलो कर रहा है। ये 5 मिनट के लेवल है, 15 मिनट के नहीं है। 15 मिनट में कोई लेवल वहाँ पर रेजिस्टेंस बना नहीं है, ऑल टाइम हाई के अराउंड चल रहा था प्राइस, इसलिए। बाकी ओवरऑल व्यू बुलिश ही है। डेटा आने वाला है, डेटा को देख लेना। डेटा आने तो फिर देखियो, अगर सेल करता है तो एक ऑलरेडी पहले यहाँ से सेलिंग आ गई है, बहुत पहले आई थी। ये सेकंड टाइम सेलिंग थी, लोअर लो बनाया नहीं है मार्केट ने, मैं इसकी बात नहीं कर रहा हूँ, पीछे बहुत पीछे यहाँ पर आई हुई है एक बार। तो ये थर्ड टाइम आएगा, लोअर लो बनाया नहीं है, सेलर कहने के थोड़ा वीक होंगे। ट्राई करना चाह रहे हो तो यहाँ पर ट्राई कर सकते हो, डिपेंड अपॉन डेटा नाउ। बाकी नीचे फिर एक सपोर्ट 31.82 के अराउंड रहेगा। बाकी गोल्ड सुपर बुलिश, नीचे एक सपोर्ट था, वहाँ से सपोर्ट ले लिया, ये 5 मिनट के लेवल है, ऊपर रेजिस्टेंस भी 5 मिनट का ही था। इसके ऊपर और कोई लेवल नहीं है, बिकॉज मार्केट ऑल टाइम हाई के अराउंड ही चल रहा है। 8:30 वाला डेटा है, 2 मिनट ध्यान रखियो। लेट्स मूव ऑन टू द क्रूड। देखो नेचुरल गैस में भी एक ट्रेड बनता है, तो यहाँ पर फिर से ये रिस्की ट्रेड था एक नेचुरल गैस का, इसका एसएल चला गया था, ध्यान रखना। यहाँ पर कोई रेजिस्टेंस नहीं था, एक एफईजी था सिर्फ। फॉरेक्स में यहाँ पर एक रेजिस्टेंस जरूर था, एमसीएक्स में कोई रेजिस्टेंस नहीं था। ठीक है, 30 सेकेंड्स और हैं। ओके, ये कैंडल देखो यहाँ पर क्लोज होती है तो क्रूड ऑयल में, सॉरी नेचुरल गैस में एक सेलिंग का ट्रेड यहाँ पर प्लान जरूर होगा। थोड़ा सा एसएल क्या रखा जाएगा इसमें। हो गई कैंडल क्लोज, कैंडल क्लोज हो गई, यहाँ से एक सेलिंग का प्लान है। 8:30 डेटा भी आ चुका है। ठीक है, डेटा देखोगे गोल्ड और सिल्वर के लिए 830 का ISM सर्विस PMI का पॉजिटिव आया है डेटा, नेगेटिव फॉर डॉलर इंडेक्स, पॉजिटिव फॉर गोल्ड एंड सिल्वर। अब सीधा 9 बजे क्रूड ऑयल की इन्वेंट्री है, तो क्रूड ऑयल शायद ही मूव करे। अब आधा घंटा और है क्रूड ऑयल की इन्वेंट्री में। बाकी फोरकास्ट देखोगे तो पॉजिटिव ही एक्सपेक्टेड है।
News when you want it with Bloomberg News Now. I'm Nathan Hager. Trading is underway on a Wednesday morning with a lot of catalysts for investors to keep on top of. That is the sound of the opening bell. From the floor of the New York Stock Exchange, and at the open, the S&P 500 is down about 0.2%, trading above 6,000. The Dow Jones Industrial Average is little changed at about a 44,500 level, and the Nasdaq Composite opens 0.6% lower at about 19,500. The 10-year Treasury yield is down more than 6 basis points to 4.44%, with trade wars, geopolitics, and corporate earnings all on the front burner. Let's start with trade. The Postal Service now says it will accept packages from China and Hong Kong hours after it announced a pause on some shipments, which drew a sharp reaction from China's foreign ministry.
The Chinese government calls on the United States to stop politicizing and weaponizing trade and economic issues.
A Chinese foreign ministry spokesman there through an interpreter. The confusion came after President Trump's 10% tariffs on Chinese products lasted about 12 hours. Meantime, Bloomberg News has learned China may be laying the groundwork for an antitrust probe into Apple and its app developer fees. Bloomberg's Mike Shepard reports that investigation's been underway since before the tariffs.
It is turning into this bargaining chip or this other element of complication and uncertainty for the U.S. and U.S. tech companies, especially Apple, as this really kicks off.
Bloomberg's Mike Shepard in Washington, D.C. At the open, Apple shares are down more than 1%. Elsewhere in geopolitics, President Trump says he's willing to work immediately on a new nuclear deal with Iran. He said that in a Truth Social post, saying reports the U.S. and Israel are going to blow Iran to smithereens are greatly exaggerated. Yesterday, Trump signed an executive order for tough enforcement of existing sanctions on Iran, essentially reviving the first-term maximum pressure campaign. Meanwhile, reaction continues to pour into President Trump's latest Middle East proposal for the U.S. to take over and redevelop the Gaza Strip.
I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad. This could be so magnificent.
The president spoke there at a White House news conference alongside Israeli Prime Minister Benjamin Netanyahu, and Bloomberg's Ethan Bronner has the reaction from Tel Aviv.
The assumption is that when the president of the United States says something and says it in the manner in which he said it, you better take it seriously. And so it has drawn swift rejections from Palestinian leaders, Egyptians, Saudis, and so forth.
Bloomberg's Ethan Brunner reports many Israelis are praising the idea, though some moderates wonder what it'll mean for the ceasefire with Hamas. As for corporate earnings, tech stocks are leading declines led by Alphabet. Those shares are down more than 8% at the open. The Google parent reported slower growth in the cloud and much more AI spending than analysts expected. Matthew Bloxham covers tech for Bloomberg Intelligence.
There is a lot of demand out there for AI products from corporates.
and there is this near-term capacity issue. They can't bring enough technology on stream quick enough, and we saw similar comments from Microsoft too.
Matt Bloxham with Bloomberg Intelligence. This morning we heard from Walt Disney. Those shares are up more than 3% after a blockbuster quarter dominated by Moana 2 on the big screen and higher rates for streaming at home. Chief Financial Officer Hugh Johnston says Disney Plus and Hulu should make $1 billion this year.
The streaming business is doing extremely well. This is a business we invested pretty heavily in a couple of years ago. And what you're seeing now is the benefit of those investments. Our expectation is we'll continue to grow subs, we'll improve margins. We should make more than $1 billion in that business this year, and next year we're looking at double-digit margins in that business. So certainly a ton of positive momentum.
Disney CFO Hugh Johnston was a guest on Bloomberg Surveillance. We got mixed results from Uber. The ride-hailing company's bookings jumped 18% in the latest quarter, but it's the outlook.
क्रूड पुल बैक पर सेलिंग प्रेशर क्रूड ऑयल में इन्वेंट्री आने वाली है 9 बजे.
Now, Uber shares are down nearly 7%. We got some new data on the economy. Private payroll provider ADP says companies added 183,000 jobs last month. That's much more than economists expected. We get the Labor Department's report on Friday. The trade deficit jumped nearly 25% at the end of last year to more than $918 billion. That's the second most in data going back to 1960. Richmond Fed President Thomas Barkin says policy uncertainty makes it tough to tell where the economy goes from here.
I think right now, if you look forward, you have to say tariffs are coming or here, are going to be here. It's just incredibly hard to know exactly what it's going to be. So I think the concept of tariffs, sure, but the reality of what specific tariffs on what specific countries at what specific percent on what specific goods, we don't know.
Richmond Fed President Thomas Barkin spoke on Bloomberg Surveillance. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds
and
of
likely
people.
will be a catalyst,
People
more broadly speaking, for that AI trade. What are some of those underrated names within your coverage that you see ultimately getting a huge boost from this in the long run?
I think investors should be looking at networking stocks. Whether or not, we're moving, further out to the edge and we'll have, the ability to do more AI related workloads on our edge devices, smartphones or PCs, notebook computers, et cetera. The network, the underlying plumbing for moving data is going to get more challenging to put into place. The interface speeds are moving higher and the challenges of moving data around, can continue to get, more complex. In the meantime, there's a smaller handful of companies that are participating these days. There's been a lot of consolidation in the networking space. So on our list, we really like companies like Coherent and Lumentum, which are reporting this week. Ciena, which has traditionally been selling optical networking gear into telecom service providers, is now starting to see a lot more demand from hyperscalers as AI-related data bleeds out of the data centers and out into, the enterprises and consumers that are consuming AI. And then we picked up coverage of a company, which is an EMS company, which builds switches and servers for hyperscalers. We just picked them up last week, earlier this week, called Celestica, ticker CLS. And that's another one.
थोड़ा सा ना फॉरेक्स का चार्ट देखोगे नेचुरल गैस का तो वहाँ अलग ही चल रहा है सिस्टम बिल्कुल मतलब एग्जैक्टली लेवल जो होते हैं ना वो फॉलो हो रहे हैं इतना परफेक्ट लेवल फॉलो होना बड़ा मुश्किल हो जाता है ये जो विक बनी है ना यहाँ पर ये एमसीएक्स में फॉरेक्स में जो ये विक बनी है एग्जैक्टली इस लेवल को हिट करके आई है 274.8 इसको हिट करके आई है एग्जैक्टली और यहाँ पर जो ये रेजिस्टेंस एरिया था अब प्राइस उसी को सपोर्ट ना बना ले इसमें एक और रेजिस्टेंस है बट फॉरेक्स में थोड़ा सा ऊपर है ये एमसीएक्स का रेजिस्टेंस है एमसीएक्स में है रेजिस्टेंस फॉरेक्स में देखोगे थोड़ा सा ऊपर है और रेजिस्टेंस इतना परफेक्ट फॉलो कर रहा है लेवल्स can't believe थोड़ा अलग होते हैं MCX फॉरेक्स में क्योंकि वो गैप अप गैप डाउन में सारा इधर उधर हो जाता है। यहाँ पर रेजिस्टेंस ये MCX में नहीं है, फॉरेक्स में था और ये काफ़ी अच्छा फॉल किया है। फर्स्ट टाइम और सेकंड टाइम ये यहीं तक फॉल किया, यहाँ तक फॉल किया फॉरेक्स में, क्योंकि यहाँ से फिर बाइंग एक्सपेक्टेड थी। तो फॉरेक्स के अकॉर्डिंग देखोगे थोड़ा सा और ऊपर जाना चाहिए इसको, बट एज पर MCX यहाँ पर भी रेजिस्टेंस, इसके ऊपर भी रेजिस्टेंस, जहाँ पर हमने टारगेट लगा रखा है वहाँ से ऑलरेडी ये सपोर्ट लेके आ गया। capital.com ब्रोकर चार्ट पे कैंडल बड़ी इंपॉर्टेंट हो जाएगी अब।
Policy mix is likely to be better. We think fiscal stimulus is coming in Europe, it's coming in China. Both have fiscal space. The U.S. does not. And we think the big surprise, the really big surprise, could be that the dollar weakens and rolls over, which would be a strong support for commodities and for non-U.S. equities. The consensus call, strong consensus, is that tariffs are bullish for the dollar. We disagree.
Okay, we got to talk about that then, Jay, because you mentioned this bullish view on global equities, but I've wondered if foreign investment requires a stronger dollar that kind of reduces American exporting power, increases exporting power for competitors. How do you square that?
Yeah, our view is that American assets are priced for exceptionalism. They've been the big winners for the last 15 years. Everyone is massively overweight U.S. assets. Foreigners have never held more U.S. treasuries, never held more U.S. equities. And so the dollar is priced for exceptionalism. And what is the heart of American exceptionalism? Tech. And what just happened in the last week? DeepSeek, China tech, basically just shot a hole through that whole thesis. And so to us, there's a massive rotational opportunity out of big cap tech in the U.S. into big cap tech in China. Because just like the U.S. is walling off U.S. tech from China access, China is doing the same thing. It's walling off the China tech space from U.S. companies. And so that tech space becomes the province of Chinese companies, which, by the way, sell at a 50 to 60 to 70% discount to their U.S. peers. And so for us, that's really the opportunity. And if the dollar rolls over, if that exceptionalism, right, gets called into question, if there's policy chaos in the U.S., which just look at the last 2 weeks, right, pretty much chaotic, versus better policy in Europe and in Asia, and money starts to rotate out, right now people are massively overweight and long the dollar. There's lots of room for the dollar to weaken, start to feed on itself, It supports commodity prices. It supports non-U.S. Equity performance historically. And we believe that you're going to have a single-digit return year in the U.S. and a double-digit return year in the non-U.S. equities. And so far, year to date, it's only 1 month, but ACWI ex-U.S. outperformed the S&P in January by, 120, 140 basis points.
So, Jay, just given all that, have we seen a peak yet?
Peak in what?
In the dollar, in the strength, just given the fact that, yes, we are coming off those highs. Yes, there is a case, and I'm following it just in terms of the weakness that we could potentially see here going forward. But has it peaked? And I guess what would then trigger some of that weakness that you're then talking about?
I mean, we're not traders at DBW Advisory. We're long-term thematic global macro investors. And so, whether the DXY has peaked, I don't know. Is it close to peaking? I believe so. Could it fall significantly? Let's call it 107 now, 107.50 this morning. It was at 110 a couple weeks ago. So maybe it has peaked. But, downside risk is to 100 and maybe below. And you look at things like the yen, right? We think Japan could be the trigger for this. What we call the capital repatriation trade. We think that term, capital repatriation, is going to be a big term over the course of this year. We talk about reshoring jobs, reshoring production. The next thing is reshoring capital as capital flows out of the U.S. back into the rest of the world to fund their efforts in AI, their efforts in climate mitigation, their efforts in defense. And so that's where we think the big opportunity is. Yen dollar at 150, fair value is 110, 100. It could move massively.
Jay, always great to speak with you, and an interesting call doubling down on global trade while we are still seeing the U.S. exceptionalism narrative sticking here in the U.S. Thank you so much for joining us. Appreciate it.
Always a pleasure. Thank you.
And sticking with the U.S., China and big tech. Reporting from Bloomberg saying that China's antitrust watchdog laying the groundwork for a potential probe into Apple's policies and the fees it charges its app developers, potentially looking for as much as a 30% cut from Apple and its app developers in order to continue operating here, also barring external payment services and stores. We should mention, of course, Shauna, that this has been in conversation over the last year here. This agency has been looking into and speaking with Apple executives about potentially charging Apple for these fees. So this is not necessarily directly related to the tariff tit for tat that we are seeing, though perhaps it is an additional tool in China's toolkit as they kind of ratchet up this tit for tat with the United States amid this trade war. And of course, Apple is not the only U.S. tech company that China is weighing probing right now.
Yeah, of course. And given the long-running disputes that it has had with some of the large tech companies or large companies within China, when you take a look at ByteDance, when you take a look at Tencent Holdings, clearly this is a conversation, like you said, it's not new. It's something that has been going on. But it does beg the question, just the challenges that this then presents for Apple in China. Just talking about the significance of China, obviously very important. It's the most important region outside of the U.S. there, just in terms of growth and the revenue opportunity for the business right now. So any sort of crackdown on exactly what that looks like, uncertainty there. Clearly, it is an issue. We're seeing that reflected in the market price here this morning. Shares had been off just about 3% in earlier trading. You're now looking at losses of just less than 2% here, 1.7% decline. So we are seeing a bit of a bounce back, at least off of the lows here of the morning. But again, this just also brings to the forefront the question about what this tit for tat trade war is going to look like. You talk about potential backlash, how China is going to respond to a further crackdown here from the Trump administration, this targeting here potentially, we should say, of other larger cap tech giants. Clearly a concern here for investors and something that needs to be kept in mind as we talk about that trade playing out here over the next several months.
And to your point in terms of the impact on American investors, or investors in Apple, I should say, we have seen Apple's revenue coming from China declining here. You can see that on your screen after hitting closer to a peak a couple of years ago. It's been coming off its highs over the last 4 quarters here. And we also know that China has been weighing a probe into Alphabet as well, which has not been operating in China since early 2010. So it's interesting to see which companies they're going after and why, given that these are companies that have already tried to kind of insulate themselves from the impact of China's weakening economy as well.
And also their interest into NVIDIA too, which was announced back in December. All right, coming up. up, we're taking a look at some of today's trending tickers, including Snap, why the social media company's advertising overhaul is paying off. That's coming up next on Catalyst.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now time for some of today's trending tickers. Scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Snap reporting better than expected fourth quarter results with revenue climbing 14% from a year earlier. Social media company benefiting from improvements to its advertising business, yet we're looking at shares off about 6%. It's always the volatile stock here surrounding earnings. Let's bring in Jasmine Enberg, eMarketer Vice President and Principal Analyst. Jasmine, when you take a look at the results that we're getting from Snap, you make the case that its efforts here to revamp its ad platform are paying off. What do you attribute then some of the trepidation or hesitation that we're seeing in the market then this morning?
Yeah, well, all eyes really were on Snap's top-line revenue growth yesterday, and then Snap did not disappoint there. It now has 4 consecutive quarters of double-digit growth within its ad business, and as you mentioned, that has to do with the efforts that it made to revamp its advertising platform as well as diversify its revenue streams through subscriptions like Snapchat Plus. I do think one of Snap's weak points continues to be in brand advertising. Historically, there have been a lot of large advertisers on Snapchat, and we saw some weakness there again in Q4, which of course it had warned about back in Q3 as well.
And what are you making of the success of Snap's subscription service in particular? How are they being able to win on that versus some competitors that are struggling still?
Yeah, Snapchat Plus really is a huge success story for Snap. It's rare to see a social media company have a successful subscription service. I think one of the things that Snap has figured out is the correct value exchange. Snap may not have the biggest audience of the social platforms, but it has an incredibly loyal audience. Those who use Snapchat really love it, and it's clear that they're willing to pay for some of the new features and tools that Snapchat Plus provides. And, you know, the revenue rate for Snapchat Plus really has been ramping up. And what was really fascinating to see in Q4 earnings was that now Snapchat Plus revenues accounted for about 10% of its overall revenues, which is a meaningful number.
Yeah, Jasmine, when you take a look at the outlook, I think that's really what the street is taking issue with, some of the mixed guidance that we are getting here from the company. I'm curious, and I want to bring up a point that I saw in Citi's note here this morning. They were talking about engagement, talking about some of the progress that has been made. The direct response to ads are improving, but then they talked about the fact that visibility remains somewhat limited. I'm curious how much of an overhang you see that being for the stock, at least in the short term.
Yeah, I mean, user engagement is one of the key metrics that advertisers are looking for when they're deciding where to allocate their budgets. Snap did see some improvement in time spent with content, and it is making some big changes to the user experience, including a simplified Snapchat experience that now has one entertainment feed that it believes will ultimately drive more engagement. One of the things Snap has also warned about is potential disruptions as they're rolling out these changes. That's something that we see all the time when a social media platform introduces a new feature or overhauls the user experience. I ultimately do think that we're going to see more engagement come in that way. I mean, video makes up such a huge portion of the time that we spend on social media, 60%, in fact, according to our estimates at eMarketer for average daily time spent. And so a heavier focus on video will ultimately be, positive for Snap, especially as we're seeing a lot of volatility among users and creators and advertisers around the potential of a TikTok ban.
Well, talk to me about that in context of the company's outlook as well and the challenge that might be presenting, at least in the stocks trade today. To what extent would a TikTok ban potentially reverse some of that pressure for Snap?
Yeah, well, Snap stands to be a potential beneficiary of a TikTok ban. We're already seeing it start to benefit somewhat from the volatility and the uncertainty around TikTok. Advertisers and creators are actively looking for alternatives. They're looking for ways to diversify their strategies, and Snapchat is at the top of the list for a lot of them. Ultimately, I do think that, YouTube and Meta will be even bigger beneficiaries than Snap just because their services tend to be a more natural fit for users and creators and advertisers. But as Snap is making some of these big changes, including, again, the entertainment feed that we already talked about, it's going to become a more attractive place. And Snap, like the other social platforms, is really courting TikTok creators because where creators go, users will follow. And one of the things we saw in January was a campaign by Snap, for example, about find your favorite creators and really helping users to find TikTok creators, particularly on the platform. And of course, there's the Snap Stars program, which helps creators earn money from the platform. And there's really no better way to get creators to a specific social platform than helping them make more money.
All right, Jasmine, we got to leave it there. Thank you so much for joining us. Appreciate it. Another trending ticker here, Tesla. Sales in Germany plunging nearly 60% last month. Just 1,277 cars were registered. Its lowest monthly total since July of 2021. That's according to the German Federal Motor Transport Authority. Tesla sales also dropped double digits in France and in the UK in January. And I think it's important to put these numbers into context for Germany because the country has been struggling economically. You may think that sales are down across the board, but it appears that this is specifically about Tesla because the EV market was up 54% for the month in Germany specifically. So that does suggest that perhaps it's something specific to Tesla. What's been going on at Tesla? Elon Musk has been throwing his support behind far-right candidates in Europe and specifically in Germany as well. So perhaps that is one factor that is driving a little bit of the consumer switch when it comes to EV purchases in Germany.
Yeah, exactly. It's also important to put into context just in terms of how many vehicles they are selling too, right? So it's a fraction of Tesla's business as well. When you take a look at how many cars were sold in the month of January, just over 1,200 here. So putting that in perspective, yes, it is a dramatic drop when you're comparing it to the numbers that we saw just about a year ago there. But clearly, though, it's a small portion of that business. But again, when we talk about the risk of backlash here from a very vocal and outspoken CEO, I think this is one of the reasons or one of the cases that you are seeing that playing out in real time. Now, obviously, if something anywhere close to this were to happen in the U.S., it would be a much different conversation. It would be a much bigger hit here.
ओके इन्वेंट्री आ चुकी है क्रूड ऑयल की फोरकास्ट था उसके कंपैरिजन में देखोगे नेगेटिव आई है बाकी दो भी देख लेते हैं, एक सेकंड वेट करना। तीन इन्वेंट्री आती हैं, ठीक है। तीन में से देखो दो इन्वेंट्री तो नेगेटिव है, एक पॉजिटिव है, मतलब दो का इम्पैक्ट नेगेटिव है, दो की वजह से प्राइस को डाउन जाना चाहिए, एक इन्वेंट्री की वजह से प्राइस को ऊपर जाना चाहिए। क्रूड ऑयल की खुद की इन्वेंट्री नेगेटिव आई है, गैसोलीन की इन्वेंट्री भी नेगेटिव आई है, ईआई की जो वीकली स्टॉक आता है वो पॉजिटिव आया है। तो तीन में से दो नेगेटिव एक पॉजिटिव, तो हम कहेंगे क्रूड ऑयल इन्वेंट्रीज नेगेटिव फॉर क्रूड ऑयल प्राइस, ठीक है। क्रूड ऑयल की जो इन्वेंट्री आई है वो नेगेटिव आई है क्रूड ऑयल के प्राइस के लिए। कैप डाउन हुआ है, देखते हैं और नीचे जाता नहीं जाता, बिकॉज ये सपोर्ट जोन पर ही है, क्योंकि यहाँ से थोड़ा सा बाइंग एक्सपेक्टेड है। आज और कोई डेटा नहीं है, अब ध्यान रखना। अब सीधे कल ट्यूसडे है, कल एक डेटा रहेगा अनएम्प्लॉयमेंट क्लेम्स का और नेचुरल गैस की इन्वेंट्री का।
Hey, thanks for having me.
Jordan, let's talk about ultimately what this means. The fact that we saw such a quick reversal. Mm-hmm. What type of uncertainty does that introduce? And I guess how should consumers then be looking at the developments here of the last 48 hours?
Well, stepping back, it turns out that this might be the big story to come out of all the craziness around Trump's tariffs over the past week. At first we thought it was going to be all about Mexico and Canada. Now it's actually all about China, and specifically how he has closed what's called the de minimis rule, which was what allowed companies like Shine and Temu to massively expand their business in the U.S. Now it went from maybe slightly over 100 million packages like these coming into the U.S. each year to 1.36 billion per year, right? It became a enormous business. The U.S. Postal Service, it is obviously struggling to figure out how it's going to comply with the end of this rule, because it has to now inspect all these packages. You need manpower to do that. It's a huge challenge. And at first they just said, no, we're not going to allow anything in. Now clearly they think that may have been an overreaction. We'll see how they adjust. But people are watching that carefully. Looking beyond that, for shoppers, this could make shopping on buying things on these platforms quite a bit more expensive. There was an economics paper written before these tariffs went into place that found that this could be adding over $20 to the cost of a package, not just because of the tariffs themselves that they might face, but also because each time something has to go through customs, there are all sorts of fees that are associated with that. Not only that, but you have to pay someone usually to handle that process, and that costs money. So this could put a huge dent in Shine and Temu's business and maybe change the way people are shopping at the moment.
Yeah, and certainly a challenge when sticky inflation has already been a struggle for consumers. Jordan, thanks so much for joining us. Appreciate it.
Thanks for having me.
Coming up, we'll get analyst reaction to Disney's latest earnings results. That's next, right here on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks recovering some of their earlier losses as investors digest big tech earnings and trade tensions. AMD and Alphabet both sinking after their earnings fell short of expectations. Alphabet reported slowing cloud growth as it ramps up AI spending. Meanwhile, AMD issued a disappointing data center sales forecast. Uber shares falling on a softer than expected outlook for its current quarter. The company saying currency headwinds and severe winter weather could impact rides and food delivery moving forward. Disney shares lower after initially rising in pre-market trade. The company beat expectations in its first quarter as streaming profits offset losses in its park business. And that is your Yahoo Finance Market Minute. For more on what is trending more broadly on Yahoo Finance, you can scan that QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. On today's show, the latest read on the labor market. We break down the number of jobs added in the private sector last month. And an egg shortage is ripping through grocery stores across the U.S. We'll talk to the CEO of Stu Leonard's about when we could see relief and what other things might affect your food prices. Plus, here's your daily reminder to start your tax paperwork. We'll talk about why such a deadline and such a headache to do taxes is here in the U.S. All that and much more coming up. But the private sector added more jobs than expected in January, reiterating the strength of the labor market and allowing the Federal Reserve a little leeway as they weigh their next policy decision. Here to dive into the report and what it means for the economy and your job hunt, we've got Neela Richardson, who is the chief economist at ADP. Great to have you back on the program with us. So let's just walk through the takeaways from this particular ADP jobs print and what it spells out about the broader labor market right now to begin the year.
Yeah. Hi, Brad. Good to see you. And there's good news in the labor market. It's showing the same kind of strength we saw at the end of 2024 is carrying through that momentum, and hiring is carrying through into the first month of 2025. So solid across the board in terms of the headline numbers. But when you peek underneath the surface, you see a real dichotomy underneath that strength. Most of the jobs were created in the service sector. The goods sector, manufacturers are struggling. We saw a decline of 13,000 jobs in manufacturing, and construction only increased 3,000 jobs. That's a notable downshift. Where we saw strength are those consumer-facing sectors like leisure and hospitality. So if you want to know everything you need to know about the labor market, follow the consumer, because the businesses that support consumers and in consumer-facing industries are the ones showing strength right now.
And then the pay side for the consumer, as we're kind of thinking through the pay and that reading that came in there, 4.7% annual pay was actually higher. So how does that kind of take us further into where the consumer is trying to continue to outpace inflationary pressure?
So, and we're going to draw that sharp contrast between consumer-facing industries like leisure and hospitality and more business-oriented industries like information or professional business sectors. And so what we're seeing in terms of overall wage growth, and we're able to really measure this rigorously because we have actual paychecks, is that for people who've been on the job this time last year versus this year, they're seeing a 4.7% increase in pay over that time period. Now, that's notable because we haven't seen that number budge over the last several months. It's been 4.7% for a while. This contrasts a lot from last year, where that number was declining consistently. So wage growth is kind of stuck at this higher level. That's good news for workers, but it could be a challenge for the Federal Reserve because labor costs aren't going down. They're staying stuck at higher levels, which translates into sticky inflation.
Now, of course, towards the end of the year and then the beginning of the year, we typically monitor pay very closely as well for those who are job stayers and looking for a pay bump, or those who might be job switchers and ultimately looking for a new gig and being able to perhaps start a new role at the beginning of the year. What are we seeing in terms of the dynamics that are playing out in this most recent print there?
So we're seeing that job changer growth is up 6.8%. So it still pays to switch on average, according to this data. But this premium between job stayers and job changers is lower than it was during the 22 Great Resignation, when jobs were plentiful and workers were switching a lot. We've seen that workers are now staying in place. If you look at government data, there's a lower level of quits. And the jobs market, it's good, it's solid, but it's taking longer for those job seekers to find that next role than it did 2 years ago. So this is a much more normal labor market where it takes time to find a job. And you're seeing that play out in elevated wage growth, but not nearly the gains that you saw in 2022 from job switching.
You know, that's particularly interesting because as we continue to see that narrow, what would be the warning signs to say that it would actually kind of flip over, and ultimately what would that spell out more broadly about, especially as the Fed is thinking about their dual mandate, spell out more broadly about the labor market health?
Actually, we have seen that, Brad. We've seen it in leisure and hospitality. It is the one industry that we track where you actually see higher pay growth for people who stay on the job than people who switch. And that's namely because it's an industry where wages are rather low. So for low wage sectors, they're vulnerable to seeing this switch where the current labor market is not as rewarding as the current job. So what that would mean for the Fed is we'd be transing into stagflation territory because wage growth is necessary in terms of growth. And if you're seeing wages stagnate or even reverse, that's going to be consistent with an overall business sector that's not moving forward. So we don't want to see that. We want to see continued steady wage growth along with productivity enhancements that lead to overall healthy business activity.
Nayla, great to see you. Thanks so much for taking the time here with us. Appreciate it.
Thanks for having me.
Let's take a look at some of the market action. We are 90 minutes into the trading day. Stocks, they are, major averages are mixed right now as we're taking a look at the Dow higher, the S&P 500 and the NASDAQ lower though. As tech drags, disappointing results from Alphabet and AMD certainly weighing on the broader markets here, and especially the tech sector. Joining me now, we've got Sam Stovall, who is the CFRA Chief Investment Strategist. Sam, great to have you on the program with us this morning. How should investors be evaluating tech and that trade right now?
Hey, Brad, good to talk to you again. Well, technology is one of the three sectors within the S&P 500 that's trading below its 50-day moving average, but just, slightly. I would tend to make a read of that all of the other sectors are doing fairly well, that what we experienced on Friday and Monday was really just a pretty short-term reset, and we had technology as among the leaders toward the end of the day yesterday. So I think that there's probably going to be a little more softness in the technology space in the near term, but we're maintaining our overweight recommendation on the sector and think that it will be recovering by year end.
You know, Sam, for the kind of 1,000-foot level or perhaps 10,000-foot level, just this kind of blanket question has continued to emerge at the start of the year. Ray Dalio brought it up about a week ago as to whether or not we were starting to see formulation of a bubble and any bubble bursting potentially. And as you mentioned, some of the slippage between that below that 200-day moving average, I tend to wonder, at what point would we be flashing some of those warning signs?
Well, we've been talking about bubbles. When I say we, meaning the marketplace, has been talking about bubbles since last summer. There was a point in which technology was trading at a 78% premium to its 20-year average forward PE ratio. The market itself was trading at more than a 40% premium. That's been trimmed quite a bit. We are looking right now at the S&P at a PE of below 23. Certainly that is higher than the 10-year average of 19, so that puts the market at a 20% premium. But tech has been coming down and now moving much closer to its more normal PE relative PE range. So, I would tend to say that, yeah, we probably could do a little more digestion of gains in technology, but it's also expected to be one of the strong areas of growth in earnings in the year ahead. And I don't think we're going to be seeing a lot of PE multiple expansion, but if we do get the earnings growth that is projected, then tech could continue to be an outperformer.
What is the earnings bellwether this season that would give further fuel to the fire for tech being that outperformer?
Well, I think the shift has gone from the semiconductor area. Of course, everybody's going to be looking at NVIDIA, but I would tend to say that software is more of an area that could be of concern. I mean, when we started this reporting period, financials in general, banks in particular, were the bellwether. And instead of getting a 35% year-on-year rise, we ended up with a 55% year-on-year gain for diversified banks. So I would tend to say that we still need to see some improvement in the semiconductor and in the software area in order for hopes to remain alive for technology.
As you're laying out your strategy for the rest of the year, and even with some of the broader bullish sentiment that continues to try and find new places to invest this year, what are some of the top themes that you think we're going to be set to see play out, not just for the rest of the quarter, but perhaps for the rest of the first half of this year?
Well, I think volatility is going to be part and parcel of any theme that one would be looking at. Traditionally, in year one of the presidential cycle, we see a very large number of, or about a 90% frequency of falling by 5% or more, actually with the average decline being about 17% going back to World War II. Reminding everybody, however, that it only takes about 4 months to get back to break even from a decline of up to 20%. I think also that the earnings growth is expected to be a theme because, as I mentioned before, PE multiple expansion is not a likely driver in the market. And if we're expected to see about a 2.5% rise in GDP this year versus 2.8 in 24 and a 2.2% projected for 2026, I think we're going to need also to see some profit margin improvements in order to sustain these higher valuations.
Sam, while we have you here, there was a Schwab study that was out saying about 15% of U.S. stock market investors started investing in 2020. That means that 15% of the investors in the stock market may not have been invested or may not have had any skin in the game when the previous round of tariffs and the previous Trump administration was enacting those tariffs and that tit-for-tat trade war was going on. What is the tariff playbook for those investors that are newer over these past few years?
Well, I think what it reminds investors is that you don't expect the market to go up every year, because if they started in 2020, well, that certainly was a bear market year. Then in 2022, the market was down 19.5% for the full calendar year. So I think these investors have learned quite quickly how volatile markets can be. And as we move into 2025, seeing once again the uncertainty and what kind of driving force that has on investor sentiment and on share prices themselves, but also probably causes them to pay a little more attention to technical analysis to see where the trends are, what the support levels are, and what the likely growth rates could end up being.
Sam, thanks so much for taking the time here with us today. Really appreciate it.
Always a pleasure. Thanks, Brad.
Thanks. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Uber sliding after issuing a first quarter bookings outlook that disappointed analysts. The rideshare company cautioned that currency headwinds and winter weather could impact trips in the current quarter. Some analysts still see strength, with one saying Uber faces high expectations, another saying it remains well positioned, and another pointing to improving fundamental trends. Next up, we're checking in on shares of Mattel, popping on a Q4 earnings beat and reporting profit guidance for the full year above analyst estimates. Mattel expects improving Barbie trends in 2025 and expects another record revenue year for Hot Wheels. They are citing elevated inventory as a potential headwind this year. And finally, here checking in on Workday. It's rising on its restructuring plan. The cloud platform says it will cut 1,750 jobs, about 8.5% of its current workforce. It expects to incur between $230 million and $270 million in charges for its plan. Now, the company's CEO writing in a note, quote, "The environment we're operating in today remains and demands a new approach." Workday does intend to hire more workers in strategic areas like artificial intelligence. Coming up, are eggs scrambling your grocery budget? We're getting to the bottom of those prices increases after the break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Homebuyers are finding little reason to jump into the spring selling season, even with more listings coming up for sale. Now, let's bring in Yahoo Finance's Danny Romero with more. Danny, what do we know?
Brad, buyers are still dealing with high mortgage rates and high home prices. According to data from Mortgage Bankers Association, mortgage applications to purchase a home fell 4% last week compared to the previous week. Now, demand remains flat compared to the same week a year ago. So what's going on here? Well, mortgage rates just haven't dropped enough to really spur up that demand. Now, separate data from Realtor.com shows that 15% of sellers offered a concession, like a price cut. Most sellers are still seeing enough competition to keep and hold their listing price. But another factor is that the supply of homes is gaining some traction, but homes are staying on the market a bit longer, Brad.
Denny, you're also tracking the rental market. What are some of the biggest challenges facing renters right now?
The rental market is bracing some challenges right now. According to data from Bank of America, the number of people that have moved has moderated and was down 1.6% on a yearly basis in the fourth quarter last year. Some cities like in the Midwest and in the Sun Belt are still seeing some growth. But remember, rental growth has eased over the last 2 years. But Bank of America found that the average rent growth is still accelerating in the most affordable zip codes. And also other separate data from Redfin shows that nearly 70% of single people are struggling to pay rent or their mortgage payment compared to married couples. And that's because when you're single, you are upfronting those housing costs compared to a married couple where you have two incomes that are upfronting those housing costs. Bottom line is that economists say that renters are going to see little relief in the near term because of the lack of supply and also the pullback in multifamily construction. Brad?
Danny, I thought you were about to say bottom line, just pay for the subscription, pay the fee on those dating apps. I appreciate it. Thanks so much for taking the time. Well, Waffle House is adding a 50-cent per egg surcharge to customers' orders amid an ongoing egg shortage prompted by bird flu. And that means egg prices aren't pretty. They're up more than 36% from the last time that we'd seen the December CPI report come through. And there you're taking a look at some of those month-over-month and year-over-years. The U.S. Department of Agriculture says that egg prices are projected to rise more than 20% this year. Here to discuss egg prices and much, much more, we've got Stu Leonard Jr., CEO and president of Stu Leonard's, a supermarket chain with 8 locations across New Jersey, New York, and Connecticut. Great to have you back on the program with us. Thank you. Take us into the egg pricing and the dynamics that you're having to wade through, as well as a power seller and sourcer of eggs.
Well, we'll sell, I mean, we sell like 100,000 eggs a week, right now. And it's something I haven't seen in my 50 years of being in retail. We have a family business, and I've never seen egg prices go like this. I was just talking to our farmer yesterday in Pennsylvania, and they basically have all of the hens locked down so they don't get outside. Because, like they say, the bird flu, birds are the ones that fly around that are bringing the flu to these hens. So they have them in lockdown right now, and the supply is down, so therefore prices are going to be up.
And so with that in mind, how long, how extended, especially given the lockdown measures that some of the farmers that you're working with have to take and the unknown of the spread and the continued spread of the avian flu, how long do you think that these prices could be elevated for?
Well, I talked to our farmer, Mark, yesterday morning, and he said he just went out on the market to buy some baby chicks because they have to replenish hundreds and hundreds of thousands of baby chicks now to grow them up. And he said they're sold out. You can't get any baby chicks. So there's going to be a little supply thing. He felt it's probably going to last, probably 6 months. It's going to go, the prices will come down a little bit. But I just put your seatbelts on. I think we have a big supply issue going on with eggs right now. It's uncontrollable with the flu. And I think that our customers just have to get used to an elevated egg price.
Do you think that's in line with the 20% that the USDA is forecasting?
You know what? That's just throw a dart. Nobody knows what's going to happen to the market out there, but it's not going down. I can tell you that much, because as supply starts to shrink like it is now, prices are going to go up. And also, like our farmer told me, he's got to do a lot of preventative things to prevent the flu from happening. So he has a whole bunch of extra costs that are associated with keeping his birds safe, which he's doing a good job at.
Yeah. Stu, let's talk about some other aisles in the store, of course, that you are able to make sure that you service customers through. We have a larger consideration around how chains like yourself are going to be able to navigate any potential tariffs. What are the considerations that you're needing to really run the calculus around now in order for supplying and sourcing and continuing to keep shelves stocked?
Well, the first thing we look at is we got to keep the shelves full. I mean, we did that during COVID. We toilet paper, it was like a big issue for some reason. But one of the things we were able to get it from South America, actually. We were able to have toilet paper. We're going to do the same thing with avocados. The only thing that might be a little issue is tequila. It's only made one place in the world, and that's Mexico. You can't source that anywhere else. And the third thing that we're working on right now is an alternate supply. That if the price and there's a tariff slapped on, say, salmon or lobsters coming out of Canada right now, or tomatoes on the vine, we'll have another source. And we're just planning on backup plans right now. I'm not doing anything different on pricing. I'm not doing anything different on panic buying or buying extra product. We're just taking it day by day right now. And, who knows what's going to happen there with the tariffs.
And so, to your best estimation, would that be a price that you at Stu Leonard's would absorb, or how much of that has to get passed on to the consumer?
You know what? That's always a tough one right now because I know, look, you just turn on the television set and you can see it's inflation and the cost of food and so forth. So we are really sensitive to giving good value to our customers. And it's tough because, like with eggs right now, if you go over like say a $4.99 or a $5.99 number, sales go down. Unless you're Prada or Gucci and you raise the price and sales go up. But so I end up, first of all, the phone call I get from the supplier is they got to raise their price due to this, and this. What I have done very successfully is say, I'll split it with you. It hurts our margins. It might hurt the farmers' margins a little bit, but, we'll get through this thing. It'll be a temporary thing. And we've been doing business for 30, 40 years with a lot of these suppliers. So it's a little hump that we'll get through and prices will stabilize and come back down.
Stu, a lot of considerations that you're juggling. We appreciate you taking some time here with us today, jumping back on Yahoo Finance.
If I could mention one thing, down in our Clifton store, you know what we're doing for fun on Friday?
What's happening?
We're having a Taylor Swift and Travis Kelce look-alike contest. Okay, whoever shows up and looks like either one of them, we're going to have a little voting thing, and you get a $500 gift certificate. If you look like Travis, you get $500 if you look like Taylor. So we're expecting like some fun. And the other thing is, a big thing is obviously these guys, right? These big grinders they have. We're doing one with the Philly cheesesteak sub. So we're trying to get in the swing of food and Super Bowl and guacamole and chips and wings. You guys out there have a great Super Bowl weekend.
Thank you so much. I have a lot of work to do to compete in the lookalike contest. However, I can certainly purchase a sandwich.
I don't think you're getting the $500 gift certificate.
I'll rule myself out of that one. I appreciate the time, Stu Leonard Jr. Thank you.
Okay. Thank you.
Thanks. Coming up, before the Chiefs and the Eagles face off in New Orleans, we're breaking down how hospitality companies are handling the costs of food for the big game.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time. From Yahoo Mail.
Let's get you a quick check of the markets. We are 2 hours into today's trading session and taking a look at the Dow Jones Industrial Average. It's been waffling throughout today's session. However, it is holding on to gains of about 0.1%. I'll give you an intraday look at how things are faring here. And this is exactly what we would like to call that waffle. All right. Also, taking a look at the NASDAQ composite, that right now is lower by about 0.4% for the tech-heavy average as tech is being weighed on by AMD and Alphabet results. The S&P 500, you're seeing that down by about 0.1%. An interesting move here as well that we're seeing here. Catching a bid, you've got some small caps moving to the upside. Fractionally as it may be, the Russell 2000 is up 0.7%, and the S&P 600, which adds a profitability filter for those small cap names, that's also up by about 0.5% today. Just lastly, I'll take a look at the sector activity that we're also tracking for you. 11 sectors in the S&P 500, got them pulled up on the screen here. It looks like communication services, the biggest laggard on the day. That's down 1.6%. But real estate, that's been leading the pack throughout much of today's trading session. That's up by about 1.3%. Well, switching gears. The Philadelphia Eagles and the Kansas City Chiefs face off at the Super Bowl once again this Sunday. And our next guest helps provide all of the food and drinks for fans to dig into during the big day in stadium. Joining me now, we've got Belinda Oakley, who is the North America CEO of Sodexo Live. Belinda, great to have you here with us. Let's first talk about this experience, talk about pricing for people who are already paying thousands of dollars to get into that fan experience, into the stadium. They're also going to be thinking about some concessions along the way.
Yeah, look, Brad, it's obviously no secret that the Super Bowl is all about what's happening on the field. But for us, it's very much about what's happening in the concession stands, in the suites. We have about 4,000 team members, which we like to call our experience makers, who will bring 62,000 fans the taste of New Orleans right there. And I think, as you said, it's an event that's about football, but it's also about the food. I think the story goes it's the second largest food consumption day in the year outside of Thanksgiving for America. So we love the opportunity to bring that to life, and certainly it runs the gamut from game day favorites like hot dogs to lobster po' boys and high-end food. And just like we see in our existing spaces, the experience economy is something people are absolutely willing to pay for.
We want to take a look at the menu here because for some of us, not all of us can be there in person, but we're going to be tuning in. And here's some of the things that are going to be on the menu that fans can experience for the big game in person here. And a lot of this has kind of that taste, that flair of New Orleans as well. So kudos to you and the team for really crafting this and that consideration. I wonder on the pricing side, as it is so critical to make sure that you're offsetting all of the costs that go into bringing that experience to life, how you're also receptive of what fans are able and willing to pay, as it seems like concessions have just gotten so expensive over the years.
Yeah, look, and I think as you know, there's been a lot of economic impacts that have made it more difficult to sort of keep that fan-friendly pricing. But I think what we see today across the entire hospitality industry, and especially live events industry, is really that kind of tiered approach from a lot of focus on value favorites, whether that is the $4 hot dog to the really, really high end. You know, people are coming for this once in a lifetime experience and they want to match that with a once in a lifetime option. I think you just showed there the shrimp po' boy that we have. Obviously Super Bowl 59, we couldn't help but have a little bit of fun. We have 5 local shrimp on there and then 9-hour braised short ribs. So I would say I mentioned local, and I think that's a huge part and piece of the puzzle. The best part about bringing the taste of New Orleans to the Superdome on Sunday is that we're using a ton of local vendors. And that's really important for us generally, is putting money back into the local economy, but also bringing that quintessential New Orleans flavor to the dishes that we're serving. You know, the bread really matters. You know, what you're serving it on makes a big difference. The French roll that you get in New Orleans versus a French roll you get elsewhere. So I think that helps us a little bit on that front. And as I say, I think the big thing that we're seeing in terms of inflation and the impact on consumer pricing is that we've got to keep making those value options available in all cases so that live events are something that everyone can enjoy. But the desire for bigger, better, more exclusive, more unique, it just keeps growing and climbing.
Belinda, you know, it's an amazing kind of read-in that you get on the state of hospitality as well through the employment lens too. And we were talking about that a little earlier in the show, just with regard to some of the economic data from ADP that published this morning on private payrolls. I wonder, through your own seat and your own perspective, what you're seeing in the dynamics of making sure that you're fully staffing not just the Super Bowl events, but also all of the other stadiums that you work in tandem partnership with to bring this concession experience to life.
Yeah, look, it's the most important piece of the puzzle, frankly. I mean, our global purchasing reach is incredible because of the size of our organization, but it doesn't really matter what you do with the food if you don't have the experience makers and talent behind it to execute. The service experience is a huge part of the overall sentiment you have when you're visiting. So for us, I think we're really, really proud that we're investing in the industry generally. So in New Orleans specifically, as an example, we have a wonderful partnership with an incredible organization called Noki, which we're using as our kind of leaping ground to hire people local from the community who might never have even thought about a career in hospitality and need a kickstart. So we offer completely free community classes to sort of get you ready for a job in the Superdome or at the Convention Center or one of the other amazing venues that we operate there. Because I think while hospitality wage prices have certainly gone up, at the end of the day, we have to keep attracting people into the hospitality industry. It is not for everyone. It's nights, it's weekends, it's hard work, but for the people who find it, they usually find they never leave. It's really for the love of the game, and it's a love of the hospitality industry that we're trying to attract.
Yeah, a lot of us had our first job in that industry as well. I certainly was one of those. Belinda, thank you so much for taking the time here with us today. Appreciate it.
Thank you. Thank you very much.
Coming up, retiring early, considering one of those government buyouts potentially? Well, we've got advice for in the unconventional retirement situations on the other side of the short break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
President Trump offered millions of government workers the option to take buyouts and leave their positions, and they'll have to make a decision by tomorrow, Thursday, February 6th. And for those considering an early, forced, or otherwise unconventional retirement, we have David Strzezinski, who is the Sound Planning Group CEO, here with some advice. David, good to have you on the program with us. You have 7 steps all people should consider before retirement. So do these change at all if you're retiring early?
Well, there's 7 steps or 7 key areas financially that we need to be prepared. It doesn't matter what your age, what your retirement needs are. And so those steps are, number 1, we need to plan for income. Because if you fail to plan, you plan to fail. One of the big issues right now is that if your outgo exceeds your income, your upkeep's going to be your downfall. So we got to know what that burn rate is. And that a real key to that is also what you're going to do with your Social Security. So as an investment strategy, that's number 2. And so the strategies of today are very important. Now, a lot of people are looking at their 401k. Do you know you can roll that over to an individual retirement account, get perhaps better ideas on that? And so that's a really important idea. But let's not forget about tax diversification in the midst of strategy diversification. The big opportunity right now, Tax Cuts and Jobs Act 2.0 is here. And ultimately, tax diversification is key. Roth IRAs, there's 101 different ways of doing this. We got healthcare planning, critical to do. Get your Medicare right, your healthcare right. Big changes actually happen here in 2025 with that. And then we move into our step 5, which is real estate. We need to have a plan for real estate. We need to have an understanding for our primary residence. Section 121 deductions. We could sell and offset $250,000 per person as capital gains. That's a really great idea for a lot of people that are entering into retirement. And then estate planning. You got to get your legal components of this right. And then, of course, our ongoing review and evaluation process is critical. So I don't know what people are doing in all 7 of those categories, but I can tell you this much. Every single person that's looking at retirement has 3 things in mind. They want confidence in what they're doing, clarity to know what it is, and ultimately more control. And so we give that 7-step process, and that's our way of sharing it.
For anyone considering leaving the workforce in their 50s, or hey, and if you can, more power to you, or early 60s, what should they be considering?
Okay, well, there's a number of things that are very important, especially if you retire earlier than like age 65. Why? Medicare or your health care becomes very expensive to pay for on your own. And so, maybe you want to start a side hustle or something like that. There's a lot of ways to figure this out. But yes, we need to make a spending plan, which is so important. If your outgo exceeds your income, your upkeep will be your downfall. You got to also take control of your investments. And so, the portfolio that you would have in your 50s is potentially very different than the portfolio you'd have in your 70s. But if you're entering into retirement, actually they have more in common than you might think, because the goal here is that we ultimately need to create an income plan that is going to give us the most tax efficient withdrawal strategy. And so that is the key as people are looking before they leave.
What about individuals who want to save aggressively and potentially even retire in their 30s?
Yeah, well, this is a moving trend. And so a couple things that I would say to that group is, what are you going to refire to? And so if your why is big enough, you will sacrifice and live like nobody else today. That means saving more, spending less, not trying to keep up with the Joneses, in order to put yourself in that position in the future. But you want to ultimately ask yourself, what are you trying to do? And what are you trying to accomplish? If you're trying to take money out of a 401k or an IRA and you're under the age of 59 and a half, that could be challenging unless you understand some of the rules. And so you just need to get this right. You got to set these things into motion at an early place, but you need to understand the diversification and ultimately the required rate of return that's going to take you in order to achieve that lifestyle that you're looking for and to ultimately accomplish those goals. So that high net worth person has a really exciting road in front of them, but they got some planning.
And finally, for wealthy individuals who don't need an annual salary, do you recommend retirement?
Well, there's a lot of people today, professionals, maybe in healthcare, usually key stakeholders that we see are working beyond maybe age 65 or something into their 70s. They have something to give back, so I think that people should do what makes them happy. If you have something to give back, like my father is an example, 71 years old, he's still giving back. My mom, 71 years old, still giving back. They could retire, but they choose to stay in the game because they get value from it. One thing I'll just note is that potentially for men, it's a little bit more challenging to make that transition from, hey, everyone says hi to you and looks up to you in the office, and then if you say you're not doing that role anymore and you just go home, maybe your wife doesn't respond the same way, kids don't respond the same way at home, and it feels a little different. So it could be a real culture shock as you go from the work life to that retirement. Every day's a Saturday, and this is my new people every day. And so I just think people should look before they leap. There's great books out there, great ways to prepare. But these 7 steps will help people as well.
David, thanks for taking the time here with us with the retirement tips. Appreciate it.
Pleasure's mine, Brad. Thank you.
Elon Musk sparked surprise yesterday on X when he posted that the team behind the IRS's free direct file program has been, quote, deleted. You still have over 2 months before the April 15th tax filing deadline. And depending upon your tax situation, it can be completed and complicated and even costly to file your taxes each year. Here to break down why, we've got Yahoo Finance's very own Jana Heron. Jana, what's going on here? Can you break this down for us?
Sure, Brad. Maybe a good way to illustrate how complex our tax system is by comparing us to other people in other countries. So one guy from Sweden I talked to gets a pre-populated tax return, and he can accept that return by mail, app, calling a phone number, or even texting. Another guy in the UK doesn't have to file a tax return on the income from his employer because his paycheck tax withholdings are so precise. Obviously, that is not how it is here, and there's a couple reasons for that. So one of those big reasons is our withholdings from our paycheck are not as precise as they could be. And that is because we have the married filing jointly status. In other countries, everyone is an individual status. And so, if you have a married couple, both the wife and the husband have their own taxes. We have a joint unit, so it makes it really harder to get those withholdings correct. We also legislate a lot of social policy through our tax system. So we get all of these tax deductions and credits that in other countries may not have because they have actual social programs for it. Healthcare is a good example. We have credits and deductions, whereas other countries have a universal healthcare system. And then we have all those lobbying groups that love those certain credits and deductions. The housing industry loves the mortgage interest deduction, so they work hard and spend a lot of money to keep it in our tax code. And of course, the tax prep companies love the complexity of the system because we need to turn to them to do our taxes.
So, Janet, can the U.S. tax process be simplified?
Oh, yes, it can. But it's slow going. And there's been, a lot of proposals over the years to do that. But let me tell you about 2 things. The Tax Cuts and Jobs Act in 2017 under the first Trump administration. So that doubled the standard deduction and it curbed several itemized deductions. So and that dramatically reduced the number of taxpayers who would choose to itemize their taxes. And not itemizing actually is simplifying taxes for those people. And then we also have, as you mentioned earlier, the IRS has the direct file program, which debuted last year and lets you submit a return straight to Uncle Sam at no cost. And now it's actually expanded, and it can automatically import some of your W-2 information directly from the IRS and it process more returns that have some, different claims and tax credits than the ones from last year. But it's still like a far cry from what other countries do, which is, you get a pre-populated tax return. And the simplest process out there would be to have the IRS calculate exactly how much we owe or how much we are owed. And to do that, we require some legislative changes. So we're far away from that.
Jana, thanks so much for taking the time here with us today.
Great, thanks.
Certainly. Before we go to break, this Black History Month, we celebrate the power brokers in business, the executives, entrepreneurs, proven change makers who would advance economy and society. And in addition to individuals that we're highlighting, it also takes companies unwavering from their efforts for diversity, inclusion, and equity. DEI, or Diversity, Equity, and Inclusion initiatives, they seek to correct some of the long-standing discrimination experienced by people of color and LGBTQ plus workers in the workplace. That discrimination, according to Citigroup, cost the U.S. economy $16 trillion between 2000 and 2020. Despite a quantifiable economic impact stemming from racism and discrimination, early in Trump's return to the White House, he sought to reverse initiatives such as racial bias training at work, diversity, equity, and inclusion offices and programs, and a 1965 executive order establishing non-discriminatory hiring practices for federal contractors. However, some businesses are publicly standing by their own diversity initiatives and values. When discussing the matter with Yahoo Finance at the World Economic Forum, NASDAQ CEO Adina Friedman had this to say.
I can say for NASDAQ, we're very proud of what we do. We're very comfortable and confident in what we do. We feel very good about the results that we've been able to achieve in terms of creating that culture of inclusivity and belonging. And I think a lot of companies feel the same way I do. And it's just going to be a little bit quieter in how they implement.
JP Morgan CEO Jamie Dimon also reaffirmed his commitment to diversity and inclusion at Davos in the face of shareholder activist attempts to disband programs. And it's not only executives who are pushing back here. Costco shareholders, they voted to block an anti-DEI proposal from a conservative firm, the National Center for Public Policy Research. 98% of shareholders who voted chose to defend existing diversity policies. Coming up, could a potential investigation in China be bad news for fans of smaller iPhones? We have your weekly tech support segment next.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stock shrugging off earlier losses. Now digging into some of today's movers. We have Supermicro Computer jumping after announcing full production of its AI data centers powered by NVIDIA's Blackwell chips. The company's offerings include cooling systems with multiple CPU options. Novo Nordisk shares are gaining after beating earnings estimates. Sales of its weight loss and diabetes drugs, they surged. The CEO telling Yahoo Finance that he expects, quote, the same absolute growth for 2025. And Snap reversing earlier gains. You have shares falling after the company issued a disappointing earnings outlook, overshadowing its revenue beat. And that is your Yahoo Finance Market Minute. For more on what is trending on Yahoo Finance, you can scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Trader Talk, where we serve up the latest buzz from Wall Street, helping you keep your portfolio sizzling without getting burned. Look, I'm your host, Kenny Polcari, broadcasting live from the iconic New York Stock Exchange, the heartbeat of capitalism. After decades here as an institutional stockbroker myself, it feels incredible for me to be back home. This place still gives me a thrill. Now, while it has evolved and modernized over the years, the New York Stock Exchange remains the cornerstone of capitalism, entrepreneurship, and above all, it suggests freedom. And that's woven into the very fabric of our nation's history. Today, we've got a packed agenda, and I brought you the perfect guest to help us tackle it. We'll be diving into key topics shaping our economic future, including inflation, monetary policy, debt, and fiscal strategy. We'll explore the pro-business buzz, the ongoing debate around tariffs, whether they're a looming threat or a strategic promise, and the influence of global power gatherings like the annual Davos Forum, sometimes labeled a boondoggle is the way I call it. And let's not forget the world of cryptocurrencies where volatility reigns supreme, soaring one day and spiraling the next. There's a lot to unpack. And as always, there's never a dull moment. So let's just get to it. Let's kick things off with 3 essential market tips to keep in mind no matter which way the wind is blowing. 1, pay attention to policy follow-through. New leadership, new policy directions, it's a cycle we experience every 2 years with the midterm elections and more profoundly every 4 years during the presidential election. Each election ushers in a wave of new policies while sweeping out the old, leaving investors scrambling to hedge their bets and assess how these shifts might impact their portfolios or uncover fresh opportunities. Whether it's promises of lower taxes, deregulation, or specter of tariffs on key trade partners, the real question remains, will these policies stick? The key is to watch how swiftly these ideas move from campaign trail rhetoric to actionable changes, and just as importantly, how global markets react. Number 2, beware of the whipsaw moves. Stock futures, commodities, and cryptocurrencies have a knack for dramatic turnarounds, sometimes in the blink of an eye. Technology, particularly algorithms that scrape the headlines, can react in seconds, and they often drive these swift and sharp market movements. Traders can see big gains or losses almost instantly. A perfect recent example? The news concerning the Chinese AI app DeepSeek. The idea that a small Chinese AI company can so upend the AI narrative just goes to show you how quickly sentiment can shift. All of the market leaders getting absolutely crushed on the news, which I think might just be a bit overdone. Look, we needed a catalyst for a pullback, and I think that just provided it. This underscores a critical point. As a trader, you must stay nimble, ready to pivot in the short term. For the long-term investor, though, the strategy is different. It's about turning off the noise, focusing on the bigger picture, and staying disciplined. Keeping a reserve of 5 to 8% cash on hand gives you the flexibility to capitalize on significant pullbacks when opportunities arise. Remember, a steady hand often wins in the long game. Economic data stays top of mind. That's our key number 3. It is essential for both short-term and long-term investors as it provides insights into market conditions, trends, and opportunities. Market sentiment indicators like inflation, unemployment, retail sales drive sentiment and short-term price movements. Central bank policies, data such as the CPI, the PPI, and the PCE, and the PMIs influence interest rates, impacting bonds, currencies, and equities. And then there's sector performance. Reports reveal which sectors may gain or lose. So strong housing data benefits real estate, while weak manufacturing signals trouble for the industrials. Economic trends. Early signals of recessions or recoveries help investors pivot their strategies, favoring defensive sectors during slowdowns and cyclical industries in recoveries. So here's my big take. The market can pivot in an instant, swinging euphoric rallies to oversold panic within a few trading sessions. When optimism takes hold, driven by pro-growth narratives, easing inflation concerns, or upbeat corporate guidance, stocks can soar, often led by mega-cap tech. These gains, with their outsized influence on the indices, can single-handedly lift the market or drag it down when sentiment shifts. High valuation names, in particular, remain vulnerable to the sharp reversals when the mood changes. Big financials often set the tone during earnings season, acting as bellwethers for the broader market. Strong earnings and raised forecasts from major banks can boost confidence across sectors, benefiting everything from consumer discretionary to the housing stocks. But the flip side is equally true. Concerns about rising rates, inflation pressures, or tighter regulations can cast a long shadow, creating ripples that impact other sectors. Interest rates, always a focal point, add another layer of complexity. Investors remain split on the Federal Reserve's next move. Some anticipate a rate cut to spur growth, while others argue that economic data hasn't weakened enough to justify a dovish pivot. Any surprises on this front, hawkish or dovish, could spark volatility as reflected in the VIX or related instruments. Then there's the ongoing drama of tariffs. Whether threatened or implemented, tariffs can disrupt supply chains, squeeze corporate margins, and push up consumer prices. Often, the mere mention of tariffs is enough to jolt the market, even if they never materialize. It's a powerful tool of negotiation that investors cannot afford to ignore. Look, the bottom line is navigating this complex environment requires focus, diversification, and a clear head. Don't get caught up in the daily noise. Focus on the fundamental shifts. Pay close attention to corporate guidance, central bank actions, and the larger trends like demographic changes or technological innovation that can sustain markets through the ups and the downs. Staying informed and balanced is your best defense in an unpredictable market. My next guest, John Lonsky, is a renowned financial economist. He's a media commentator and a speaker with decades of market analysis and economic experience in forecasting. Formerly was the chief economist at Moody's Investors Service. He now leads the Lonsky Group, sharing insights honed over pivotal economic events like the 1970s inflation cycle, which I was at as well, the 1987 crash, and the 2008 financial crisis, along with the COVID-19 pandemic. He's a frequent media presence on Fox Business and Bloomberg. John has also been featured in the Wall Street Journal, the New York Times, the Financial Times. His accolades include the prestigious Lawrence R. Klein Award for Economic Forecasting and recognition as the top forecaster by the Wall Street Journal and Bloomberg. Beyond his media and consulting work, John teaches corporate finance at Fairfield University and speaks globally at financial conferences, offering invaluable perspectives on the economy and the markets. Please join me in welcoming my friend, John Lonsky. John, thank you so much for joining me here at the iconic New York Stock Exchange to talk about what's happening in the markets.
Well, thank you, Kenny. I very much appreciate the opportunity.
It's always a pleasure. So look, there's a lot going on. But before we maybe get to specifics, let's just talk broadly first about, here we are in new administration. It's a new year. We've got, less regulation, maybe softening talk on tariffs. So give kind of the audience a broad overview of your sense.
I think the business sector has a very positive outlook of the new administration. From what I can gather, consumers a little bit less so, but I think the consumer skepticism is concentrated among Democrats as opposed to Republicans and the MAGA wing.
Right.
I think the outlook is positive. And I think it's very positive. And
I do too.
And that's what worries me.
Right.
It may be too positive.
Right.
We may actually see companies hire too many people and we get too much spending. Then eventually we find that instead of falling, what do interest rates do later this year? They maybe move higher.
I'm in that camp where I actually don't think we're going to get an interest rate cut at all this year. I think the risk is to the upside because I think inflation is beginning to just kind of rear its ugly head, right? It's brewing a little bit. You can see it in the data. It's not out of control yet, but I'm worried that, I don't necessarily think it is going to spike out of control, but I do think it could potentially lift its head a little bit, and I think that will put the Fed on pause.
That very well might be the case, and what concerns me on the inflation front, that is that we're starting off at a nearly full employment economy.
Right.
The unemployment rate's only 4.1%, yet I get the sense that real GDP growth might remain close to 3% during the first half of this year. And if that's the case, unfortunately, as that unemployment rate goes down to 3.8% or lower, that puts upward pressure on wages.
Right.
And in response to higher labor costs, companies are compelled to increase prices. And because incomes are still going to be growing at a pretty brisk pace, companies can afford to hike prices.
Right. They can afford to hike prices, and it falls on ultimately you and me, the consumer.
Mm-hmm.
Right. And so that's where I think the fear is for me. Look, I started this by saying, you and I both lived through the 1979-80 inflation cycle after the Jimmy Carter years, just when Ronald Reagan took office, right? Where the Fed at the time prematurely cut rates because they thought they'd slayed the inflation monster, which, while I was only 20 years old at the time, I remember it vividly. I remember where rates went. I remember what the whole thing happened. 2 years of a deep, dark recession because of what the Fed had to do.
Mm-hmm.
My fear is, could we see inflation get even worse than it was the first time? Meaning it was at 9% at the height of the Biden years. Could we see it get worse?
Okay, I'm going to go out on a limb and say no. I don't think that's going to be the case, but you're going to replay this in the future and say, Lansky said, it wouldn't at 9%, it was at 10 or 11%.
Yeah.
But please don't do that.
No.
I think we have a different economy today. One thing, a big difference between today and what held true in the late 70s and the early 80s is we have a much older economy.
Right.
And I think that limits the upside for consumer spending growth. I think that limits the upside for pricing power among businesses. I think, you're seeing this aging of the U.S. economy. It's reflected in a lot of these consumer spending numbers that nobody's mentioning.
Right.
I was shocked to notice that healthcare spending in the third quarter was up 9% year over year. The rest of consumer spending less than 5%. And that's indicative.
Right.
We're getting older.
But, to your point, we're getting older. The whole baby boom generation, of which I'm at the end, you and I are both at the end, right?
I wish.
Yeah. I think that's becoming more relevant, which is why I actually like healthcare as a sector. It was an underperformer in 2024, but I think it's going to perform well in 2025. So let's talk about where you think what you think about the consumer in 2025.
Well, I keep on hearing that the consumer is stretched, but that might be true for lower income consumers and maybe some middle income consumers.
Right.
But in 2024, in the holiday shopping season, time and time again, the consumer surprises on the upside.
It continues to amaze me.
Yeah, and believe me, unless we get a marked, notable slowing of the labor market, I think this is going to hold true going forward. And given the positive attitudes of businesses, strong business sentiment, I'm reading about how businesses plan to step up hiring, given the new administration and their policies, the avoidance of tax cuts and deregulation. I don't see consumer spending slowing by much anytime soon.
But do you think consumers, here's where it goes off the rails for me a little bit, is they keep saying the consumer is spending on credit, on credit. At some point, the whole thing's got to implode.
It has to, but on the other hand, when I look at the stock price performance of your major credit card companies, it's quite good.
Right.
So the market doesn't sense impending doom for the quality of credit cards.
Right, and I think we also saw in some of the big banks, at least the big banks when they first started reporting, is that their loan loss reserves account weren't overfunding them. They're not suggests that they're not worried.
If I remember correctly, it was maybe 6 months ago or so, banks were upping their loan loss reserve
100%.
accounts. And they found out maybe we didn't have to be so cautious.
Right.
So they're not doing that any longer. I mean,
Right. So it sent, for me, it sent the message that the banks, in fact, are not concerned about the consumer. They're not concerned about defaults on mortgages or defaults on credit cards, right? Is that what
Right,
it's
that's what I'm seeing. And
right.
I want to go a step further, if you don't mind. I worked at Moody's,
go
so
right
I know
ahead.
an awful lot about
Yeah.
corporate bond defaults.
So feel free.
Yeah. And I'll tell you, anytime you've had a sell-off of late, what I keep an eye on is what happens to corporate bond yield spreads or the compensation demanded by corporate bond investors for default risk, the risk the company goes kaput, can't make good on its debt repayment obligations.
And
what has been the case throughout 2024, and I think what's perhaps the case today, is that those spreads remain at historically low levels. That is, investors are still willing to accept very little, historically little compensation for the risk that the corporate debt doesn't get repaid, telling me the outlook for corporate earnings is pretty good.
Right. Well, it's going to be interesting. Hold on one second. We're going to be right back.
Oh yeah, you're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
So welcome back. I'm here talking to John Lonsky. So let's finish our conversation. Let's talk about, first of all, what happened, at the World Economic Forum, which I always call the Davos boondoggle, because I think that's really what it is. But there were a lot of good interviews, a lot of good insight into what some of these global leaders are thinking. So what was your impression?
My impression is that global leaders are bracing themselves for the Trump administration. They don't know what's coming down the pike. There's going to be surprise after surprise. Of course, a lot of worry over what happens to tariffs, tariffs being used as a negotiating weapon.
Which I think that's exactly what they are. I don't think he's going to come in and just impose tariffs right across the board. I just don't see that.
Trump is not a dumb man. He's not going to go ahead and hike tariffs up to levels that destroy the U.S. economy and the world economy. It makes no sense. But what I can't help but notice is how poorly the rest of the world is performing economically relative to the United States. I mean, 2024 was the second straight year in which the German economy contracted. It was off.
Right.
I mean, you're looking at growth next year for all of Europe less than 1.5%.
So why do you think Europe is so weak? Versus the United States.
Energy, they were too dependent on Russian energy. That's part of the problem. Regulations, I think they're being hurt by the advancements of technology that are basically concentrated in the United States, setting aside what happened with this Chinese company. I don't know how much weight that carries. But the U.S. economy is outperforming, even with the heavy regulations of Joe Biden.
Okay, but that brings me to the point. The U.S. economy is outperforming. The labor market is not weakening the way that Jay Powell told us it was in September when they had to make that massive 50 basis point rate cut because the labor market was weakening. Coincidentally, 5 weeks ahead of a presidential election. Right. Which to me didn't make a lot of sense, but what was done was done. And what we're seeing now is that that's not happening at all. The labor market's not weakening, which then brings me back to the point about what's the Fed going to do.
Yeah, I think that September rate cut was a Hail Mary pass for Kamala Harris. That's what it came down to. The labor market is not weakening. We're close to full employment. We're finding that a lot of workers are getting pretty substantial wage gains.
Yes.
It's not surprising anymore that a labor union signs a contract, 10% average annual increase by wages for 5 or 6 years. Come on, give me a break.
Right. And those are going to come down, though, as we move along. Those higher wages are going to come down to the consumer.
Come down to the consumer, and it also means that consumer spending will remain vibrant.
Right.
And I would think, too, that in general, perhaps wage growth now at 4% might be pushed up to 5% if we get the type of growth that we anticipate, that the market anticipates for 2025.
Okay, so if that's all true, and we see yields tick back, because I think yields are going to go back up 4 and 3/4, 5, is where I think the 10 year is going to go to. But if that's true, and the economy remains as robust as it is, the market can do fine under that scenario.
Provided that the increase in interest rates does not threaten future growth, does not create uncertainty regarding the adequacy of corporate earnings.
Okay, but so if it doesn't, then the market can function fine. The problem is going to be if exactly that happens, it starts threatening the future growth, or the economy starts to stall.
What you don't want to see is you don't want to have interest rates overshoot.
Right.
You don't want to have interest rates rise to a level that begin to damage business activity, consumer spending outside of, say, the housing sector.
Right. John, it has been, I could sit here and talk to you all day long. It's been a pleasure to have you today, and I hope you'll come back and join me.
Same here, Kenny.
Always
I look forward to it.
Bye-bye. Before we wrap, let's recap today's tips. 1, pay attention to the policy follow-through. Whether it's lower taxes, deregulation, or tariff threats, it's the implementation that counts. Don't let a flashy headline trick you into a snap decision. 2, beware the whipsaw moves. Keep some flexibility in your strategy. Markets can flip from green to red on a single data point or a rumor. As a short-term trader, you need to pay attention to the noise that can sometimes create chaos. While as a long-term trader, you need to eliminate the daily noise and the chaos. And 3, economic data remains top of mind. Both short and long-term investors benefit from keeping economic data at the forefront of the decision-making process because it provides valuable insights into market conditions, future trends, and investment opportunities. Okay, guess what? Now it's time for dinner. And today's recipe is giamborta. Now, giamborta is a hearty Italian stew. It's the perfect way to clean out the fridge. In this episode, we cleaned out the economic data. It's flexible, it can be customized with your favorite vegetables or proteins. Here's a step-by-step recipe to make this comforting dish, and it's really an Italian classic. So for this you need, and this serves about 4 to 6 people, you need 3 tablespoons of olive oil, 4 garlic cloves which are crushed, 1 large yellow onion chopped, 1 medium eggplant diced, 2 medium potatoes diced, 2 zucchinis sliced, 2 bell peppers, any color, chop them up, 1 can, a 28-ounce can of crushed tomatoes, right? 1 cup of vegetable broth or chicken broth, right? You can use either. You need 1 small can of tomato paste. You need a teaspoon of salt. You need a half a teaspoon of black pepper, a teaspoon of dried oregano, a teaspoon of red pepper flakes, which is optional if you want heat. You need a handful of fresh basil leaves, torn, and optionally, you can add beef. You can add ground beef to this, or sweet sausage, or even chicken pieces if you want to. That's not necessary. You need to put this over 1 cup of rice, or if you're really interested, put it over some rigatoni. We'll talk about that in a moment. So now you got to prepare the base. You got to heat a heavy bottom pot or a Dutch oven over medium heat. Add the olive oil and the garlic, sauteing until it's fragrant, about 1 to 2 minutes. Add the onions, cook until softened, about 5 minutes or so. Now you're going to add all the vegetables. Toss in the diced potatoes, the eggplant, the zucchini, and the bell peppers. Season it with the salt and the pepper, the oregano, and the red pepper flakes if you're using it. Stir to coat the vegetables in the oil and the aromatics, and you're gonna let that sit for a little bit. Now you're gonna build the stew. You're gonna add in the crushed tomatoes and the vegetable broth. If you prefer a thicker consistency, then you're gonna add in the tomato paste. Bring the mixture to a boil, then reduce the heat to a simmer. Cover and cook it for 20 minutes, just stirring occasionally, just so you help it to blend. Now, if you're adding the meat, while the vegetables are simmering, heat a frying pan over medium-high heat, add a bit of the olive oil, brown your choice of protein, whether it's beef, sausage, or chicken. Season it with salt and pepper, then add the brown meat to the pot with the vegetables. Let everything simmer together for an additional 20 minutes. Now, you want to finish the dish. You want to stir in the fresh basil leaves and adjust the seasoning if needed. Let the flavors meld together for another 5 minutes. If you're going to serve this over pasta, you want to boil your pasta, your rigatoni, boil it for 8 minutes or so, get it nice and al dente, then take it out, and then you pair the rigatoni with the giamborta stew all together, mix it up, toss in some fresh grated Parmigiana cheese, and that's done. It is comfort food in its best interpretation. Now, the customizations. You can add other vegetables like carrots and green beans or mushrooms if you like. It's really based on what you have at hand because it's really about cleaning out the fridge. Now, if you want to make it spicy, you can use hot Italian sausage or an extra pinch of red pepper flakes for a kick. If you want a thicker stew, for a heartier consistency, use less broth and add more tomato paste. You want to enjoy this giamborta, which is a versatile dish that is just as delicious as it is resourceful. Buon appetito. Is resourceful. Buon appetito.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
News when you want it with Bloomberg News Now. I'm Amy Morris. The House Oversight Committee is holding a hearing on government efficiency. Ranking Democrat Jerry Connolly offered a motion that was backed up by Representative Melanie Stansbury, voted down by the Republican majority, but not before an incendiary shouting match.
I move that the committee subpoena Elon Musk to come before it at the earliest possible moment. The motion is not debatable.
I think it's outrageous that this committee...
Sure, Chairman, that's not a point of order.
Let's have order in this country.
You're out of order.
Mr. Elon Musk is out of order.
After Republicans killed the motion to subpoena Musk, Chair James Comer faulted Democrats for not inviting Musk as their witness for the hearing. It was an offer that would likely have been refused. Doge aides, meanwhile, are searching the Medicare payment systems for fraud. Sources tell the Wall Street Journal workers with Elon Musk's Department of Government Efficiency, which is not a government agency, have been at the Centers for Medicare and Medicaid Services all week, where they now have access to key payment and contracting systems. They are reportedly going through the system's technology and examining the money that flows through them, looking for any fraud or waste. President Trump says the U.S. should take control of the devastated Gaza Strip, relocate the area's residents to other countries, and turn it into a Riviera. Trump made the comments while appearing with Israeli Prime Minister Benjamin Netanyahu at a White House press conference. We get more with Bloomberg senior editor Derek Wallbank.
When Donald Trump started going into this, the initial reaction was, hold on, did he just say what we think he said? And then Trump went on to make very clear that not only did he say it, he meant it.
Bloomberg's Derek Wallbank. Trump also vowed to visit Israel, Saudi Arabia, and the Gaza Strip during upcoming foreign travel. He did not say when. President Trump also says he is willing to immediately start working on a new nuclear deal with Iran, allowing that country to, quote, peacefully grow and prosper. Trump posted the statement hours after signing a directive calling for tough enforcement of existing sanctions, effectively reviving his first-term maximum pressure strategy. U.S. allies expect the Trump administration to present a plan to end Russia's war on Ukraine at the Munich Security Conference next week. The plan is to be presented by Trump's special representative, Keith Kellogg. It may include freezing the conflict, providing Ukraine with security guarantees, and holding elections in Ukraine after a ceasefire. Many of President Trump's policies are adding to uncertainty in the economy. That's what we're hearing from Richmond Fed President Thomas Barkin. He says it is difficult to know the impact tariffs will have on Fed policy.
I think right now, if you look forward, you have to say tariffs are coming or here, are going to be here. It's just incredibly hard to know exactly what it's going to be. So I think the concept of tariffs, sure, but the reality of what specific tariffs on what specific countries at what specific percent on what specific goods, we don't know.
Richmond Fed Chief Thomas Barkin. The Postal Service is reversing course just a day after placing a ban on all inbound mail and packages from China and Hong Kong. USPS announced yesterday it would no longer accept those packages after the U.S. imposed an additional 10% tariff on Chinese goods and ended the exception that allows small value parcels to enter the U.S. without paying tax. The Postal Service gave no reason for its reversal, but now says it will work with Customs to implement a new tax collection process on those packages to try to avoid delivery disruptions. A sell-off in large tech companies is dragging down the stock market. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.1%. NASDAQ down 0.4%. The Dow is up 0.1%. The 10-year Treasury yield at 4.41% and the 2-year yield at 4.16%. We have a fresh read on the services sector from the Institute for Supply Management. It fell to a reading of 52.8 in January. That's still in expansion territory. We got reaction from Steve Miller, chief of the ISM Services Business Survey Committee.
It was a surprise to me that it was down in the 52s. It's the third year in a row we've seen drop in the January number, and in fact, it's the lowest reading since 2010 in January. So a bit of a concern, a consistent view of kind of weak expansion.
The ISM, Steve Miller. Private payroll provider ADP says companies added 183,000 jobs last month, a lot more than the 150,000 they expected. We get more from Bloomberg's Michael McKee.
Last month, revised up from 122 to 176. Of course, we had a big increase in non-farm payrolls last month that wasn't expected either.
Bloomberg's Mike McKee. We get the Labor Department's read on January jobs on Friday. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And Justin Trudeau.
There are still people who are hell-bent on reversing our approach on fighting climate change.
And the creative minds you haven't heard of yet.
Really don't need to have a tomato in December. It's gonna taste like nothing anyway. Just don't do it.
What we've made here is inspired by shark skin. Yeah. It is much more simplified than actual shark skin.
Drilling industry has come up with some of the most creative job titles.
Yeah. Tell me more.
You could imagine tool pusher,
no,
driller, motorman, mudlogger.
It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcasts on Apple, Spotify, or anywhere else you get your podcasts.
All working on trying to get costs lower. You know, Microsoft is trying, and they want this to happen. I mean, all these companies want this to happen. So the reality is, I think they're all trying to do this. And again, you can't just listen to what they say. We have to see it in the real world, and we have to actually understand what's the bench test. But right now, no one can verify that. So what we're doing is we're basically we're having to believe what they say. And the question is, do you believe what they say? And not many people really believe that claim. Now, the technology works. The technology can be a whole nother thing. And so, yeah, I mean, look, there are 5 productivity apps. You can go to the App Store right now. You can download Perplexity. You can download Google Gemini, which I've been using, which is great. You can download Claude. There are 5 consumer apps that are really good that you can download right now to help your day. But I don't think major enterprises right now are willing to commit. Now, there are divisions and there's signs that this can work in the enterprise. But I think again, is it going to be on-prem or is it going to be feeding all the data back to China? And are you feeling comfortable with that? I think a lot of companies are not going to feel comfortable with that.
On that point, Brent, actually, you know, I was all set. I was going to download and experiment with DeepSeek. And then I had Anthony Pompliano, Brent, on my show yesterday, Mr. Bitcoin himself. I said, hey, Pomp, did you do that? He looked at me like, he said, I don't put Chinese software on my phone. Is that how you're thinking about it, Brent? Or no, did you download and play around with DeepSeek?
I haven't. I was in Japan. I just flew home. So I've been traveling. But the reality is I already have trusted apps that I use. I use Gemini, I use Perplexity. These are great products. They're very different, and so I'm using them both. And I don't need 5 different productivity apps. So I think the real interest will be, can they cross the bridge to become an enterprise player, and not just only on the consumer side. And we'll keep an eye on that. But I think there's some big barriers to get to that point. I think Julie's point, all the rest of these companies are trying to figure this out, right? They're all working on this. And I'd say that Meta, Apple, Amazon, all these companies are very smart. The other thing is, all these companies are very clear. They want to embrace all the models. They don't care. They'll take all the models. If you want it, great, take it. Amazon's taken a very different approach. So these layers are going to commoditize. It's the applications. It's the things on top that are going to make a big difference. And that's where I think the rest of the industry is going. So you can swap in and out these languages as Microsoft CEO says, there's a small language they have a large language. They're not going to replicate what OpenAI has done. There are going to be multiple languages that thrive. So I'm not here to say like this isn't going to work. I'm just here. I think there's some big challenges, and I think the market massively overreacted to what is a great enhancement, but it's not. Again, I think there's so many parallels to what happened with ChatGPT and Google, and investors are going to make a lot of money being long tech here, and they're making money today off of this. And I think the overreaction is borderline crazy, the way the market reacted. And I think it tells you how far they over-indexed to AI. And I think a lot of investors don't even know what they own, honestly. So there's a lot to be learned from this. But I just don't think it's as big a deal, and the overreaction I think was excessive. And there's a lot we have to learn still. So there's a lot we can't make a call on yet because we don't have the proof.
We will wait. Borderline crazy. We'll leave it there, Brent. Thank you as always, sir. Great to have you on the show.
Good seeing you. Take care.
Thanks. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The Wall Street Journal reporting that SoftBank is reportedly in talks to invest up to $25 billion in OpenAI. The deal would make SoftBank OpenAI the biggest investor, replacing Microsoft, which has committed nearly $14 billion to date. This coming after China's AI startup DeepSeek sparked a massive sell-off in tech stocks earlier this week, prompting both public and private companies to respond. That includes OpenAI's CEO Sam Altman, who announced the company will now offer non-paying users, quote, hundreds of free queries a week. That offering is something that D.A. Davidson estimates could potentially cost the company more than $500 million per week. For more on what it means for the overall AI landscape, we want to bring in Alex Platt. He is from D.A. Davidson. Alex, it's great to have you. And your note caught my attention for a number of reasons. One, obviously, the overall impact that we're seeing to the AI landscape, but ultimately what this means, I think, for the games of winners and losers within this space. You've identified some of those losers that maybe often fly under investors' ratings. So who stands to potentially benefit from this shift?
Yeah. Thanks for having me on. I think if we look at the impact of what DeepSeek has done, we've been telling clients, this is, we could relate this to Roger Bannister and what he did for track and field by breaking the 4-minute mile. Prior to Roger Bannister doing that, it was thought as impossible to go under 4 minutes. He breaks it, and right afterwards, you see a bunch of runners be able to run now sub 4 minutes. DeepSeek did something very similar to the market. The market's, the prevailing narrative in the market up until about a week ago was that in order to compete at the frontier model game, you needed to be an OpenAI an Anthropic, a DeepSeek, a Meta XAI, you needed to have tens of billions of dollars of excess capital in order to build a model that powerful with that level of intelligence. DeepSeek showed us, you don't need that much money. They could do it with $5.5 million for training. They could deliver at a much lower cost. And the best part is they really gave the rest of the space their playbook, how to replicate what they've done, how to make a model that is that computationally efficient. And what this really does is, it'll increase competition in the space. This means that, OpenAI and OpenAI and DeepMind, they're going to continue going down their path of using billions of dollars and continuing to scale their pre-training compute and inference test time compute. But on the flip side of that, now we have it so you can spend a lot less and get the same level of performance, and that just increases competition, which is great for consumers, it's great for businesses, and it's great for academic researchers as well.
Well, and Alex, I think that also the biggest takeaway is that DeepSeek isn't alone, right? When you take a look inside China, some of the other models that are under development right now, we also got the news out from Alibaba this week too.
Exactly. We're seeing a lot of research being done in the frontier model space, especially out of China. And I think this kind of goes to a point, and we're seeing this from a lot of maybe CEOs who are commenting in the U.S. about what DeepSeek is doing. Maybe we could argue that there's a lot of groveling occurring about maybe the methodology as to how DeepSeek has done this. But in the meantime, while we're talking about the politics and talking about whether their compute cluster was whether they were honest about that in their paper, these Chinese labs like DeepSeek, like Qwen, like ByteDance, like Minimax, they're going out and they're innovating. DeepSeek, in the meantime, since last week, has put out a leading vision language model that beats OpenAI's DALL-E and Stable Diffusion. So these Chinese frontier research labs, they're not resting. And I guess the only answer for American labs, in our view, is they just have to out-innovate them.
Yeah, it seems like the methodology is certainly coming into question as to how they ethically were able to develop it so quickly, and then ultimately what type of code they were perhaps able to leverage from some of the other competitive partners that are out there or competitors that are out there. I guess the question, though, becomes who is best positioned to monetize this at scale?
Yeah, I think when we look at this, I still think that on the business side, it's still these frontier labs like OpenAI, like DeepMind, like Anthropic that are still maybe best positioned to monetize this sort of thing. Again, we're not trying to say that DeepSeek has gone out and has won the frontier model game. They're helping push and advance the space forward. We think that these large labs will respond in a big way. O3 Mini should be coming out soon, and we think that will be a big development. But as it goes for maybe the consumer business for these chatbots, I still think that some of the top players like OpenAI, like Anthropic, are still very well positioned to capitalize on that.
Now, another thing you pointed out in your note, the AI arms race here between China and the United States is just getting underway. So with that in mind, what does that then look like, do you think, over the next 4 years under the Trump administration?
Yeah, I think it's going to be competitive, right? We saw Dario from Anthropic yesterday. He talked about wanting to increase foreign export controls on some of these NVIDIA GPUs. Now, it's our belief that this probably won't help. They didn't work beforehand. DeepSeek and other labs were able to find ways around them, whether it's through their algorithmic approaches or other techniques. But what this means is that for the Trump administration, if I were maybe AI crypto czar David Sachs, instead of groveling and talking about how they distilled some of the OpenAI models, or they took data, or they took GPUs they weren't allowed to, I would sort of go back to what it seemed like the Trump administration was running on beforehand in his campaign, which was America needs to return to innovation, being pro-innovation. And I think that's what that means for the United States. And I think over the next 4 years, we're going to see a lot of back and forth between some of these Chinese labs and our frontier U.S. labs.
Alex Platt of D.A. Davidson. Alex, thanks for taking the time.
Thanks.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills, 30 minutes into the U.S. trading day. Let's get into 3 catalysts that we're watching this hour.
First up, AMD falling on missed data center revenue and NVIDIA gaining on anticipated capex from hyperscalers. We'll discuss what's next for the AI trade.
Plus, we hone in on autos as talks between Nissan and Honda fall through, failing to create the world's 3rd largest car maker.
And a look at the streaming space as Disney tops estimates with gains from Moana 2. Shares of AMD plunging today after reporting earnings results that disappointed investors. Data center revenue coming in weaker than expected, but not all bad news as NVIDIA gaining off the back of increased AI spend announced by Alphabet. Joining us now on what's next for the AI trade, we've got Ruben Royce, Stifel's Applied Technology Analyst. Ruben, great to have you on. Help me square this here. We've got slowing revenue, data center revenue growth from AMD, and then we've got NVIDIA recovering today after weeks of pressure. What's going on here when it comes to the AI trade?
Well, thanks for having me and good morning. I think the AI trade is going to be, from here, maybe a little bit volatile, maybe a little bit lumpy. What we're seeing with AMD, I think, is company specific, and I think it's near term. And we can talk about the reasons for our view on AMD in a second. But I think in aggregate, following last week's shock in the AI trade with all of the DeepSeek news, I think one of the themes that's coming out of earnings season so far is that hyperscaler capex here in the United States is going up. Meta talked about $60 to $65 billion. Microsoft has been talking about $80 billion. And last night, as you mentioned, Google now talking about $75 billion in capex. I think consensus estimates were looking for more in the low $60 billion range. So hyperscaler spending on AI infrastructure is continuing to move up and to the right, and we think there will be a number of beneficiaries as that long-tailed investment cycle continues, and certainly AMD is one of those beneficiaries in our view. NVIDIA, which we like a lot as well, it remains sort of our top way to play AI infrastructure compute. Is very well positioned this year as they are on the verge of ramping their Blackwell platform. So a lot of moving parts, but we could dig into it further.
I guess, Ruben, then just giving your stance on what you said just a moment ago on AMD, then what is it that's handicapping that upside, at least in the short term?
Yeah, so a few things. As you mentioned, data center revenues came in a little bit light relative to consensus expectations for Q4. That was a little bit surprising. The company did beat by a very modest amount, and that beat, wasn't, it was driven by client. And, that's not what investors want to see. Want to see continued momentum with AI, again, given all of the, data points around infrastructure spending moving up and to the right. So that's number one. Number two, and probably more importantly, is that the company said that their data center segment revenue would look very similar in the first half of this year to the back half of 2024. And that implies sort of a flat MI300 or AI GPU compute revenue run rate, if you will, for the first half of 2025. Again, where's the acceleration if all of the hyperscale CapEx is ramping up to the right? And so, for AMD, like I said, I think it's company specific for now. AMD has a platform that went from essentially zero revenues in 2023 to a little over $5 billion in 2024. I think that's a success story in and of itself. But they do have follow-on technology coming. They've got something called MI325, 325X starting to launch now. And then probably more importantly, on the call last night, management talked about pulling in their next generation infrastructure technology system based on MI350X to the middle of this year. Previously, the company had said back half of or second half of 2025. And so, with those transitions coming, there's probably a little bit of pause with some existing customers, some new customers that are waiting for the new technology. And the company has said that they believe that the second half ramp is going to be quite strong. In fact, AMD management continues to think that they'll have tens of billions of dollars of AI-related GPU revenue over the next several years. So, we've seen a lot of engagements with the leading hyperscalers. We don't think this is a competitive issue. We think it's a timing issue. And we do think that, given where the stock's trading, especially with a little bit of a sell-off today, as you mentioned, downside risk from here seems limited to us. Our numbers came down a bit, but the stock looks pretty cheap.
Since you mentioned the other hyperscalers, I'm curious about the impact of DeepSeek. If we did not have DeepSeek announcing that they were able to train AI for far less money, do you think that the street would be as disappointed in the increased CapEx on AI from the likes of those hyperscalers?
I think it's going to add some volatility because I think there's a lot of confusion in what DeepSeek actually did. Whether or not they trained full-fledged model that looks similar to some of the large LLMs here in the United States. For the amount of money that they've said, is up for debate. We think that there was a lot of investment into the model and other, things that the company did over in China to get to where they are today. But having said that, the big takeaway for us is that AI is getting more efficient. Large language models are going to get more efficient. But, as that happens, we think that the demand for AI is going to move up and move higher. And so what that means is there will be more compute demand. We haven't even started, in our view, to see real inference workload, rollouts in enterprise, broader enterprise, and, government use cases. And, that's a long-tailed investment cycle that we think is going to drive a lot of compute demand. So I think we're going to have a little bit of volatility around the debate as what the DeepSeek really means, over the next several months. But I think, again, as you look at the CapEx numbers that are coming out, we're going to have NVIDIA report at the end of the month, and we'll have a lot of other ecosystem companies reporting like Broadcom, Marvell, and others. I think this will all work out as we flow through 2025. We're still big bulls for the AI trade.
Ruben, putting NVIDIA aside for a second, putting AMD aside for a second, just given what you said about DeepSeek and maybe the fact that it could be a catalyst here and likely will be a catalyst, more broadly speaking, for that AI trade, what are some of those underrated names within your coverage that you see ultimately getting a huge boost from this in the long run?
I think investors should be looking at networking stocks, whether or not, we're moving, further out to the edge, and we'll have, the ability to do more AI related workloads on our edge devices, smartphones or PCs, notebook computers, et cetera. The network, the underlying plumbing for moving data is going to get more challenging to put into place. The interface speeds are moving higher, and the challenges of moving data around, can continue to get, more complex. In the meantime, there's a smaller handful of companies that are participating these days. There's been a lot of consolidation in the networking space. So on our list, we really like companies like Coherent and Lumentum, which are reporting this week. Ciena, which has traditionally been selling optical networking gear into telecom service providers, is now starting to see a lot more demand from hyperscalers as AI-related data bleeds out of the data centers and out into the enterprises and consumers that are consuming AI. And then we picked up coverage of a company which is an EMS company which builds switches and servers for hyperscalers. We just picked them up last week, earlier this week, called Celestica, ticker CLS. And that's another one that we believe is going to be a very big beneficiary as we move into either custom compute, so the custom chips that the hyperscalers are designing and developing, and then companies like Celestica will put those chips into systems or rack-based systems, or they're also doing switch devices, which are part of this networking theme that I just discussed. And so, networking, I think, is something, an area that absolutely will benefit as AI workloads get more efficient to run.
All right, Ruben Roy, always great to get your insight. Thanks so much for taking the time.
Thanks for having me.
U.S. and Chinese stocks both lower this morning, although I'm not looking at too material of losses here. As the brewing trade tensions, you also got earnings that are ultimately the huge driver here in today's trading action. But joining us now on how this ultimately could impact your portfolio, we want to bring in Jay Pulaski. He's the founder of TPW Advisory. And Jay, we mentioned the trade war there, or the trade tit for tat, if you want to call it that, in the
म्यूचुअल फंड है इस मैच की तरह कभी रन रेट ऊपर कभी थोड़ा सा नीचे म्यूचुअल फंड्स की पिच पर जितना टाइम टिका रहेगा फायदा होने के चांसेस उतने बढ़ेंगे
दस्तावेजों को ध्यान से पढ़ें.
Since you mentioned the other hyperscalers, I'm curious about the impact of DeepSeek. If we did not have DeepSeek announcing that they were able to train AI for far less money, do you think that the street would be as disappointed in the increased capex on AI from the likes of those hyperscalers?
I think it's going to add some volatility because I think there's a lot of confusion in what DeepSeek actually did. Whether or not they trained full-fledged model that looks similar to some of the large LLMs here in the United States. For the amount of money that they've said is up for debate. We think that there was a lot of investment into the model and other things that the company did over in China to get to where they are today. But having said that, the big takeaway for us is that AI is getting more efficient. Large language models are going to get more efficient. But as that happens, we think that the demand for AI is going to move up and move higher. And so what that means is there will be more compute demand. We haven't even started, in our view, to see real inference workload, rollouts in enterprise, broader enterprise, and government use cases. And that's a long-tailed investment cycle that we think is going to drive a lot of compute demand. So I think we're going to have a little bit of volatility around the debate as what the DeepSeek really means, over the next several months. But I think, again, as you look at the CapEx numbers that are coming out, we're going to have NVIDIA report at the end of the month, and we'll have a lot of other ecosystem companies reporting like Broadcom, Marvell, and others. I think this will all work out as we flow through 2025. We're still big bulls for the AI trade.
Ruben, putting NVIDIA aside for a second, putting AMD aside for a second, just given what you said about DeepSeek and maybe the fact that it could be a catalyst here and likely will be a catalyst, more broadly speaking, for that AI trade, what are some of those underrated names within your coverage that you see ultimately getting a huge boost from this in the long run?
I think investors should be looking at networking stocks, whether or not, we're moving, further out to the edge, and we'll have, the ability to do more AI related workloads on our edge devices, smartphones or PCs, notebook computers, et cetera. The network, the underlying plumbing for moving data is going to get more challenging to put into place. The interface speeds are moving higher, and the challenges of moving data around, can continue to get, more complex. In the meantime, there's a smaller handful of companies that are participating these days. There's been a lot of consolidation in the networking space. So on our list, we really like companies like Coherent and Lumentum, which are reporting this week. Ciena, which has traditionally been selling optical networking gear into telecom service providers, is now starting to see a lot more demand from hyperscalers as AI-related data bleeds out of the data centers and out into the enterprises and consumers that are consuming AI. And then we picked up coverage of a company which is an EMS company which builds switches and servers for hyperscalers. We just picked them up last week, earlier this week, called Celestica, ticker CLS. And that's another one that we believe is going to be a very big beneficiary as we move into either custom compute, so the custom chips that the hyperscalers are designing and developing